Welcome, everyone. This is day 2 of Benzinga's Global Small Cap Conference. My name is Brent Slava. I'm head of the Benzinga News Desk. I am pumped today. I'm coming to you live from Detroit, Benzinga HQ in Detroit, the Motor City. Haven't been to the office in a little while. I'm super excited to be here. Super excited to get you guys some awesome content today. Yesterday was a blast. Really good content yesterday. A lot of really good sources we had yesterday. Spencer, he kept saying that his track one was the best yesterday. We're going to give him a run for the money. Yesterday, we talked about transformative healthcare and also the cannabis and psychedelic space. The themes for the tracks today, this is track 2 again. The theme today is the new economy. And we also have another track. Track 1 is innovative technologies, innovative sources coming at you. We are going to have a blast today. And let me share my screen here really quick. I'll get you over to have a look at our schedule. Here we go real quick. Track 1 on your left side here. Some of you already might have heard the keynote from Jake Bruckman. Today, we are going to be talking about crypto. On track 2, we're going to be talking about crypto and blockchain, some gaming, some mining. We're going to have an educational segment here on crypto. We are going to be having a panel on crypto a little bit later. What else we got here? Just scrolling through this stuff really quickly. Safehold a little bit later. Some more crypto and blockchain, Diginex, Amosite. Just a quick little preview here for everyone. And we do have a special feature later today. We are going to be over on track 1. We're going to be having a afternoon keynote with Kevin O'Leary, right? That's exciting. Kevin O'Leary, none other than Mr. Wonderful. And also, ooh, thank you, Rohan. Rohan saying, Mike, a little bit closer. There we go. How about that? A little bit closer, Rohan. Woo, how we sounding? How we sounding, people? A little bit of feedback in the chat there. So we're going to be checking in on Neil Hamilton running track 1. We're going to be checking in on Neil a little bit later today, see how that track's going. I'll be giving you guys every once in a while a little preview of what's going on over there. If you want to tune into this track, of course, I want you hanging out on this track. But if you are interested in some of the presentations going on track 1, want to get you some insight there. We do also have a little contest going today. For everyone that tuned in yesterday, you might have seen and heard about this contest, participated even. We are doing a little bit of trivia here, and the winners, potential winners, are going to be getting a couple really awesome values. We have a Benzinga Pro lifetime subscription. That's like a $10,000+ value. We also are going to be getting a couple winners could be getting a lifetime subscription to 2 of our newsletters, the Breakouts newsletter, also the Options newsletter. I will show you that real quick. Let me see here. Let me add to stream. So here is the QR code for the Slido contest. And I want everyone to take a sec real quick, give this QR code a little scan. And when we are presenting some of these trivia questions, what you're going to do is you're going to use this code and you're going to answer the question, and you could win a bunch of really good stuff from Benzinga. All right. So chat, I want to see some engagement out there. I want you all to get your questions in early, get your questions in often. Let us know stuff you're liking about the stream. Let us know stuff that you want. All that kind of good stuff. Also, if you are connecting with us on our virtual platform, don't forget to visit the virtual booths. You can see some of our sponsors. You can also connect with some of these sponsors and potentially get a one-on-one conversation. I also really quickly want to share my screen one more time here. We are going to be getting to a very exciting presentation here in just a sec. This is Benzinga Pro. This is one of the main things that I'm helping work at Benzinga on each day. So I'm excited to get to show you guys really quick. I made a watch list. This is something that Patrick Lane, one of the MCs for yesterday, did. It was really smart. Made a watch list of a lot of the companies that are going to be presenting, and we can check in on these stocks every once in a while throughout the day. Why not? What else? I think that's about wrapping it up for my intro here, guys. We have a packed house for our first presentation. Let's see if we're ready to bring on that presentation. I think we are. Hey, Emiliano, this is Emiliano Grodzki. He is CEO from Bitfarms. Like I said, Emiliano, packed house here for your presentation in the chat. They were super excited about learning from you guys. And you guys just received approval for a listing on the NASDAQ. Is that correct?
Yes, sir. Hi, Brent. How are you?
I'm doing well. I'm doing well. The ticker you have proposed is the same as your Toronto listing, right? BITF.
Yes, sir.
Exciting news.
Well, we are super happy. You know, this is the conclusion of almost 5 years of work, teamwork, and we are very happy to continue, you know, building the infrastructure for the economy of the present and the future.
Absolutely, absolutely. Well, I wish you guys the best of luck with the NASDAQ listing. I guess you'll hear when you guys are going to be actually going live soon. You don't know that information yet, correct?
Well, I believe that we already received the approval from NASDAQ listing in the second tier global capital markets, and we are waiting from them to understand when will be the next week, the first day of trading.
I gotcha. Awesome. Well, why don't you take it away here, Emiliano, and tell us a little bit about Bitfarms. Chat is super excited to hear from you.
Well, I will make a little introduction. I'm Argentinian. I grew up in Argentina, and as you know, an entrepreneur here. I did my master's degree in the valuation and inflation. Right, this is the only way to survive to do business here. And in 2016, I saw BTC and Ethereum for the first time, and quickly I understood how BTC mining and economics work. Since that day, my life completely changed. From that moment, I started building Bitfarms with my friend Nicolas Bontas, who is my co-founder and the chairman of the company. And we started mining Ethereum in a garage with $50,000. We did an experiment for a month, and then we quickly understood that we had to go to North America to find more equipment and cheap energy and the proper conditions. We found in a crypto forum Matt Bashon, who lived outside Montreal and had been mining BTC and Ethereum since the beginning of 2015. We contacted him, and he and his team helped us to finally, then partnership. And together we professionalized the operations, the quality of the facilities, and we understood that we should vertically integrate all the operation to be very efficient. We was public in Tel Aviv in the end of 2017, and then we decided to delist the company and be more efficient, and listed the company in the Toronto Stock Exchange in the venture capital. We traded there for 2.5 years, and we decided in the beginning of this year for work to put our company in the big leagues in NASDAQ. Because we believe that the dimension of our company and the way that we building the industry and the standard of the crypto mining industry need to be there for have the proper liquidity and continuous raising capital for develop our pipeline. Well, I will present the corporate deck of the company for try to be more specific in the presentation. Bitfarms has been building and operating industrial Bitcoin mining facilities since 2017, and Bitfarms provide to the investor the direct exposure to Bitcoin and Bitcoin mining without the complexity of securing power, constructing advanced data center facilities, and operating Bitcoin mining hardware at the industrial scale. Next slide, please. Bitfarms owns and operates one of the largest mining operations in North America with 69 megawatt of build-out capacity, and expect to have 168 megawatt build-out by the end of the 2021 and 210 megawatt by the end of 2022. It's a huge pipeline. The way Bitfarms has already deployed more than 6,500 miners through the end of April 2021, and continues to aggressively increase our hash rate capacity. Bitfarms miners are passively cooled by the Canadian environment and are highly energy efficient. 96% of the energy that we consume goes directly to generating revenue, versus approximately 83% average for industrial data centers, the traditional data centers. We have 100% owner, fully serviced electrical engineering subsidiary, providing site planning, engineering, and maintenance to reduce costs. Advances 24/7, 365 command center and operation in-house for repair the machines, and keep the hash rate high. We are the first cryptocurrency company to successfully go through the front door of the OSC with the long-form prospectus audited with one of the big four accounting firms. We use PwC, and we are very excited about that. Strong management team with experience in data centers, technology, financing. Enabled the board through key addition of new direction in 2020. This is the growth that we have in our pipeline. We come from 780 petahash in the half of 2020. We are now at 1.45 exahash. It's approximately between 85 and 90%, 0.85 and 0.90% of the Bitcoin network right now. And we will reach at the end of this year 3 exahash, and in the middle of the next year 5.5, and our goal is 8 exahash, 8,000 petahash at the end of 2022. We already fixed the inventory of the miners. This is our leadership team. I'm the CEO of the company, Nicolas Bontan, the co-founder, the executive chairman. Mauro Ferrara is the CFO, Geoff Murphy, the president. Ben, the director of mining operation. Benoit, the director of operation. Nathaniel Port, the director of finance, and Darcy Donnell, the vice president of corporate development. This is our board of directors. Pierre Saturecchia, Brian Howlett, and Andres Filkenstein, they are our independent board member. And we operate 5 data centers, advanced Bitcoin mining facilities in Quebec, Canada, a 6th site in Quebec, and 7th site in Argentina, who are under development. Each mining facility in Quebec is powered by inexpensive green hydropower. It's a huge subject these days, especially with our friend Elon Musk. Say that we are 100% green. That is very good. It's part of our vision of the business. The miners are efficiently maintained by our proprietary management system and our highly trained technicians. I don't know if Ben is here with us for present this slide, or I can continue. We come from Q4 19 with 965 petahash, and we grew 24% to Q4 2020. And then we grew the next quarter, Q4 to Q1 2021, another 24%. We are planning to grow to 110% to the end of this year, and another from this point, 8 exahash, 167% to the end of 2022. Hi, Ben, how are you?
Hi, nice to be here, everybody. My name's Ben Gagnon. I'm the Director of Mining Operations. And yeah, I think this is a great place for me to jump in here. and provide some more color to what we're doing and how we're going to grow over time.
Perfect. Go ahead.
So, great. So we've got our growth strategy laid out here. This not only lays out how we're going to grow over time, but where we're going to see that hash rate growth across all of our different facilities, both our facilities that are currently in operation and the new facilities that we're developing here in Quebec and Argentina. So we've got dramatic growth plans planned, and significant contributions and deposits made on all the equipment. In terms of the facilities and the infrastructure that we're building to facilitate all this equipment, we do have the 69 megawatts worth of green hydroelectricity online and fully operational today. We're building out and significant more hydroelectric infrastructure in Quebec right now, and we're going to have 168 megawatts of hydroelectric energy in Quebec fully installed and operational by the end of the year, which will grow with the Argentinian expansion the following year to about 358 megawatts. So this is more than enough to operate all of our existing equipment and all of the equipment that's coming down the pipeline, and provide us with some further growth opportunities should the market, present some interesting opportunities for us. We've not only been growing in hash rate, but we've also been growing in our efficiency over time. What we can see here is that we've had a dramatic increase in hash rate, but at the same time, we've also more than improved our efficiency by double. So for every hash rate, for every hash that we make, it's now taken us half the power and therefore half the cost than it did when we started 4 years ago in 2017. So it's a continuous improvement that we have in our equipment in our facilities, designed to both continuously drive further revenue creation as well as reduce our costs and increase our gross mining margins. In terms of Bitcoin production, which is clearly the most valuable metric for any Bitcoin miners, how many Bitcoins we produce and what cost. We mined more Bitcoin last year than any of our publicly traded peers. We did so completely in North America with hydroelectric power. Last year we mined 3,014 Bitcoin. That's a reasonable amount more than our next biggest competitor and significantly greater than our US competitors. In terms of the valuation amongst our publicly traded peers, we believe that we're one of the most undervalued publicly traded Bitcoin mining companies out there because the market cap does not match our production rates and our production costs. So if you break this down on a basis of how much Bitcoin we're producing relative to the valuation that the market's given that hash rate, what you can see here is that we're on the low end of the spectrum, whereas the miners on the right are on the very, very high end of the spectrum, indicating that they're relatively, overvalued compared to the other side of the spectrum. I believe that this gives us significant amounts of upside potential as we move towards the US and get exposure to those greater capital markets and those greater valuations in the industry. In terms of looking at this in terms of an enterprise value, we're going to get a very, very similar metric. This is a more clear metric that tries to take away some of the ambiguity around the differences between costs and how much Bitcoin people have on their balance sheet, and really get down to the core function of, what's the actual value of the company with all, that simplified relative to their hash rate. And what we can see here is even by this metric, we're also here right at the very bottom of the spectrum, meaning we've got tremendous amounts of upside potential as we move towards these more lucrative markets in the US. Since the beginning of this year, we're also really proud to announce that we've been storing every single Bitcoin that we've been mining into custody and onto our balance sheet for long-term holding. So far, we've added, as you can see here, according to our Q1, we've added several hundred Bitcoin. It's the most amount of Bitcoin of any of our publicly traded peers year to date that have mined and added to their balance sheet. And what this has done is this has allowed us to not only not only produce all this, great value for our shareholders at the time that we mine it, but also preserve the upside potential of Bitcoin as we grow. And so when we started this program, Bitcoin was only around $30,000 US. Currently, Bitcoin is trading over 50 with a high over 60,000, which meant that we've, with that all-time high of around 60,000, we ultimately doubled those profits relative to 30. So it's a very important program. It's one that we're going to continue doing, and we're going to have increasing amounts of Bitcoin securitized through our stairs. And it's an amount that's going to continue growing over time. So we're able to constantly increase our amount of Bitcoin on our balance sheet, and we're doing so always at a cost that's significantly below market. So we can preserve that profit margin for our shareholders and give them tremendous upside.
Well, Ben, later in the presentation, we will explain how works, the proxy, of our company to invest, in BTC, and the difference between, the three different scenarios, to hold BTC for explain properly to the investor, right?
Guys,
absolutely.
We got about 5 minutes left here. I want to give you guys some time to answer some questions. We got a ton of questions that were popping in the chat. So if you guys have a couple more good points from the slides, give those a shout, and we want to have you for a couple questions at least, if you don't mind.
Maybe then we can show the facilities and then explain how works our metrics, right? This is Cowansville, our first data center with 4 megawatt. Magog with 10 megawatt, Farnham 10 megawatt, 15 megawatt San Jacinto, 30 megawatt Sherbrooke 1, Sherbrooke 2,
Sorry, my PowerPoint just crashed.
Don't worry.
There we go.
Well, we have on development 210 megawatt in Argentina. Next.
Sorry, it's acting funky here.
Oh, okay. This is Volta, our own owned full services electrical engineering and contracting with 50 people and 37 electricians based in Quebec. Our repair lab.
Then maybe we just skip ahead to that final slide here.
Yeah. Well, then please go ahead and explain, how works our company in terms of the benefit on whole BTC.
Yeah, I think the easy comparison for us is like a junior mining company. We provide exposure to the underlying commodity, but we do so, through a proxy of production and lower cost. And so what we'll see here is that we generally track the Bitcoin price more or less daily over time. But when Bitcoin price starts surging, our profitability actually goes up dramatically, because what happens with Bitcoin mining is our costs are fixed, but the upside is unlimited. And so we will stay relatively flat with the market, trading in parity. But when the market really starts to show very high exponential growth, Bitcoin miners start showing even faster growth, because it's all upside and it's all potential. And so that's what we see here is we stayed relatively flat through most of 2020. And as soon as we get into as soon as we get into December and January, we really start to see all the public companies start to outperforming Bitcoin. And that's something that we should expect to continue over time. It's a fixed amount of Bitcoin at a lower cost of acquisition than people can buy it for, and it's constantly growing every single day.
Awesome. I want to ask you guys, we got time for about one question here, and there was a couple questions in the chat, but I think you guys kind of answered those in your presentation. So I wanted to ask you guys one here. Some of the chat was showing interest in one of the slides that you had up when we're talking about your, 100% renewable engineering part. I just wanted to ask, how does that renewable aspect, engineering aspect, influence some of your other facilities? Like, how are you guys using that for operations?
I think the Quebec hydropower situation is really an inexpensive source of power for us that we wanted to take advantage of. So for us, it's more about the economics, I think, than the ESG angle. The ESG angle is obviously an important one and a good one to have, but for us, we're profit maximalists, and we develop these opportunities because we believe, renewable sources are very competitive, especially hydro.
Right. Gotcha. Awesome. Okay. I wish we could, keep chatting with you guys. This is a super interesting topic. We're going to have to get you back for some more Benzinga content at some point. Where can some of the viewers get some more information? I guess we're popping up there, bitfarms.io. A couple of chatters were asking if they could get some of those slides that you guys were sharing. Can you find that info on your website there?
Well, yes, it's in the website.
Okay, awesome. So we have Emiliano Grodzki and Ben-Yohanan from Bitfarms. Thanks a lot for joining, guys. Have a good rest of your day. Thank you.
Thank you very much.
Thank you for having us.
Bye-bye.
Let us know how you guys like that in the chat. And we're just going to keep the presentations rolling today. We're just going to hit you with one another right after. Next we have coming up Elys Games Technology, Mike Ciaverella. He's the chairman of the board of Elys Game. How you doing today, Mike?
I'm doing very well, thanks.
Awesome. I will let you take it away. I don't want to take up any more of your valuable time here.
Sure. Thank you very much. Well, thanks everyone for joining Elys Game Technology. We trade under the symbol ELYS on the NASDAQ and NEO stock exchanges. We're a sports betting technology company providing sports betting and iGaming solutions to customers. We have a very solid management team. I'm Mike Ciaverella, the executive chairman, and many of our teams that operate the businesses have been in this industry for the better part of 20 years. Of course, we're going to present some forward-looking statements, and I recommend that we don't place too much reliance on these statements and ask that you attend to our SEC filings. So again, just to keep real quick here, we've got a very solid background, as I described. We've been in this industry for the better part of 2 decades. In the European, primarily the Italian market, we're a B2C operator, which means that we provide both land-based and online solutions where we provide our products via retail outlets throughout the country, be it convenience stores, coffee shops, ice cream shops, things of that nature. We also offer a mobile and PC-based solution as well, and we're licensed to do that. So we are actually a bookmaker and an iGaming provider through those channels. In addition, we own our own technology stack, which is essentially the big part of our story that we're going to talk about today. And we developed that technology stack only a few years ago. We launched it in August of 2017. And we believe that it's one of the newest betting platforms in the world, and it's going to be one of the key features of our company as we grow forward. So the numbers, the results of our operations speak for themselves. Are really quite solid. We had about 575 million in wagers in 2020, about 44% year-over-year growth, and our revenue is sitting around $37 million at the end of 2020. We're seeing that trend continue, and we've just recently reported Q1 results. We currently trade on the U.S. market at a market valuation about 82 million. So it's just, we believe it's undervalued compared to our peers, and that roughly is just under 2 times, roughly around 2 times revenue. So one of the key, as I mentioned, the key part of our story is our betting technology, and I'll describe as to why that is. But ultimately, it's one of the newest betting technologies in the world. It's built on a modular microservices design, so it allows us to have a very highly scalable product, and we're able to service not only large casinos and iGaming, or rather mobile and online operators, but also be able to narrow right down to the retail operator at the such as a coffee shop or bar or barbershop for that matter. So it's really quite scalable, and it's quite flexible to be able to provide this product to a very wide audience. The key part here is many people have been asking us, what is our game plan as it relates to the United States market? So what we've done in the last couple of years since the repeal of the sports betting prohibition is we've essentially sat on the sideline, designing and developing a go-to-market strategy that I think is really quite unique in the U.S. What's important is prior to 2018, when the law was repealed, it was very difficult to actually create this environment because you didn't know what the market would look like. So we spent the better part of the past couple of years designing and developing a business model for the US. And that business model is like a B2B solution with our back-end technology, but we won't be the front-end provider. What we're going to be is the back-end and all of the services on an end-to-end solution so that we could service either online operators that want to offer PC and mobile betting in various states, or we can narrow it down right to a retail shop. And this is more or less a replication of what we do on a B2C basis in Italy. So we've set up this unique strategy, which is more like a B2B2C model. The U.S. market really is an exciting opportunity for any operator in our industry. It's going to be considered probably the largest regulated market in the world. We're going through phase number 1, essentially, which is the sports betting and the repeal. And the first phase is essentially the embracing of sports betting as a legal product, something that people are going to do and do as we speak. And the future will be the adoption where it's more mainstream and people are able to get a sports bet ticket like they're able to walk into a convenience store like a 7-Eleven or a restaurant and bar, like they're able to buy a lottery ticket at a kiosk. They're going to be in the next few years able to do that with sports betting as well. The second phase of adoption of this industry in the United States is going to be the iGaming adoption. So essentially, we think that there's extensive growth going on in the US, and it's going to be about a 10 to 15 year cyclical trend. So we expect over the next 10 to 15 years where the US will be about a $30 to $35 billion market. And just to put that in comparison, the Italian market is one of the largest markets in Europe. And we are a significant player in the Italian market, but essentially the US market is at least 6 times larger than that market. In Italy, there's about 58 to 60 operators. In the US, there's still less than roughly around 10 competent operators that are able to come into that market. So I believe that we're extremely well positioned as this market continues to unfold. One of the key value propositions here is in terms of our go-to-market strategy, is that we're pioneering a new segment of sports betting distribution in the US. We're going to be essentially we expect to be the first operator where we not only be able to service large casinos or like independent casinos, tribal casinos, and so on. And as I mentioned earlier, even online operators, but we're also going to be able to offer our product, our solution, to small entrepreneurial businesses like cafes and coffee shops and bars and restaurants, etc. And that's really quite unique. So we're positioning the company to be ahead of the curve in terms of what some of our competing peers are currently offering in the United States. So again, as I mentioned, this is the next phase of U.S. sports betting, and now Maryland and Massachusetts are following D.C. in terms of adopting this B2B model that we're doing in DC. So just to put that in perspective, again, this is an opportunity where we're essentially inventing a process where we create a cookie cutter to be able to offer the same product and the same business model to small operators across the nation as those states start to evolve. So in terms of where we stand as a company, we're currently product ready. We spent the last couple of years, as I mentioned, studying the market, understanding what the differences between the European movement of sports bet lines and things of that nature, understanding what product is required to be able to offer to the customer in the United States compared to the European customer. So we're product ready. We have our betting platform designed in its own environment for the US. So there won't be sort of cross-border interference of European lines and the way they offer sports in Europe with the US. We've got that sort of buffered. And we're also customer ready and with our first the US customer signed, and we're in the process of licensing in our first state. Just a quick shot on our current cash position and balance sheet and strength of the company. As you can see, we have a very good cash balance. We had a strong balance in December 31st, 2020. We had very little debt at that time. We're now have increased our cash position at March 31st and have no debt whatsoever. And we have a very solid backing from management. We own about 42% of the company, so we're very well vested with our investors. Again, a quick snapshot of our business operations and growth over the years. As I described, we've had exceptional growth in terms of our sales, which is the gross wagers, total turnover. And this top line here, starting from 2016 and on, essentially you can see the growth is quite extensive. And we had a big uptake there, as you can see, in 2017 and 2018. And those are the years that we launched our betting platform. And ultimately, just to describe that is a blend, again, of sports betting and iGaming, because we offer the full suite of products in the Italian market. As we go forward and open in the United States, it's going to be primarily sports betting as we go forward. Now, the reason why I talk about that is because the total revenue line here, you can see that is essentially our gross margin on product. And that, again, is a blended rate between iCasino and poker and lottery tickets and things of that, and products of that nature, which we call everything other than sports. And generally speaking, those products are fixed commission products. So there's really no risk on that product. The more we sell, the more commission we earn, but it's generally 8% or less. Where we get a much larger margin is on sports betting. But the issue there is that the sports betting is a risk product. Basically, we're competing with the customers. So the customers come in to take your money. So the concept here is that we have to manage our risk to be able to understand what we're offering to the customer in terms of odds, and we want to make sure that we're competing well. So we have to know the market. That product we generate about a 12 to 16% annual average hold. So we have a much larger hold on that product, but again, from a month-to-month, quarter-to-quarter basis, it fluctuates because that's the nature of sports betting. You just simply don't know what the result is going to be. So we're still getting a tremendously solid margin as a blended margin for our industry. And just a quick point on our bottom line, you can see that what we've done in 2017, we had no expense overhang. In other words, 2017 is a clean year, for example, to describe what our operations are in the European sector. So we're profitable in that sector. And if you look at our quarter and annual reports, you'll see that we do pay an income tax because we're generating profit. And from 2018 here, the sort of middle column, that was the year that they repealed PASPA. So we started to reinvest our profits back into the company. And hence we've had some expenses over the last couple of years. But again, what we're trying to do is manage it in a very prudent manner. So we're very tactical in terms of how we spend our money. And this was the cost of both the technology development for the United States and preparing the product for the US market post PASPA. And now we're in the process of preparing for our license. So that process is now underway. So we expect a lot of these costs to be reduced significantly in the next few years, and we'll start generating a revenue from the U.S. market as well. So a couple of goals and milestones here quickly before we kind of get to Q&A. Again, we plan to be the first regulated Class B sports betting operator in the District of Columbia. We're keeping our fingers crossed, and we're being very respectful and working very hard with the regulator there to meet that goal. We have continuous growth in the Italian market. It's a very robust market, and in Italy, in the next couple of years, we're going to see a renewal of licenses where very, very few companies will survive that renewal, and we expect to be one of those. And we expect to have some significant growth now that we're coming out of the COVID situation where all of our locations were closed in 2020, and we're going to slowly start seeing them open. More importantly, the United States market also is now starting to come out of COVID-related restrictions, and we should start seeing that market also accelerate. A couple of highlights here that in terms of goals and where we want to get to. So clearly we have a run rate right now of 37 million. We're hoping that we hit, or at least our goal for this year is about a $50 million revenue mark. And within the next 3 to 5 years, hit about 100 million in terms of once we get the US market open and we start to see some expansion both in Italy and in Europe. So again, we're in very good condition in terms of the our cash flows and profitability. We have a very strong, very solid core foundational business in the Italian market that's allowing us to sustain our business. And we have a very good cash balance, and we're able to finance our US go forward plan over the next few years. So maybe with that, I'll just turn it over for some question and answer.
Awesome, Mike. That was great. I was going to ask about some goals that investors could look forward to, but you did it with the last 2 slides there, so I appreciate that. I think that, you know, the everything is becoming a game. Gamification is all over right now. Yeah. You mentioned something a few minutes ago. You talked about, you know, somebody going into a cafe and being able to do some iGaming or some betting. Like what kind of like games will they be playing, or what kind of betting would they be doing in something like a cafe?
Sure. So remember, a cafe would be a land-based location. So you wouldn't be able to play like an online event, for example, poker or iCasino or things of that nature. You'd have to go to a physical casino or to play the game, or play on your mobile phone or PC. What we're seeing introduced here in the US particularly is in a land-based, in a cafe, is sports betting. And that really is where the difference is, that where right now you're not able to. You might be able to play a Keno game at a bar or counter or whatever, but you certainly can go into a convenience store or any place in downtown USA and be able to go to a kiosk and buy a lottery ticket for the Powerball event that weekend. But what you don't have right now, and what's been prohibited up until 2018, is sports betting. So we're going to see in the next few years where you can go to one of these kiosks or convenience store, or even go to a cafe or restaurant, or even a barber shop, and while you're getting your haircut, you can argue with the barber about who's going to win the game, right? Right. And you're going to be able to, within the location, be able to place a bet or wager against the barber, you know? So, I mean, that is mainstream in Europe and even in Canada per se. And we also understand that sports betting really, in the United States, the folks are crazy about their team. So sports betting, even though it's been prohibited, has been ongoing, but now it's coming into the mainstream.
I got you. A couple more questions. Probably have time here. I'm going to put this one on the stream. Will the company be partnering with any betting site giants that you know of right now?
Well, we always are looking at what we call a carousel of opportunities, and because they keep going around and around and around. I'm sure. So, you know, what we want to do, and I think this goes back to one of my slides, is we're being very, very methodical, very surgical about our go-to-market strategy in the US. So the game plan is very simple. And I know sometimes it's a bit frustrating for investors and even some of our partners to go, oh, when are you going to hurry up, get it done. But the bottom line is this, is that we have to be very careful. Remember, sports betting is a very unique commercial product. There's no other product like it in the world. You don't actually have a product to sell until the game ends. Does that make sense?
Yeah,
right?
Yeah.
You don't know what you're selling. You know, whatever happens in the game, it's going to happen in the future. So because of that, what we need to do importantly is we need to launch our platform real money in the US. So we're waiting for our first license. We're being extremely prudent on that process. We now have developed the platform. We know exactly what we're going to offer, but we need to have it launched, let it run for 30 or 40 days so that the algorithms could get, you know, sharpened up and you can make sure that there's no bugs. Then you have a great product that you can then confidently talk to the giants, talk to the large casinos that are going to be offering sports betting as an ancillary product, talk to the franchise chains, restaurants, the 7-Elevens of the world, if I may. You know, those are the kind of customers that we're going to be able to now demonstrate our product live and in real money in the US. And then, of course, once we have that first license, all the other states become provisional per se. So essentially, the first state is going to be key. It's a major catalyst for us. And it's going to be how we're going to be approaching all of even the independent and tribal casinos. There's a massive market in the United States that we're going to be approaching.
Great. So good segue there. And just like maybe one more minute left here, but a really good question here from Mike. Oh, he's saying, how big is the potential for the niche Elys is trying to carve out in the US? And you kind of just were touching on that. So have at it.
Well, maybe I could just even just articulate it even better.
Sure.
We do know that in some countries, the casino landscape is not as large, if you will, as the U.S. market. They might have sort of key areas that are casino driven, for example, Macau or even in Monte Carlo, whatever. But in the U.S., we have casinos blanketed across the nation. There's about 4,000, give or take, casinos across the nation, be it independent casinos, particularly like in California, and so on, but also tribal casinos. But just to put that in perspective, the restaurant bar market in the U.S. is about six to 700,000 potential locations across the United States. So we see a massive opportunity, providing the state-by-state regulations allow these small entrepreneurial shops, which in our opinion are the engine of the economy, particularly in coming out of COVID, where a lot of these small operators of restaurants, they need this sort of ancillary opportunity and revenue for their businesses. Put it in perspective, we know that essentially a restaurant could probably drive about 3 times its revenue by having sports betting in their venue, where people can go to the to the venue for beer and wings, if you will, and then play the sports. And that ultimately is the environment we're trying to create. So it's massive, and it's exponential in potential growth.
Love it, Mike. A lot of really good stuff. Elys Games, Mike Ciaverella, he's the chairman of Elys Games, and elysgame.com is the website there. We're going to let you go get on to your Friday. Thanks a lot for joining today, Mike. It was great.
Thank you very much. Thanks for having us. We'll see you soon.
Awesome. Awesome. I'm going to keep asking after each of these. How did you guys like that one? Let's hear it. Let's see it in the chat. And we do have our next presentation lined up here. Let's welcome on founder of US Gold. It's ticker USAU. This is Ed Karr. How you doing, Ed? And I see you got the old mute trick. It's the oldest trick in the book. There he is.
Look at that. I'm doing really well, Brent. You know, I'm a little older than you, so it takes me a while to get this technology going. I had to unmute.
You got it, Mike. I believe in you, man. How you doing today?
Yeah, I'm well. How are you? It's good
doing well. Take it away, sir.
Great. Thanks so much for having us. So, yeah, US Gold Corp. We're excited to be here at the Benzinga conference and presenting our gold exploration development company, publicly traded company on the NASDAQ. We've got great projects in Wyoming, Nevada, and Idaho, so in the United States. I'm going to be going through the presentation very quickly. We'll be making some forward-looking statements, so everyone just keep that in mind. Give you the highlights of the company. You know, we're an exploration development company. We're trying to push a project of ours in Wyoming into production right now. We know we've got a lot of gold and copper there in the ground. Looks economic. We're going to have a geological report coming out the end of June, so just a couple of weeks away. And we think that's going to be a big catalyst for us to potentially give us a re-rating to the upside. In addition, we have other exploration projects, and any of these could be potential company makers. We're listed on the NASDAQ. We've got good liquidity and cash in the bank, and it's a really good time to be looking at this sector overall. When you look at the company, so 4 projects in our company today. We founded this company back in February of 2014 with the asset on the left-hand side of the slide here called our CK Gold Project in the state of Wyoming. Great project. You know, we know we've got approximately 1 million ounces of gold, MII, and 280 million pounds of copper. So we're pushing this forward right now and gives our shareholders a lot of value. Look in that center column, you see in Nevada, we've got 2 big district scale exploration projects. We're trying to find a big deposit in Nevada, and that's very, very exciting. And then on the right-hand side of the screen, we have an exploration project in Idaho. So we're in 3 of the probably most mine-friendly Western states in the United States. No geopolitical risk in our company. When you look at the overview of us financially, you know, we're really proud of the fact that we're on NASDAQ. There's only a handful of gold exploration and development companies trade on the NASDAQ. And look at our share structure. We have what I believe is the tightest share structure in the business. You know, most of these exploration companies, if you look in Canada or Australia, they have 300-400 million shares outstanding. We have just over 7 million shares of common. That's it. And this is very plain vanilla cap table. There's no ratchets, no resets, no crazy derivatives or anything like that. There are a few warrants. If they're all exercised, it'll bring about another $15 million of cash into the company. Important to point out, of the 7 million shares, management and insiders were pretty big owners of this company. We own about 2 million shares with a couple of key select shareholders. So the real float on this company is only about 5 million shares. I think our stock price today is about $10.70, so about a $74 million market cap. You look, we have $14 million in cash. We have no debt in the company, so it's only about a $60 million enterprise value. Look on the right, you can see our stock price, like the whole sector, can be volatile. And I'm sure a lot of the Benzinga audience has been watching the cryptos. If you've been seeing commodities climb, copper's running, lumber's booming. We've seen iron ore spike up 10% over the last weekend. Look at lumber, all the commodities are really going. And that's due to, a lot of central banks and governments around the world printing money to combat the downturn due to COVID and the pandemic. Well, that seems to be changing now, and inflation's coming out. And I tell you what, I really believe the second half of this year, gold is going to go. So there's a good time to be looking at this sector, good time to be looking at companies like ours. See down the bottom right, we got 2 analysts that cover us. Got significantly higher than the market price targets. You can get their research reports out there online. We've got a great management team led by a gentleman here named George B. George is a mining industry rock star, real leader, 40-year career, 16 of those as a senior executive with Barrick Gold. And I like to say that George B is kind of the Tom Brady of mining. He's a winner. Tom goes from New England down to Tampa Bay and bang, he wins the Super Bowl. And when George B saw our project in Wyoming, he said, wow, guys, I can put the ball in the end zone. I can score. I can win the Super Bowl of mining with this project. So we're really, really excited about that. We're going to go through the projects very quickly. Start in Wyoming with our CK Gold project. So look at this state of Wyoming here, this map. You see where we're located. We're in the southeast corner, our Copper King project. If you wanted to get here, you'd fly into Denver, rent a car, and literally drive up to Cheyenne, hook a left, go out to our project, and within 2 hours, you could drive a 2-wheel drive rental car right on top of this project. It's not the jungles of Africa or the high mountains, the high Andes of South America. Very, very accessible. We're on all state of Wyoming ground. It's important. State of Wyoming is a great state to have a mining project in. It's a very natural resource friendly state. There's a lot of coal mines, a lot of uranium mines, a lot of oil and gas. So they really understand the extractive nature and industry. In addition, the state has a royalty on this project. So the monies that we will pay the state when we put this project into production, those go to the state of Wyoming educational budget. So once we put our project into production, start generating revenues, we'll be helping the state of Wyoming teachers and kids. Being on state of Wyoming ground is very important because we don't have to deal with the U.S. federal government authorities in Washington, D.C., the BLM, the EPA, even the U.S. Army Corps of Engineers. We only deal with the state regulators in Cheyenne for our permit approval process, and that'll give us a much quicker, much shorter, we believe, potential permitting timeline. So when we look at the project itself, we have a PEA, that's a preliminary economic assessment, pretty detailed geological report. It's on our website. We're upgrading it right now to another document called a PFS. But we know this is a real viable project. It's got about 1.1 million ounces of MII gold, 300 million pounds of MII copper. Look on this image. You can see the outline of the deposit. Imagine like a big American football, just sunk out in the Wyoming countryside with the stitching coming right up to the surface. This deposit does come right up to surface. That's very important because it makes it highly potentially economic in the future. When we look at the economics out of the PEA, when we did this back in 2017, they used $12.75 gold and $2.80 copper. I think people probably know today gold's about $18.40, copper is about $4.60, $4.67, somewhere in that range. So these are really conservative prices. But even at that level, look at this. The project throws off $300 million of net cash flow. It's got a IRR of 33% annualized. It's very attractive in this low interest rate environment. NPV on this thing's 178 million. Our market cap today is only 74 million. So this is going to produce a gold copper concentrate. We also have silver. It'll be flotation with a gravity circuit. Very easy to put this project into production. As we move towards our PFS right now, towards the end of June, we're really excited. A lot of improvements. We're going to increase our resource base overall. We think we'll be able to improve our gold and copper recoveries from the past. We're putting together a pretty simple plan under George B's leadership, and we want to get some credits for that silver. So this project being in the state of Wyoming, there's a lot of factors that bode very well for putting it into production. We're close to water, we're close to power, we're close to a workforce in Cheyenne. You know, George B has built projects in South America, high up in the Andes Mountains at altitude. He had to build hundreds of kilometers of roads, work camps to house the employees. Not like this at Copper King at all. This thing is really close, very accessible. In fact, we are only 2 miles north of a major interstate highway, I-80, and there's a rail line that comes right in there because there's an industrial gravel pit just to our south. We think we'll be able to use that rail line potentially in the future, the rail spur. We'll be able to ship diesel fuel in, be able to ship concentrate out, have a lot of cost savings. We're also exploring, since this will be an open pit, we're exploring using that future open pit, that future hole in the ground as a pit lake. Water is a big issue out west. We could make this a potential future reservoir. And so a lot of synergies on the project. You know, when you look at an asset that we have here with the CK Gold project in a rising gold price market, you know, today gold about $1,840 an ounce, but we updated our economics at $1,600 gold. We kept copper very conservative at $280. And look at this, the value of the project jumps all the way up to $321 million. So a lot of value for our shareholders. And that's where you get the leverage in these companies in a rising gold price. So we drilled out there last year, did a lot of drilling. It's looking really good. We've released a bunch of those results. And I tell you, the project's still open. It's open down to the southeast. We've got a lot of upside, blue sky upside to add potentially more ounces of gold, more pounds of copper. So real catalysts on this project coming at us. You know, we're looking at the big geological study the end of June. A lot of institutions right now are on the sidelines watching that. We think we're really going to re-rate. That'll give us a value creation bump. So watch the news going into June and July. Let's go quickly now just through our Nevada and Idaho exploration projects. Going to go real quick, show you where we're located. 2 projects in Nevada on 2 of the most premier gold trends out there. Keystone's on the Cortez trend. Maggie Creek is on the Carlin trend, next to some of the biggest mines in North America. Start with Keystone. Keystone's in Barrick Gold Country. We're just south of the Cortez Hills mine, Pipeline, Gold Rush, ET Blue. These are huge mines, huge discoveries, very economic. Our project looks really prospective. We've got a big property package here, federal government ground. Our claims are leased from the Bureau of Land Management, all in good standing. We've been hard at work at Keystone over the last couple of years, trying to drive forward towards a big discovery. If we hit a big discovery here with our tight shareholder structure, I think our stock price could go up potentially like one of Elon Musk's rocket ships. You know, it'll be exciting. So how do we get there? We did claim consolidation, we did mapping, we've done geophysical surveys, we've done a bunch of drilling, and it looks very prospective. The drilling shows us we've got the right host rocks. All of these big Carlin type deposits are hosted in very specific limestone carbonates. We got some of the best rocks our chief geologist, Ken Coleman, has seen in Nevada. We've got a great upper plate, lower plate, all the right indicators. You know, the rock's really brecciated. We've seen alteration. We've seen pathfinders literally off the chart. Every single one of our drill holes has seen anomalous gold, shows us that there's a big world-class gold system that has pushed the gold out into those host rocks. And now we got to drill into one of these high-grade feeder zones for a major discovery. We think we're really close. 2019, we hit a great drill hole at Keystone. We're following up on that right now. So watch the news. We're going to have a Keystone exploration program this summer. We'll be putting out press releases on that and announcing our plans and intentions. Again, if we can hit a drill hole here, it'll be very exciting being this close to Barrick Gold. Moving on to Maggie Creek. So it's on a parallel gold trend right next to the Cortez called the Carlin gold trend, another world famous gold trend in Nevada. And when you look at Maggie Creek, the real key is, look at this image, look how close we are to Newmont's gold quarry. That is a massive mine, 26 million ounce monster. So you can see the open pit here on this chart. Our claims, we are right next to that. In fact, Newmont's Rainbow deposit is right on our southern claim boundary. We are literally drilling today at Maggie Creek. Ken Coleman's out on that project drilling. We think it looks quite prospective. This all comes down now to the assay results. As we drill these holes, we extract the core out of the drill rig, we send those to the assay laboratories, and those assay results will determine if we found any gold. We'll probably have these assay results back, I would hope, within 2 months. So let's assume conservatively the end of July. And again, if we hit a discovery hole, could be a big value creation event. So last project we have, switching to Idaho, is called Chalice. Idaho is a great state. Key here in Idaho, we have a 313,000 ounce historic resource. We really think we can expand this. We're permitting this right now. Hope those permits get approved this year. And then we'll have more exploration plans and announce more to the market. So that's the projects overall. You know, when you look at our valuation, compare us to our peer group, we think we are highly undervalued just based on our Wyoming project of Copper King. So the end of June, that geological report going to give us a big re-rating, potentially big catalyst, drill results coming at us. So it's an exciting time. When you look at our team, I talked about George B., mining industry leader. We've got a great board of directors. In fact, George was just up in Cheyenne with Ryan Zinke, former Secretary of the Interior, cabinet level secretary in the Trump administration. He's also, you know, long-term Navy SEAL. And the rest of our board is very, very experienced mining industry veterans. You look at our technical advisory team, second to none. George B.'s known a lot of these guys for his 40-plus year career. So that's the overview. We got a company today with real catalysts. You've got cash in the bank to execute, listed on the NASDAQ, very, very tight shareholder structure. So any of these events could really give us the upside. I think it's an exciting time with a rising gold market, probably for the second half of 2021 into 2022. And we're very, very excited about the opportunities in front of us. So more than happy to turn it over to you guys and see if we have any questions.
That was excellent, Ed. Thank you. Yeah, definitely got some good questions in there. And I got a good one for you, I think, here. So, you know, the theme for this track today is the new economy. And I would definitely argue that, you know, gold and mining is absolutely going to be a part of the new economy. But, you know, I want to hear from you. Give investors a little bit of a reassurance as to why a mining company, you know, should be included in the, quote, new economy.
Yeah, without a doubt, Brent. And I agree. And I would also point strongly to our copper component of our Wyoming Copper King project. You know, the Biden administration right now is talking about this $2.2 trillion infrastructure program. So there's going to be a lot of emphasis on the electrification. We know that, you know, the whole automobile industry is moving, like Tesla, towards electric cars. The average electric car takes 180 pounds of copper. So we've got, you know, American copper located in Wyoming with the gold. These are strategic metals that'll really ensure the long-term viability of the United States. And whether it's for, you know, windmills or solar panels, electronic circuitry, both gold and copper are going to be very, very important for kind of rebuilding the infrastructure of the company going forward.
Love it. And then I'm going to put this question up on the screen. This is a really good one. Brian Heflin is asking, the big question for me, how does gold compete against crypto as a hedge against inflation? Care to tackle that one, Ed? Yeah, look, I'd love to. And I'm on record on this multiple times talking about it. And, you know, you got to look, I own crypto. I'm long crypto. I love the sector, but I'm also a gold guy. So I think that they're not mutually exclusive. You can have them together. Now, crypto's only been around. Bitcoin's been around since 2008, since the white paper came out, really 2009, since any trading. And I tell you what, we haven't had any inflation in the world since 2009. So crypto as a hedge against inflation, it might be just starting to rear its ugly head now, but we haven't had any. Gold has been used as a store of value for over 2,000 years. And Brent, back in the time of the Roman Empire, you could go out and get a custom-made suit of chainmail for 1 ounce of gold. Gold today is at $1,840 an ounce. Well, I tell you what, with $1,840, you can go to New York, Milan, London, Hong Kong, and get a pretty nice suit. That's what gold does, man. You got a 2,000-year purchasing power parity history. You know, in 2,000 years, every single fiat currency in the world has gone to zero. They're all paper. Will crypto be around in 20 years? Maybe, probably. Will it be around 2,000 years? I have no idea. I really don't. But gold will.
you know, it really will. It stands the test over a real long period of time.
Love the analogy, Ed. Let me hide the question there. Oh, there we go. Ed Karr, he is chairman of US Gold. It's ticker USAU. And can we pop on the, there it is, US Gold Corp. Gold. Oh, we got a nice gold extension. If you're looking for more info on US Gold, Ed, thanks a ton for joining us. Have a good rest of your day. Have a good weekend, sir.
You too. Thanks so much for having us.
Alrighty. And we did just hit over. Let me see. Let me get an update here. We did just hit over 100 likes. Spencer on his track yesterday got, I think, over 300 likes. We want to go 400 likes, ladies and gentlemen. Smash the like button, please. Pretty please for me. And we do have, I am excited to say, we do have our first educational segment coming up here, and it is with a guy that has been around for a while, James Putra. He's VP at TradeStation Crypto. James, I know you've been around the fintech industry for a long time, and I know you've been one of the guys that has helped get crypto going at TradeStation. So a couple of nice accolades there for you. How you doing today, James?
I'm fantastic. Thank you for hosting me on the show. And I actually remember talking to the leadership of Benzinga back in Michigan about crypto before you guys got kicked in. So it's been a super exciting ride. I want to say 2014, 2015, when it was really starting to just rock and roll. So it was, it's been quite an interesting ride for crypto as it's kind of infused into the financial system.
When did you guys start developing a crypto segment over at TradeStation?
We got started back in 2014 doing crypto mining.
Wow.
And it probably took us 2 years to really even build up the right knowledge in-house to be able to even consider doing some type of crypto business.
Yeah, I bet. And so you're going to be giving us some really good education here, Crypto 101, cryptocurrencies, and why you should consider for your portfolio. And hang tight for a little while. This is going to be like a rather long segment. You got like a good 35, 40 minutes here, right? Right, James?
I think so. I'm excited to share this information.
All right. I'll let you have at it, sir.
Awesome. So guys, thank you for the time and listening. TradeStation Crypto, we've been around, well, TradeStation as a brand has been around now for almost 35 years. We have equities, options, futures options, and I represent the crypto business, which is an extension to our trading offering. Just quick disclaimer, all the information that you see here is my opinion. It's not a representation from TradeStation, but I'll talk to you more today about the great stuff that's going on in crypto. Before we get started, I just want to kind of drill into one thing. Over the next 10 years, there's going to be more game-changing technologies that are about to go through these mass adoption phases than any other time in human history. So if you take nothing out of this presentation, do not be afraid of change, because it is coming and there's nothing we can do to stop it. What I'm talking about here is that we're in this age of exponential technology growth. And when you combine that with mass adoption, we're about to see massive explosions in value in many sectors and many industries around the world. Real quickly on Metcalfe's law, basically it's how we evaluate Facebook, Amazon, Google, Netflix. It says that the more people that adopt the network, the more value is extracted for that network for the users. And it goes on an exponential curve. And so this is what's really driven a lot of the valuations in the tech sectors since early 2000s. And so what we're seeing in the next 20 years is a significant change in all of the technologies we interact with. At the infrastructure level, we're going to have global connectivity on 5G and 6G, blazing fast internet in every corner of the world. We're going to have distributed computing power. We're going to have cheap green electricity. At this productivity layer, we're going to have good access to artificial intelligence, robotics, fastening the pace of how we can become more productive, 3D printing, changing manufacturing, autonomous vehicles. You just heard in the previous segment about the copper in the vehicles. Consider this: in the next 10 years, all vehicles on the planet will become obsolete as we start to move into autonomous and smart vehicles. So that's going to be a massive shift as we start to replace all those vehicles around the world. The digital value layer, this is this financial layer. When you have all this connectivity in the world, you need a financial network that will function as fast-paced as the growth in commerce that's happening. And crypto and blockchain is one big piece of how that's going to function. Then we also have the human layer. We have this biotech. If you look at what's going on with CRISPR technology, What we just did with vaccines, with the RNA technology, is pretty amazing. The IoT segments, that's really exploding, making sure we've got data everywhere, connectivity. The last thing is the metaverse. Metaverse is basically these online worlds. About 2.5 billion people in the world already live and interact in this metaverse. And that's what, 25, 30% of the population of the planet. And what they're doing is they're communicating, they're owning assets, they're buying and selling things, and they're earning money inside of these worlds. Now, maybe I could simplify it. If you have kids and they play games, that's typically a metaverse. They exist in this connected world where they're engaging with their friends. They will go outside and play soccer, come back in and engage on the network with their friends, playing video games. And those are these types of metaverses that are evolving. And inside of there, we really think that cryptocurrency or some type of digital native asset is going to be essential for these folks to transact. So that's my kind of big picture. A lot of stuff is changing. I'm going to drill into some blockchain basics. For those of you that know crypto, this might be a little remedial. For those of you that don't, this is going to be pretty good primer. And then I'm going to jump into different market trends, how this is going to impact you and what you can do about it. We're going to talk a lot about inflation and possible ways to protect yourself and your portfolio. So on the basics, you have blockchain and you have cryptocurrency. Blockchain, think of it as infrastructure and database, and you have cryptocurrency, which is, think of that as the value. So in Bitcoin, you have the Bitcoin blockchain, which is the database or the transaction layer, and you have Bitcoin itself, which is the unit of value. And Bitcoin is what you send all around, and all those transactions from person to person in Bitcoin are recorded into blockchain. So database infrastructure, actual unit of value. Similar things that happen with a variety of other types of blockchains, whether it's Ethereum, Litecoin, Helium. Those are kind of the two components you're going to have inside of a blockchain ecosystem. Real kind of fundamental piece, how does a transaction get into a blockchain? So if we're going to make a transaction, let's say I'm going to send a transaction to my wife. So I'm going to send 1 Bitcoin to her. What I'll do is I'll broadcast. I'll send something very similar to the way I would send an email or a transfer on Venmo. That transfer is going to be sent out to the network of computers that are powering the Bitcoin blockchain. They're going to then package my transaction into a group of other transactions. They call that a block. And once that block has been formed with enough transactions, it's going to be then broadcast out to the network. And I'm not going to go into the super technical details, but there's a lot of stuff that's going on. Simply a bunch of transactions bundled into a block. It gets broadcast out to the network. Once you have 51% of all the computers that are engaged in the network to say, yes, this is a good block of transactions, it gets added to the overall blockchain. And there's a bunch of stuff that happens with encryption to make sure that you cannot go back and change the history of the blocks, and that each block builds on the next one. And so we can definitely do another session about encryption, but probably I'll keep it as high level as possible. Once you have that block, it's then distributed out to all computers in the network, and that transaction is now complete. And what you have in this blockchain is essentially a type of database or transaction ledger that is public, and anybody that has a computer, a phone, can participate in observing the blockchain, looking at what the balances are at each one of those accounts on the blockchain, and basically adding power and securing the network. It's a pretty cool concept. This concept of blockchain was really brought to the forefront in 2008 with Satoshi Nakamoto and his white paper. There's been different pieces of this throughout history. Probably in the last 30 years, there's been types of digital currencies, been types of databases like this, there's been types of encryption, and this really pulled it all together with Bitcoin and its blockchain. Prior to having blockchain, what you have to do, and still many people do this today, is you go, if I want to send money to my wife, I can go onto Venmo. Basically, I tell Venmo, send $100. It's going to go to my bank. It's going to pull out $100 from my bank. It's going to then send it to her Venmo account. And then when she wants to withdraw it, she needs to then withdraw to the bank. In that chain of transaction, there's a lot of different institutions. There's my bank, whatever bank Venmo is at, and whatever bank my wife is at. And along the way, there's different fees and different delays. It's not instantaneous, and it's not just not super conducive when you're going to have transactions globally at scale. In the US, it's a little bit, we have a very mature infrastructure. So this use case seems very natural for us. But for someone like me who travels all around the world, it becomes much harder if I want to, let's say, tip a taxi driver in Czech Republic, I can't just Venmo them. There's a process that I have to go through. I have to have a localized bank or a localized type of Venmo, maybe I use Revolut, and that makes me isolated into the European Union. When you look at blockchain or Bitcoin specifically, I'm able to do peer-to-peer transactions with anybody on the planet. And soon as we become a multiple planetary species, I'll be able to transfer that to anybody anywhere in the universe that has access to our internet and our blockchain. So if you can imagine, I want to tip the taxi driver, I can send him $10 in Bitcoin directly to him without having to go through all the different intermediaries, without having to go through all the different currency transactions. So it really creates a much simpler, streamlined transaction. And Bitcoin is one. There's many, many more types of transactions we can use. What makes all this possible? So we talked about blockchain, we talked about transactions. Each user of the blockchain has what's called a wallet. And we probably should have called this something different, but it's called a wallet. And a wallet is basically an account. Think about on the blockchain, you're going to have a number, which is your account number. That account number is associated with your wallet. And that wallet is where you're going to hold all of your digital assets. So in the case of Bitcoin, that wallet will hold all of your Bitcoin. That wallet is an address on the Bitcoin blockchain. And if you want to receive funds, you have what's called the public key. So that wallet has two keys. The public key, which is what you share with people, that's your account number. Anybody that wants to send crypto to you will use that number in order to send that to you. So that's like your routing number, your bank account number, all in one. If you want to send to somebody else, you have your private key. And your private key is kind of like your password. And that is, in order to send your Bitcoin, you need to use your private key to send the funds from your wallet to whatever receiving wallet you'd like to send it to. So that's kind of the basics building blocks that we need to talk about. I'm going to shift directions here and talk a little bit about all the different ones. So we've got around over 4,000 different types of crypto assets, and they're more than just Bitcoin. They are all types of different projects. So you have Bitcoin, which is the oldest one that we're aware of. It works really well as collateral. It works really well as a store value. A lot of people like to think about this as gold 2.0. It's a digitally native asset. A lot of folks are looking at this as an offset to inflation. You have Ethereum, which is think about that like Amazon or the world computer. And so it's a type of network that you can write programs on top of. You can build applications on top of. It's almost like the App Store on top of a blockchain. And that's super interesting because people are building companies, they're building businesses on top of the Ethereum blockchain. You may have heard about DeFi or non-fungible tokens, NFTs. Those are typically built on top of Ethereum, where you have these different protocol layers or different ways that you can host an application directly on a blockchain. Going down the line, you have stable coins. Those are coins that are pegged with a stable value. That's going to be, for example, US dollar coin. That's the second largest in the world. That has an audit by Graham Thornton. They have created by Circle and Coinbase. It means for every one USDC in circulation, there's $1 in the bank. You have some things that are going to be like algorithmic stablecoins that are some type of monetary policy written in code that holds the value of the asset. You also have things like gold tokens. So Paxos Gold is a token that for every token, there's an equal amount of gold inside of the vault. And that will fluctuate with the value of gold. There's also a lot of really super interesting things going on with Internet of Things. There's some tokens like Helium or IOTA that allow you to engage in that network. Those are going to be all different ways that are all different tools to empower types of Internet of Things. Helium is one that I'm super interested with. Basically, what you do is you host a router, and that router is an access point for all the different IoT things that are on that Helium network. If you know about the scooters that are in your city, those little Lime scooters use Helium network, so that scooter will report its data up through this Helium network and out into the overall internet, which is great. So that's kind of an interesting type of token. I tend to personally stay on the Bitcoin and Ethereum side. I like to explore the different tokens that are more out on the risk curve, that have, what I look for is tokens that have a type of platform where somebody can run a small business on. So think about like the Uber style things where I can host a router and I can get paid. I can, for Filecoin is another one, I can allow somebody to access my disk space and I can get paid. So those types of things that allow individuals to earn an income using these little technologies, those are the ones I'm super interested in. But there's just a lot, they're all different types. When you look at them though, on the risk curve, Bitcoin and Ethereum tend to be the ones that are on the lower side of the risk curve. And then there's a long tail of assets, and it's a lot of varying degrees of risk. Anybody that's heard of cryptocurrency probably heard about Dogecoin. That one's also, the retail audience has just driven into that massively. We'll see if it becomes anything. It started off kind of as a joke. It's still a risky coin in that there's not a lot of the money that's being plowed back into developing the network. So when you look at Bitcoin, people that have made money on Bitcoin have spent a lot of time developing and putting money, investing into the network. Dogecoin and some of the other altcoins, what we're seeing is it's a lot of speculative assets, speculative folks that are getting involved, and they're not taking that money out and reinvesting it back into the network. So we'll see what happens over time as the kind of crypto boom continues. Typically, what you're going to see is from a Bitcoin halving, which we had in 2020, the market tends to run up for about 280 days after the Bitcoin halving. Somewhere in that range, you're going to find the peak of the market. That places us somewhere around September if the patterns hold true after all halvings. When Bitcoin runs up, most of the other assets tend to go with it. What should happen we're in this bull run. After we complete this bull run, we'll see kind of a stabilization and a boring time for 2 to 3 years until the next Bitcoin halving. We talk a little bit about market trends. So what drove the price of Bitcoin up? This is a really interesting concept. So, I mean, for all of us that are doing any kind of investing, supply and demand typically is what drives the price. And Bitcoin is no different. What we saw last year in 2020 was Bitcoin went through a halving event. In a halving event, you basically reduce the supply of Bitcoin. So on a daily basis, a certain amount of Bitcoins are created, and that's the new supply of Bitcoin. That's the new supply that's been mined. What happens every, I think it's 2 or 3 years, is there's a reduction in supply that's created on a new daily basis. And that reduction in supply shifts the supply curve. So it's a shifting of the supply graph. But also at the same time, we had a massive shift in the demand curve. So if you look at, let's go back like 2013 when we had the previous bull market. It was very hard to get involved in cryptocurrency. It's hard to get access to Bitcoin. You were trading at service providers that you really didn't know. I would argue in 2017, 2018, it was very similar. We had a lot of what's today well-known. You had the Geminis, the Krakens, the Coinbases. It still took a week to get your account open. You were still taking pictures of your passport and your license just to get your account open. Sorry, a selfie with your license. So there was a lot of friction to get involved in crypto. And these companies looked like financial services companies. They didn't have a long history. And it was just not an easy leap for people to make. But between 2018 and 2020, there's a lot of work that was done in order to enable much more access. So those original crypto exchanges got a lot better at servicing customers. You had products like Grayscale, companies like Grayscale that brought out their Bitcoin Trust, GBTC. That brought an enormous amount of access because now anybody with an equities account could access exposure to Bitcoin. So whether that was in your self-directed IRA accounts, whether that was in your self-directed individual equities accounts or joint accounts, you could gain exposure to Bitcoin through GBTC, that instrument. And so that created a lot of access. It unlocked a lot of capital to be able to go into that market. On top of it, you had firms like TradeStation, Robinhood, that are all traditional, and even eToro are all traditional firms that that have large client bases that opened up access to this marketplace. So we're now making it much easier for people to get into the market space. You have new products that are out there, so more people can gain access. And then you have, on top of it, PayPal and Square, which just really shifted the game. And I'll explain why. So at the very root of it, change in supply graph, serious change in demand graph. And when that happens, You have more people that are trying to buy than are available Bitcoins. That means we need to get people to sell in order to satisfy that demand. In order to get people to sell, if the price goes up, and that's sort of the basics of what's going on today in the Bitcoin market. Bitcoin prior to PayPal. So prior to PayPal had 100 million active wallets. Overnight, PayPal launched its service, and PayPal has 377 million users. That's almost overnight. You have access to 3.7 times more people to the network of Bitcoin than you did the day before. Now, not everybody's going to engage in Bitcoin. That's not what we're trying to say. But what we're trying to show here is that one company almost quadrupled the number of people that have access to this network. That's a massive number of people. And during that time, if you remember, we talked about how many Bitcoins are mined. PayPal users were buying on a daily basis more Bitcoin than were created new, which is part of what drove the price up. We mentioned Grayscale, the product GBTC. So Grayscale, through most of 2020, was buying up more Bitcoin than were created on a daily basis. So you have PayPal buying more, you have Grayscale customers buying more. Grayscale, just for some perspective, in January, they bought 54% more Bitcoin than was mined in the month of January. So it has to come from somewhere. The price has to go up in order for people to start to sell. And that's what we've been seeing, is this sort of reflexive loop. More people have access, more people want it. We need to find that source. So in order to get people to sell, the price needs to go up. And that's just the kind of basic supply and demand shift that's been going on. And when you look at Bitcoin, it's really the index for most of the other assets. Bitcoin sort of leads the way. I think it's still today about 50% of a little over 50% of all activity, all participation still occurs on Bitcoin network. And that acts as kind of like the S&P index for the equities market. It really is the leader. When Bitcoin goes up, shortly after, the altcoins tend to follow. Once the altcoins fall off, Bitcoin tends to also go back up. So there's a really unique interplay between altcoins and Bitcoin. And so part of this also, we mentioned, is just going mainstream. The adoption and the acceptance has expanded. So you have an asset class that went above $1 trillion in market cap. You've got a lot of participants that are looking to get into the space or are already in the space. It's becoming acceptable for banks to come in the space. It's acceptable for brokers. It's getting to the point that if it's not now, it will be shortly, where it's not acceptable to not be involved in the space from a financial services provider. When we look at the firms that we've got listed on the table, in terms of corporate interaction, you have BlackRock, one of the largest ETF fund managers in the world. Morgan Stanley, you have Goldman Sachs, Fidelity, JP Morgan, Visa, BNY Mellon, MasterCard, IBM, Square, Tesla, MassMutual, Guggenheim. The list can go on. There's a tremendous amount of corporate interest. So not only did we talk about PayPal, we also talked about Grayscale. We also talked about the retail brokers. Now I'm bringing you banks. They're all trying to get into space. Now the groups that we're looking at, they tend to start with Bitcoin. They don't start with the long tail of assets. So that just fuels more interest in the space. It drives the price up, drives the market cap up, and then you have a depreciating supply. And that's one of the fundamental things that most people are excited about Bitcoin, is a finite supply. It has a depreciating supply, depreciating number of coins, and you have more participants that are interested to get in the space. And we continue to see this activity and grow. And it's great to see that Bitcoin's over $1 trillion market cap. What's super interesting is that Bitcoin is the 8th largest asset. So when you stack it up against assets by market cap, it's bigger than Tesla, Facebook, Berkshire Hathaway. It's behind the FANG stocks, tech stocks. It's behind gold, but it's about to overtake silver. So those are super interesting to look at. Why should we care about market cap? Market cap is arguably much more important than price. Market cap is like your swimming pool. The larger the market cap, the more people can come in and play. If you think about, let's say me as a retail investor, I don't need the market cap to be very big to buy one Bitcoin and not have an impact. If I'm Tesla and I want to buy $1.5 billion in Bitcoin, I better have a decent sized market cap so I don't skew the market. At $1 trillion, they're buying 1.5% of the market cap, and it's not shifting the market. It's we're not even noticing. So that's kind of that interesting concept to think about. The larger the pool, the bigger the players that can come in. At $1 trillion, it's big enough for companies to get involved with. At $10 trillion, it's big enough for sovereign wealth funds, potentially governments, potentially central banks. So the larger the market cap, the more accessible it is to different players. And we'll see. Does it continue to go up? I don't know. I don't think anybody knows. I would like to see it go up, but no idea whether it actually does. But if we look at how Bitcoin and cryptocurrency have performed this year, it has destroyed the US equity market, it has destroyed gold markets, it has destroyed the bond market. So the performance is insane relative to its peers. If you look at bonds and gold, they're getting hammered. If you look at the equity markets, it's up 10%. So that performance that we're seeing on cryptocurrency, Bitcoin and Ethereum specifically, is impressive relative to its peers. That performance, that market cap, that retail interest, that corporate interest, all of that is helping to fuel this excitement and interest and participation in the space. And what's super interesting about those companies and those larger firms is that they are, as they get invested into the Bitcoin network, they're also invested in helping to secure the network, helping to mature the network. If you look at TradeStation, for example, we do everything we can to provide the right infrastructure, technology, security, and access. And so you have many firms like us that are also trying to add value and to try to help people engage more in the space. Now, this one should probably scare you a little bit. I don't mean to be doom and gloom, but I want to highlight that since 2020, the M2, the measure of money in the US, how many dollars are in circulation, that M2 money supply has increased 26% in 1 year. That's the largest single 1 year jump since 1943. So if I were to say it differently, 25% of all dollars in circulation on the planet were created in the last year. So that's an enormous amount of dollars that were added to the circulating supply. If you go back to 2008, that big market crash we had, if you go from 2008 until today, the G4 central banks have increased their balance sheet by 618%. That's on average 13% a year increase on the G4 central bank balance sheets. So if you were to kind of break that down, what that equates to is a 15.5% annual deflation in the currency, annual inflation or devaluation of the currency. So just stew on that for a minute. 15% devaluation on all dollars. And that's been accelerated in the last year as we printed many, many more dollars. So what does that mean? That means that in order to break even on your savings or your money, you need to be earning 13 to 15% a year just to break even and stay at pace with what's going on around the world since 2008. So 13 to 15% is a lot, especially when you consider that the average annual growth of the S&P is 15%. So why should you care about that? S&P 500 is how we evaluate risk. It's how we benchmark all of the performance of all the funds. And that is what we say, and we tell everybody in the finance world, S&P in stocks is the benchmark. It's also the risky asset. So the risky asset that is the benchmark is just keeping pace with the devaluation of the currency at 15%. So that's a crazy, crazy, crazy metric to think about. So just to break even, you got to buy the S&P 500. So if you were to not look at the S&P 500 and you were to just focus on the FANG stocks since 2008, you would have earned an additional 17%. So you would break even, you'd cover that 15%, and you'd earn an extra 17% on top of it since 2008. That's just isolated on the FANG stocks. So if you were to pick the dominant networks, focus in those stocks, you would have returned on average 17%. If you had taken that same time period and focused your efforts on cryptocurrency, the performance is 200%. So you would cover that 15% and you'd have earned 200% per year on top of it. Now, I'm not telling you to go out to buy cryptocurrencies. The main point of this slide is stocks are just staying break even. Are we in a bubble? It's hard to argue that we're in a bubble for stocks when it's just break even. So it's a kind of a very scary concept to think about. And it's really about, if you were to do S&P 500, we quoted in dollars, that value of the dollar is declining or decreasing. And so it causes the asset to increase. We're seeing across the world, across the US, housing prices, raw materials, the various things that we need to buy on our daily basis are increasing relative to the dollar. And it's not that they're getting much more valuable, it's that the dollar is getting weaker against those assets. So you need more dollars to buy those assets. In some cases, like lumber, there's definitely shortages, and you're seeing those supply and demand shifts. But overall, broadly speaking, the dollar, the denominator of that valuation is decreasing in value. So you need more dollars to buy. So take away from this slide, think about your portfolios. You've got to make 15% just to keep up with what's going on at the G4 bank level, central bank level. So how does this impact you? Since 1960, there's never been this much cash sitting in deposits at commercial banks. So if you are a individual with cash in the bank, if you are a company with cash in the bank, remember, 15% is your number. Huge amount of cash that's just sitting in the bank. Start thinking about what are you doing with that cash, because holding it in treasuries is not keeping pace. I think the benchmark for treasury rates is 1.8%. If you look at the Barclays bond index, it's somewhere a little bit higher than that. So just to earn on that cash, you're probably, you're going to do treasuries, you're going to earn a little bit. If you're just sitting in the bank, you're probably earning very little interest rate, and that cash is basically melting underneath you at a rate of 15% a year. So you're just sitting on this melting ice cube in what is perceived as the safety asset. So think about what you're doing with your savings, think about what you're doing with your corporate treasuries, and think about what assets you can start to put that in order to protect yourself against the currency devaluation that's ongoing. The other thing that's happening is that we, as a financial services industry, have subscribed to this idea. If you go, whether it's your advisors, whether it's the financial sites, it's almost always a recommendation that follows an asset allocation, some type of 60-40, some type of stocks and bonds split between your portfolio based on your age. So I just mentioned before on the previous slides is that we have to cover this number of 15%. Bonds are getting around 1.5, 1.8%. It's not keeping pace. So people around the world, investors, portfolio managers, bankers, are realizing they have a lot of capital in bonds. And that bond is like that melting ice cube. It's not keeping pace with the devaluation. The yields aren't there, the values aren't there. That money is going to rotate out of bonds into something else. And you've got to think about where your portfolio is, because are you allocated to stocks and bonds? Is it the right place for you? Talk to your advisor. Think about what other assets you can engage with, because remember, equities, the benchmark is just keeping pace. It's just break even. So think about what you're doing with your savings, with your portfolios. Figure out if bonds are right for you. Figure out if stocks are right for you. The smart money is rotating out of bonds. There's not a lot of great options for them, but they're finding new assets. Gold is definitely a beneficiary of this. Cryptocurrency is one of the beneficiaries of this. Physical assets, high-end real estate beneficiaries of this. But currency deflation, bond overallocation, these are two overarching themes that are definitely impacting your personal portfolios and any of the savings you have or your corporate treasuries. So those are super important things to keep in mind. So what can you do about it? When you look at the conventional asset allocation approach, 60-40, it was great. It did great from 80s, 90s, and 2000s. Now, think about how you're going to allocate. The money is rotating into other assets, assets that are better protected against inflation, better protected against currency devaluation, and also with trying to find new assets other than bonds. If you look at some of the smarter companies, some of the companies we respect a lot, Tesla, Square, MassMutual, MicroStrategies, all these people have realized that having their corporate treasury completely in dollar-based or fiat-based assets is not ideal. It doesn't bring them the right shareholder value. So they're starting to look for other things. cash and treasuries are performing very similar. So they're looking at assets. And in these examples, these guys found cryptocurrency. Other firms may find gold or high-end real estate or other assets, but it's becoming more and more acceptable for treasurers to hold a type of digital asset on their balance sheet. And companies like Tesla, Square, MassMutual, MicroStrategy will see how they perform and how the stock market either penalizes them or rewards them for what they've done. So it'll be interesting to see.
James, I want to give you like a 5-minute here. We might have some time for some questions. If you want to take a couple questions, that'd be a good time to do it. Or if you got anything to like finish up on really quickly, go for it.
Nope. So I'll kind of end with this, is that adoption in cryptocurrency is happening. It's happening fast. What's going on with cryptocurrencies beyond just Bitcoin, there's a lot of different tools that are available. And because our interest rates are so low around the world, there are new products that are coming out that, for example, T-Mobile offers you 4% interest on your cash you want to park with them. TradeStation has an account where we will pay you interest up to 6% on the dollar-based assets you have. We'll also pay you on other crypto assets interest. BlockFi also has something similar. Gemini has something similar. There's new interest rate products that are coming out because of cryptocurrency that are super interesting to look at. I'll definitely open to take some questions. We can talk more trading. I can go in any direction you'd like to go.
Where's like I need my like gym rag. That was like,
Sorry.
I'm sweating. I mean, that was a ton of good education. My body wasn't working, but my mind was making my body sweat with all the good info you gave there, James. Really appreciate it. And we did have a bunch of good questions in the chat, and I got a couple for myself that I think you're gonna like. So I wanted to ask you, what tips could you give a crypto investor or a prospective crypto investor about making a decision which of the thousands of cryptos they could fit into their own strategy? Like, how do you give somebody a recommendation of how they could go about starting?
Yeah, so I think it depends on your trading style. I think the first thing is, it's not a get rich quick. Take a longer time horizon. This is a trade that's on for multiple years. When you're thinking about which assets to select, I would argue, ignore all the news sites, except for Benzinga. But
thank you.
Except for Benzinga, you guys have great research out there. But what happens is a lot of times that it gets picked up with what's the most talked about, not necessarily what's the best for the investor.
Right. And
so what I've just kind of highlighted today is most of these companies are starting at Bitcoin. That's the easiest access point. So I'm a technical trader by nature. I try to follow the whales, and I try to follow the bigger, smarter people. And for me, that direction right now is they're heading into Bitcoin. You don't need to hold the whole Bitcoin. That's the greatest thing. You can buy $10 of Bitcoin, and it seems volatile. It does have volatility compared to other assets, but it's nowhere near as volatile or as risky as some of the longer tail assets.
Right.
I would definitely steer you away from Dogecoin.
Uh-oh.
Ignore that one.
Oh no, the chat is going crazy on you, James. I'm just joking.
That's okay.
So something that was big in the news last week, this week, was, I think, crypto investors. Well, maybe they've been thinking about this for a little while, but at least on my end of things, I was seeing it sort of for the first time. Do you think this kind of thing that we heard last week, this week, about energy consumption, fossil fuel consumption related to crypto mining, I mean, do you think this is a hurdle for the industry?
No,
not concerned.
Not concerned at all. I mean, it's
awesome.
If you dig around, I think that some of the previous speakers maybe spoke about this. There's pockets of energy that's orphaned, that's not being used. And as we move faster towards green energy, that it's going to become much less of a concern. Now, I would say that if you have a coal mining plant plugged into your mining operation, probably not a great idea.
That's a thing.
Wow. Yeah, well, the people are putting their mining operations very close to natural resources. So whether it's by hydroelectric power, whether it's by wind, there's a lot of that happening. And even in natural gas capture, there's so much wasted energy there that's just not being utilized. What tends to happen is you get these bigger mining companies that come into areas and they're able to use that excess capacity. And there's definitely those firms need to be responsible because you can't have them take all the electricity for a village and now the prices go up. So that's the thing where there's a level of required responsibility by those organizations.
Gotcha. All right, James, I think we are going to let you go. That was an awesome educational segment on Crypto 101. We had James Putra. He's VP of Product Strategy for TradeStation Crypto, tradestationcrypto.com. Thanks a lot, James.
Thank you so much. Have a great day.
Have a good weekend. Woo! Whew. Oh, I forgot to say, James, Luke wanted me to say hi. Forgot about that. Sorry, Luke. So a little teaser here. We are going to be having our first panel coming up in just 1 sec. I want to go over one thing first, and the panel is going to be hosted by Benzinga's own Catherine Ross. We're going to be talking about how digital currency is disrupting finance. But super quick, before we get to that, I just wanted to pull up our poll here and get that kicking. So let me share my screen here real quick. And so again, you guys got your QR code up here. This is how you interact with these questions. And I'm going to read the question off to you here. We got a couple of options. Blank analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors. Is it technical analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors? That was maybe the fastest I've ever said anything out loud. Is it technical? Is it fundamental? Is it chart analysis? Or is it price analysis? So there is our first question. We do have a number of questions going today. I'm going to keep this poll kicking, and you guys can answer this at any time. And again, for the most questions answered over the course of today, for each track, there's going to be 3 winners. And maybe we should like throw in some Benzinga swag too. But the first winner is going to get a lifetime subscription to Benzinga Pro. This is a huge value. Also going to get access to 2 of our newsletters, our breakouts newsletter and also our options newsletter. Lifetime subscriptions. You guys, you want to win this. This is some good stuff we're offering here for you. Cool. Take that down. And I am ready to welcome on our panel, Catherine.
Hi. Hello, Brian. How are you today?
I am awesome. I am excited for Friday. I'm excited for the event. I'm excited for a weekend. How you doing?
I'm doing great. Friday, as you said.
So
I'm super thrilled about what we're going to talk about right now.
This is actually like a really good flow into the last segment. We had a bunch of education. Now we're going to go into a whole panel discussion here about crypto. I'll let you take it away, Catherine, and your guests.
Thank you. Well, yes, crypto. This is what we're going to talk about, specifically how cryptocurrency is disrupting finance. And I have amazing panelists here with me today. We have Charles Allen from BTCS, Jeffrey Morhe from Bitfarms, Richard Byworth from Diginex, Sheldon Bennett from DMG Blockchain. The thing is that they have an amazing experience in crypto and with crypto. So I'll let you guys introduce yourself just for a little bit to talk about, yourself, what your company does. So we'll start with Richard, please.
Thanks, Catherine. I'm the CEO of Diginex, Byworth. Diginex is a full digital asset ecosystem, including an exchange. We are an offshore company. We're listed on NASDAQ, so Singaporean based. Our exchange sits in Singapore. Our custodian sits in London under the FCA, and our asset manager sits in Switzerland under FINMA.
Thank you. Sheldon, could you please take the floor?
Yes, hi, my name is Sheldon Bennett. I'm the CEO of DMG Blockchain Solutions. We're a Vancouver-based company up in Canada. We're a pure play miner. We have our own 85 megawatt substation, run off renewable power, off hydroelectricity. As well, we have a software division in our company called Blockseer, where we run pools, including Terra Pool, which is the first renewable energy pool, and the first OFAC pool that we licensed to Marathon Digital. We also have an exchange coming up and some new products around trading Bitcoins in a compliant and ethical way.
Thank you, Charles.
Yeah, thank you for having me. So I'm the CEO of BTCS. BTCS is actually the first U.S. public company focused on blockchain technologies and Bitcoin. And the company is currently focused on securing disruptive blockchains such as Ethereum's Beacon Chain, as well as others. So we're, right now the first U.S. public company to be staking Ethereum, and we plan to stake Cardano and some other disruptive blockchains in the near future as well.
Wow, that's exciting. And Jeff, please.
Good morning, good afternoon, good evening, depending on where you are. Yes, I'm Jeff Morphy. I'm the president of Bitfarms. And Bitfarms has got an interesting history. We've been around for about 5 years now, publicly traded for the better part of 4 years. And we're, like Sheldon, a pure play Bitcoin mining company. We're actually one of the largest publicly traded Bitcoin mining companies in the world. We mine about 500 Bitcoin per quarter right now, and we have a hash rate exceeding 1.4 exahash. Our current operations involve 5 locations, all in the province of Quebec, powered by nice environmentally green hydroelectric power. And we have the plans this year to triple our size, and then from 2020 to the end of 2022 by a factor of 8 times. So we've got quite the growth story. And one of our greatest things that we've got is that just a week and a half ago, we were approved by the NASDAQ to start trading on the NASDAQ soon, and we were invited to participate at the global market tier, which is the mid-market tier, and there's no other crypto mining companies that have managed to get on that tier so far. So that's a real privilege and a testimonial of what we managed to accomplish so far. So that's a little background for us.
We're gonna definitely come back to that point. Just an observation. I don't think I've ever had such a serious panel, seriously. But let's start with the first question, because we don't have too much time, but we would love to have so much time to discuss. But I think that the biggest question, despite obviously Tesla comments, recent ones, we're gonna come back to that. But the biggest question is that a lot of companies, huge corporations, institutions are coming into the crypto space, like PayPal, Xbox, MicroStrategy. They are either putting their crypto assets on the treasury, right? Or they are introducing cryptocurrency as payment options. So there is like 2-part question. My first question is, what does it mean for the crypto industry? And the second question is, how do you handle cryptocurrencies on your balance sheets or as a payment option as a company? So I'd love to start with Charles.
Okay, sure. So I think, it makes a lot of sense for larger companies to start putting crypto on their balance sheet. It's a nice inflationary hedge. With respect to, accepting crypto, I think that's more complicated for companies. I mean, if you're a public company if you're in offshore and you report under IFRS, you can carry the crypto at the fair market value. If you're a US company and you report under GAAP, it gets challenging. You actually carry it at the lowest price it's ever been since you purchased it or acquired it. So for example, like BTCS, we have 37 million in crypto, but on our balance sheet, it shows up as, 12.3. So there's obviously, if you're a public company looking to hold crypto, there are some, accounting implications just as we wait for, the accounting framework to change to really adopt to what cryptocurrencies are.
Richard, would you agree with that statement?
Yeah, look, I mean, we're in a fortunate position where we actually report under IFRS because we're a foreign company. So yeah, look, I mean, we actually help a lot of international companies put Bitcoin on their balance sheet. We actually work with the Treasury Management Institute in Europe, which is the industry body for corporate treasurers, around how to store Bitcoin safely, put it on their balance sheet, and answer some of the questions that Charles addressed around accounting and taxation, these sorts of things. But yeah, I mean, from the perspective of does it make sense? Yeah, we're big believers in the inflationary hedge with the very disproportionate reaction that we've seen to the pandemic by central banks, which was, in fairness, pretty much their only option given all the printing that they'd done since 2008. So yeah, look, Bitcoin is a very sensible choice for people's balance sheets right now.
Jeff, you work at a crypto mining company, right? So do you have crypto assets on your balance sheet?
We were in that position where up until this year, we pretty much had to sell every Bitcoin that we mined just to pay the bills and pay for growth. And in January this year, we actually started a Bitcoin retention program. and we have well over 500 Bitcoin on the balance sheet now. And yes, we are IFRS as well. So that question has been answered, but we're big bulls. And when you can mine a Bitcoin for under $10,000, and it's currently in the market at between 50 and 60,000, what we enjoy doing is putting it on the balance sheet. And then because that's effectively our adjusted EBITDA that's invested in there, we get the compounding feature of not just having the Bitcoin on our balance sheet from a low cost, but we basically embed our profit in there as well to compound it. So it's a nice secondary feature to investing in our company.
But for old school investors, isn't it too risky to put your assets into cryptocurrency? It's hugely volatile.
It is volatile, and nobody said that this isn't a risk-free sector. But if you have the premise that you're going to have an appreciating Bitcoin, then investing in a Bitcoin miner is probably the best way to leverage your investment. So it's going to come with the gains, it's going to come with the downs, but when you look at what's happening long term and you figure that's going to happen into the future, then investment in our sector is one that you can't take lightly, but should bring good returns to you.
Sheldon, can your customers pay for your blockchain solutions with cryptocurrency right now?
No, we actually don't accept.
Why not?
We have customers that we have agreements with that are hosting customers that we do revenue share in cryptocurrency. So it's sort of like accepting cryptocurrency. But in general, we tried taking cryptocurrency early on. When we became a public company, our auditors didn't like it very much. That's changing as they're getting used to it. We do a lot of audit work as technical consultants for different audit firms. So it's getting better. As you know, like I say, private companies and public companies are two different worlds. So, you know, as the rules are better understood and as auditing firms better understand how cryptocurrency works, I think that this will change over time. But right now, we're not taking it as a payment for any type of services we do.
Okay, got it. So invest in yes, payment option, no, apparently. And just feel free.
It's fine as a payment option. We're just not set up for it. We just don't have the system set up to accept crypto the way that, you know, a merchant would have a merchant account to take Visa or MasterCard.
Yeah, sure, I understand. And just feel free, if you want to say something and I haven't mentioned you, feel free to just jump into conversation. This is a you know, democratic conversation. So the second question I've had is obviously cryptocurrency mining. I mean, we have been preparing for this panel and we mentioned that question, right? But something happened on Wednesday. And thank you, Elon Musk, so much for bringing so much attention to this topic, right? So the latest development in this particular direction is, of course, Tesla decided not to accept Bitcoin as payment options for its vehicles due to environmental concerns. Right now, that's a very good point. A lot of people, you know, think, but I honestly disagree because I've seen a lot of research suggesting that it's not true. And I have a couple of stats to prove that. According to CoinDesk research, right? CoinDesk is the leading cryptocurrency publication. A lot more renewable sources of energy have actually been used to mine cryptocurrency than in any other industry. And to prove to you that this is a very high profitable sector, only yesterday, mining Ethereum has become more profitable actually than Bitcoin. I'm sorry, I know that a lot of you guys just mine Bitcoin, but Ethereum miners recorded 77.36 million in daily revenue. So that's huge. All I'm saying, and I'm leading to the question, this is huge, right? And cryptocurrency mining is a way to earn money, but it also sort of a way for different companies to operate. So my first question is obviously probably to Jeff. First of all, can you explain a little bit how cryptocurrency mining works for corporations and for just retail traders?
Well, we're basically in the energy conversion business. We convert energy into Bitcoin. And from there, Bitcoin just opens up the rest of the universe. And we're going to talk about that, I think, as the panel goes along. But fortunately, we're in a place in Quebec where we use 100% hydroelectric electricity. We use 69 megawatts now. We're going to more than double the size in Quebec using that energy source. So we're in a good place right now in terms of that. We are expanding into Argentina with a natural gas source as well. but it's a utility grade facility, and it uses all the latest technology to keep the greenhouse gases minimized. And we're looking at, because that's not in production yet, on how to sort of do the offsets and look at that. But in terms of renewables, yeah, we're actively looking at renewables, solar, wind, and maybe energy management with a combination of hydro at night. So there's a lot of things that are going on. And as a miner, we get to go to the energy source as opposed to the other way around. So that's what's driven a lot of the CoinDesk type of discussions about of some of the differences here. And yeah, there's a lot of far more bigger industries that pollute a lot that need to convert ahead of us. But we're doing our bit, and we're going to be part of that evolution as well.
But do you have specific numbers of electricity, for instance, that you use as a crypto mining company? Do you have specific numbers? How much energy do you actually use?
Oh, right now we're drawing 69 megawatts.
69. Okay, Sheldon, do you have anything else to add?
Yeah, I mean, this is a big question. You know, as many people in the cryptocurrency mining know, you know, we started the first OFAC pool. We've now started the first renewable energy pool. This is where miners can join our pool that have renewable energy, and it's sort of a statement that they're, you know, on the right path in sort of being responsible on the ESG front. But the question about renewables is really important, and I think a lot of people understand that when you have companies like Bitfarms and ourselves that are large miners, we are looking for the cheapest energy, and at the end of the day, the cheapest energy is renewable. Solar is the cheapest energy. Wind is the cheapest energy. Geothermal is the cheapest. I mean, Iceland's a great example of that. You have large aluminium factories and plants in Iceland because of its cheap energy and it's renewable energy. And when you think about coal versus, you know, renewables, you have this idea that, you know, coal, you've got to dig it up, you've got to transport it, you've got to consume it. That's all very expensive, time consuming. Whereas renewables, you put a solar panel down or you put a wind farm up, and you have power right away. Now, you have day and night issues, but you have power right away, and that power is essentially free after your capex. And, you know, I've explained in an interview yesterday, I spent an hour and a half with a reporter talking about renewable energy and crypto mining. And I explained to them, I said, I sit on hydro just like Bitfarms. I have an 85 megawatt substation that we privately own, so we don't impact the community with our power usage. And I'm putting up 5 megawatts of solar panels on my 30 acres of land I have. I don't need to do it. But at the end of the day, after I pay my capex down of those solar panels, I'm getting free energy. And all Bitcoin mining companies are looking for the lowest cost energy. Any company is. If you're a pulp and paper company, you're looking for the lowest cost energy. Any energy intensive business is looking for low cost energy, and the path to that is renewables. It will become the lowest cost energy that there is out there. And it's just a matter of the market transforming, infrastructure transforming. And Bitcoin miners are sort of at the forefront of this because we're so easy to measure our energy consumption. We're very open and transparent. You can figure it out really fast. You know, whereas the pulp and paper mills or the pulp and paper industry, and I'm just using that as an example, it's very hard to measure. And a lot of people are just happy with how paper is produced. They're not asking questions about how it's produced. And that could be any industry. I'm not picking up pulp and paper, but it's a huge power consumer as well. And, you know, it has a product that everybody can easily see and touch, and it's been around for decades. Bitcoin's new. It came out of a history that had a lot of bad press, but it's changed a lot. It's modernized a lot. It's become very acceptable. It's growing to the mass markets. And, you know, the energy debate is a debate worth having. But I think as industry leaders in North America, we're doing all the right things.
And I know that you have worked with Bitfury before, right? What would be the best country actually in terms of how much you're going to pay for mining? What would be the best country to mine cryptocurrency?
Well, I believe Canada. You know, you can look at it from different points of view. One is the bulk of the energy in Canada is renewable, and most of it comes from dams, you know, as hydroelectric. There's lots of wind and solar. You can buy it. You can build your own infrastructure, but you can also use the Canadian infrastructure, and it has low cost energy around different provinces. So, you know, I'm on one side in British Columbia, which is, you know, mainly BC Hydro, which has abundance of hydro, which is sold to the U.S., sold to Alberta. You know, Jeff's over in Quebec. It has abundance in Quebec hydro. I mean, it's lots of very cheap power, and what you have to understand about power is that. You know, it's transportable in some ways, but it's also underutilized in a lot of places. And so you have industrial areas that have a lot of power, but they don't have the resources that used to be there. The economy changes over time. Where there used to be a lumber mill or a pulp mill, it may be over the last 30 years, it's not there anymore. But that power infrastructure sitting there and it's sort of stranded or not used or underutilized. Where we set up our place, we picked a place with 2 transmission lines. One transmission line has 250 megawatts. The other one has 500 megawatts. And we're 85 megawatts. We connected the 250 megawatt line. It was only using 30 megawatts for the local community. And so there's tons of power out there that's stranded, that is not being consumed. And we're bringing in jobs to an underutilized area, and we're taking power from dams that were underutilized. This is a great economic gain for the region that we ended up putting our crypto mining center in.
Richard looks like he agrees with you, but before I go to Richard, just a quick question. But I've heard that Kazakhstan and Georgia, the country, are much cheaper to do operations there. Is it true?
Yeah, I mean, Jeff knows this and others know this. I mean, I don't want to hog the conversation, but yeah, I mean, there's always going to be places that have cheaper power. But there aren't this cheap power is one part of the equation. Infrastructure is another part. You know, your internet, your access to skilled labor, the ability to work with government, compliance and regulatory issues. These are all really important things, especially for public companies that are growing. These are really important things. So the cheapest power is not the most important. As Jeff said, you know, I can make a Bitcoin for $10,000 and sell it for $50,000 US. There's a lot of profit in it. So it's not always about the cheapest power so much as doing things properly and growing an industry properly. And as public companies, we're the ambassadors to this.
Right. And as technology evolves and solar and wind evolves and the price comes down and battery technology gets better, then we will make moves elsewhere in the world to find the cheaper power and make the economics work. So,
Richard and Charles, I want to bring you guys. Oh, sorry, you were saying.
You know, I was just going to add one comment. I mean, you know, having some experience in Bitcoin mining, BTCS was the first public company to mine Bitcoin back in 2014 and 2015. And one thing I've kind of looked at over, you know, our 7 years in the space is the technology is shifting, right? You can't really build that much on Bitcoin's blockchain in terms of smart contracts. It's not that scalable. And I've seen a big shift to a lot of proof of stake consensus mechanism, which is another mechanism to secure a blockchain. And so while I agree with everyone on the panel that it's overblown in terms of the spotlight that's being put on the electricity used by Bitcoin miners, I still look at the question of, do you need to spend any when there are alternative consensus mechanisms that have been proven to be as secure, such as Cardano and Polkadot, and, you know, Ethereum's moving to a proof of stake blockchain. So, you know, one of my questions is this something, you know, that needs to, you know, be as big, right? With the scalability of other blockchains and the ability for them to have disruptive applications like NFT and DeFi built on top of them. So I think that's a kind of a bigger, higher level question to look at, whether or not, you know, what consensus algorithms should we use to secure blockchains instead of how much does Bitcoin's blockchain use in electricity compared to other industries? Because it's kind of irrelevant as far as I'm concerned.
Well, there's going to be room for everybody, whether it's proof of stake or proof of work. Like, there's inherent benefits in all of those. And this is going to be such a huge part of the growth of everything in cryptocurrencies and DeFi that there's going to be a place for everybody. And there's lots of room for this pie to grow and people to play into it. And we're going to find, as the ecosystem grows, how people fit into it and what's best to use in which circumstances.
Richard, I want to ask you, have you tried mining cryptocurrency personally, or?
We used to, actually, Diginex used to mine crypto at the beginning of the company. Actually, to Sheldon's point, we actually first started mining in northern Sweden, where there were hydroelectric power stations that had been used previously by the lumber industry that was no longer being used. So it was stranded, orphaned electricity, exactly the same situation that we were effectively incentivized to be using. I mean, to your point about Kazakhstan, and what they're trying to do is drive industry to the country and attract miners by giving them zero cost energy, which is, you know, they're able to generate through, you know, some of these clean energy projects that they have going on there as well. So, you know, everybody's trying to drive the industry. It was the point that Sheldon mentioned. You're driving the economic community in that particular region. And I think this is actually a very attractive part of Bitcoin mining. So yeah, I think it's a very promising part of the industry.
You've mentioned that you did do it in the past, but why did you stop?
We stopped it because we were mining Ether with GPUs. We knew that the machines would have to be replaced on a fairly regular basis, upgraded. And so what we ended up doing was just selling it at the height of 2018 peak in the Ethereum market.
Unfortunately, I've been informed that we have 7 minutes left, and we have to give the audience what they want. And the last, I just have too many questions to you guys. So I'm going to follow up and write an article about this. So my last question is actually the obvious one. Do you trade cryptocurrencies? What's in your portfolio? What kind of trading tips you have, and what kind of projects are you looking into? And please don't tell me that they are meme-based cryptocurrency or dog-inspired cryptocurrencies. Just please don't. Okay, well, I think we'll start with Charles. Do you trade? What's in your portfolio?
In our company's portfolio, we have Bitcoin and Ethereum. We're looking to add Cardano and a bunch of others. Personally, I own a lot of different cryptos, probably 10 plus, but I do not own any meme-inspired cryptos. So.
Okay, and do you have any trading tips for people who are just starting and look around into the cryptocurrency trading world?
I'm not an active trader. I've taken more of a buy and hold, and I've scaled into my position starting back in 2017, 18, 19, and it's panned out very well. I think cryptocurrencies are going to be the foundation for Web 3.0 and the backbone of money in the future. So it's really a long-term bet. If you buy and it goes down, don't panic. Unless you want to actively trade and look at technical analysis, I would say. Just if you have some disposable income, put it in some top cryptos or crypto companies like some of the ones here, and just let it be.
So what we in the cryptocurrency space describe as hodler, right?
Indeed.
Okay, Richard, do you personally trade?
Yeah, I do. I trade every day. We have an exchange, so I use that quite actively. I think that Charles is absolutely right. The majority of your money should be in Bitcoin and potentially a bit of Ethereum. But if you're looking to have a bit of fun and play some of the other coins, I think there's some really interesting stuff going on. Some of the coins that Charles mentioned, but I think Polkadot's very interesting. I think Chainlink and the Graph are effectively different approaches to the Oracle problem that are very interesting. Our own exchange token, Equo, is a very interesting coin. People should take a look at. You can only buy it on our exchange, Equos. And the other utility coin that I would recommend is probably BAT, Basic Attention Token, which I think is very interesting.
Any meme-inspired cryptocurrencies?
Yeah, no, I'm not into dogs.
That's what I like to hear, actually. I've interviewed a lot of people, and I really love when people from the cryptocurrency space invest into projects that bring value. I'm not going to be tired of repeating that. Sheldon, have you traded? Do you actively trade?
I have. I wouldn't say I'm so active. I mean, as a company, we hodl Bitcoin and Ethereum, which are two of the cryptocurrencies that we mine. We look at a lot of different currencies and different ideas. So, we're sort of active that way. But when we look at currency, we look at investments. So we say, what as a company should we invest in? Where do we see that currency going? So, do we see a future in, one of these tokens, or Litecoin or Bitcoin SV or all these other ones, and we say, should we get our resources behind it, invest in it? And so I look at the utility of that coin. What is it doing? What does it achieve as a coin? And if we see a market for it and say, yeah, this achieves and solves this problem by using this coin, then we'll get behind it as a company. And me personally, I'll get behind it and invest in it. But then we'll start putting resources into it and supporting it by mining it or staking it or whatever we may do. So that's how I think about coins, is I always look at what's the end game of what it achieves in society or for business.
And then in terms of how much you should wait for the coin to actually go up, you can wait for a long time, especially years in the crypto space. How do you define long-term value if this cryptocurrency is actually going to go in price? Because as Chainlink, right? So this is a blockchain Oracle platform. It has not seen a lot of interest for the past couple of years, but it is up right now. But people are just starting to notice it right now. So how do you define what kind of projects are going to go up? Yeah, Sheldon, that's still to you. Okay, if Sheldon is not responding, can you hear us? Just let us know.
I can hear you.
Jeff, please tell us about your portfolio, your trading experience, and what we should look into.
Well, we offer a different type of trading experience because we are, as you said, a hodler. We're long-term focused. We're bullish on Bitcoin. And our trading is really through a securitization mechanism because we're putting it on our balance sheet. We're asking people to use us as a bit of a proxy for Bitcoin by investing in our stock. Easier to get in, easier to get out. And we basically have a leveraged return based on what's happening with Bitcoin. So our trading is more in our paper, in our stock, and than actually doing something creative with our Bitcoin portfolio right now.
But are you looking into different other cryptocurrencies that might potentially have value?
Right now, like we're constantly looking at diversification and risk approaches and what we should be doing next. So we've looked at doing other currencies as well. We're not there yet, but we're not trading our existing Bitcoin portfolio for anything right now. It's being good use for the value of the company, and there are opportunities to actually invest it elsewhere and improve liquidity, get returns on it. We haven't gotten there yet, and as Sheldon mentioned, the auditors make sure that we're doing things very, very well, and we've got a top 4 auditing firm, so they keep us pretty tight and on a short leash, but also our governance is very high, and we want to protect the value for our shareholders. So that's where we're coming from.
Understood. Sheldon actually said that he lost audio. We can see you.
I'm back. Sorry about that.
Oh, you're back. Yeah, but unfortunately, we don't have any more time. Brent, if you hear us, can we take questions from the audience? And if
Hey,
hi.
how did it go? That was fun.
Hopefully good. I loved it all the way. But do we have time to take questions from the audience?
Unfortunately, we do not, Catherine. I know.
Oh. No. Okay. So then I have to thank you all for joining me for this panel. It was very informative, and I hope our viewers really enjoyed that. So I'm just gonna look forward to talking to you all again.
Thanks, Catherine.
Thank you very much.
Thank you, Catherine.
Thank you so much.
Thank you, everybody, for that awesome panel. And it does kill me to have to say, like, no, we can't do any more questions because obviously you guys are very excited to get some questions in. I will remind, though, that a couple of the panelists there are going to be on later today with some of their own presentations. We're going to be seeing Richard again today. That is at 1:15 p.m. Eastern time. We're going to be seeing Charles again at 1:30. And then a little bit later today, we are going to be seeing Sheldon. That's at 4:45 p.m. And you just saw, maybe for a second, our next presenter. He is Scott Burton. He is CEO. There he is.
Hello.
Scott, how's it going, man?
Good. How are you doing?
I'm doing super well. You are CEO of FansUnite Entertainment. Ticker is FUNFF on the OTC. On the Canadian Stock Exchange, it is ticker FANS. You got a good one there, FANS.
Yeah, thanks.
Yeah, and actually your stock is up a good little bit today. I'm looking at my Benzinga Pro watch list here. Your stock's up about 11%, but I will let you take it away, sir.
Great. Thanks for having us at the conference. Someone's saying they don't see the presentation. Let me just
I see it popping up there. There you are.
Okay. All right. There we go. I'll get going. So yeah, as mentioned, Scott Burton, CEO of FansUnite. We are an online global gaming company, so we cover traditional sports betting, esports betting, and casino. Operate mostly outside of North America until recently. So I'll walk you through the arms of the company because we're really sort of 3 parts of the business. We have B2B, which is our backbone and the technology that we build around online gambling. Then we go B2C. We do have some direct-to-consumer sites that we operate. And then we have our games division. All right, I'll skip that. You can read the disclaimer later. So just quickly on the main points, we're in a massive market. It's become a lot more interesting in the last couple of years with the U.S. changes to the repeal of PASPA, which allows sports betting in states at a state-by-state level. We have some changes coming in Canada, so it's going to be a big period of growth for the coming years, when we've only seen about half of the U.S. regulate so far, and then Canada still to come with some pretty big changes here in Canada where we're based. We're at a major inflection point in the company. So we have the multiple divisions I mentioned, the three. All of them are hitting their revenue now, and we've seen some pretty big revenue ramps in our B2C business. B2B is really starting to take off, and then our games, we expect a lot of growth in our casino-style games this year. And then we have lots of milestones that are still to come. So we think it's very early in our story, especially with the changes in North America. So we'll walk you through a number of the things that we've got coming up. This one is a look at the organization. So at the top is the parent company, which is FansUnite. FansUnite started trading last March on the CSE. We're now on the OTCQB under FUNFF and Fans in Canada here. Right when FansUnite listed last year, they completed their first acquisition, which was a direct-to-consumer site you'll see called McBookie.com. McBookie is a UK-focused or UK-licensed sportsbook focused on the Scottish market, so it has a bit of a niche market. In August of last year, there was a merge completed with Ascot Entertainment, which is the company that I had founded originally. So we merged Ascot into FansUnite, which was founded by our current president, Darius. We really had a technology backbone, so we had the infrastructure that FansUnite was looking for. So we could come in and support McBookie, for example, and then build out more on the business-to-business side. But we also had a lot of experience in the esports space. So we're one of the first groups to get into esports betting, starting with our first site, Esports Pools, back in 2014. We were the first esports betting site to get licensed in the Isle of Man. So a big history in esports. FansUnite was looking for an esports component. Ascot, we were looking to be public, but also get back into some traditional sports to show the versatility of our platform and how we could support a full suite of online gambling products. And then below, you'll see some of the direct-to-consumer brands, as well as our B2B platform, the Chameleon Gaming platform. Just a few of the things that have happened since the merge. So that's when we announced it last year, was the merge of Ascot and FansUnite to create the company that we have now. We did a $5 million financing at that time. Shortly after, we announced a partnership with Gameco, and this was really our first look at the US market. So previous to that, we'd only operated outside of North America. Gameco is a more traditional casino provider, so they provide video game themed cabinet casino games to the brick and mortar casino space. So a number of licenses across the US. Excuse me, we're being asked for more esports betting online products. So we partnered with them to take our esports betting platform into the US. We have a division called Ascot Games, which is building out our own online casino games with esports and video game themes. We announced our first deal for distribution of those games with the EAR. So we're just finishing up integration of our games into the EAR platform. That will open up about 120 online casino and sports books around the world to take our games. And then our direct-to-consumer site, McBookie, had their biggest revenue month in a 10-year history, up over 433% on revenue. So with McBookie and the acquisition, we really wanted to bring some scalability to them, and we've done so. So last year, we saw them double revenue from the previous year, and we expect this year to double again, and then same next year. We moved our listing from the pink sheets to the OTCQB in November. In December, we got our first new gaming licenses. So these were both in Malta under the Malta Gaming Authority. This gives us access to over 150 countries from that location with our gaming products. And we got two licenses, excuse me, B2C and B2B. So B2B allows us to sell our software into other licensed operators. So that could be our esports betting platform, it can be sportsbook products, or it can be our games. Then the B2C allows us to operate our own direct-to-consumer brands under that license. And with that, we can also white label. So if somebody wants to get into the betting space with their own brand and user base, we can give them a white label, which means they don't need to get a gaming license. They can sub-license from us, and we handle everything else. We handle banking, payments, the age identity location verification, risk management, everything top to bottom, and they can just focus on marketing and customer acquisition. In January, we closed another financing of 13.4 million. This is Canadian as well. So that brings us to a really good cash position. As a company, we have approximately $15 million in the bank, probably another 8 million in unexercised warrants still to come in, and revenue ramping and no debt. So we're in a very strong position from a balance sheet perspective. In March, we submitted an application for 2 additional gaming licenses. So we consider Malta to be one of the most flexible. It's a tier 1 jurisdiction, the oldest one in the EU, gives us great access to the EU. UK is considered the gold standard of gaming licenses. So we'll be, we should be receiving our UK licenses within the next 3-4 weeks, both a B2B and B2C again. And that will allow us to move McBookie into our own license structure as opposed to sub-licensing, which they do now. So just some highlights. We've got 4 B2C sites live now. You can see McBookie, Vamos, FansUnite, and Esports Bets. FansUnite is our social platform right now, so not real money. Esports Bets is our existing esports betting site. Vamos GG and McBookie I'll talk about in a few more slides, but well over $350 million in betting volume now. We have a number of B2B deals signed for our Chameleon platform. Over 300,000 registered users through our own brands, and a number of major partnerships that we've announced in the past with people like Pinnacle, IMG. So to talk about our product, we've got Chameleon and Ascot. These are the B2B offerings. So Chameleon is the full suite of player account management system, risk management, trading, all for sports betting for traditional sports, esports betting, and then we have casino plugged in as well. So in addition to our own casino games, currently you could access 6,000 casino games from other providers through our platform. Again, we can handle everything throughout, many licensed jurisdictions. The Malta license gives us 150 countries. We have Curacao license, about to get UK, and then making some moves into the US. On the Ascot Games front, this is where we saw a bit of a gap in the space of casino games online. We know that it's a huge industry. We know that traditional sports books want to move people over to casino games if they can, if they get them as a sports bettor. So we, with our esports background, realized that the demographic we were capturing is about 18 to 30-year-olds, very sought after demographic. But once you get them in for betting on esports, struggle to get them into the casino. So we're building a suite of games that appeal to that same demographic, video game themes or content or look and feel. So we have 4 games complete right now. You see 2 of them there, and you can go to ascot.games, our site, to see more. We're just finishing up our 5th game now, and we anticipate having 10 done this year. As mentioned, the distribution model is through aggregators, so we integrate to them, and then they distribute to hundreds or thousands of sports books and casinos. So the first integration is underway, and then we'll be adding more this year. On the B2C, let's talk about 2 of our main brands at the moment. One is McBookie, which generates a lot of our revenue currently. It was the acquisition that FansUnite did, really focused on the niche market in Scotland, so it's capturing a good market share in Scotland and not necessarily competing with the larger brands in the UK. And that's a bit of our model for B2C. We don't look to necessarily be a brand in the US, for example, because it's dominated by 4 or 5 big players. But we find these areas, especially when we have the licenses and the technology, we can very efficiently launch brands, and McBookie is an example of one of those brands we have. As I said, doubled revenue last year, we'll double revenue again this year, and looking for lots of things to come with that brand. The other one we recently launched is an example of us being able to go into these markets very quickly and hyper localized. So Vamos GG is an esports first betting brand focused on the Brazilian market. So it's all in Brazilian Portuguese, launched on our own platform. All the payment methods are localized to Brazil, the language, everything, all of the marketing. So about to announce a number of things going forward with Vamos GG, but once we get through this, then we can continue to do these localized brand launches off the platform. Very strong board. So myself and Darius are both on it. Darius founded FansUnite. I founded Ascot. Harish is in Asia, and he was the former president of Paddy Power Betfair Asia, now Flutter, biggest betting group in the world. Chris Grove, I think, is one of the top minds in the U.S. sports betting space and poker. So if you follow that space, you'll have come across, some of the work Chris does, either through his work at Eilers and Krychek Gaming or some of his investment work. And then James Keane has been around for many years in the online gambling space, going back to the original days of online poker. He was on the founding team of Paradise Poker, managing director of Sporting Bet, and now he's the CEO of a social casino game company. Licensing I've really touched on. So we've got the Malta ones, which gives us the 150 plus countries based out of Europe. Curacao is a very flexible license regime that we have access to. Weeks away from obtaining our UK GC licenses. In the US, our Gameco partnership is helping us approach companies through their licensing, but we've also begun the work to get our own licensing in New Jersey, and then we'll look to expand through more states this year. And then Canada, we expect some very good things this year. They're changing the federal betting laws here to allow single event sports betting, but we're also seeing some of the provinces talk about opening up to outside operators. And we think we're well positioned from a number of fronts, one being here in Canada, one of the few platforms in Canada, as well as having licenses from places like Malta and the UK, which we know Canada will look for some guidance. So just to finish up, kind of where we started, but we know we're in a big space, and some of the betting numbers coming out of the US have been pretty massive, and we're only halfway through regulation there. We have multiple revenue streams in the business. So we have B2B, we have direct to consumer, and then we have the casino games. So 3 revenue streams to pull from, and they're all either generating revenue now or about to turn it on. And then with lots of things ahead of us, so the catalysts still coming, UK license. We expect more US expansion, more B2B deals will be being signed. Our games will be out into aggregators this year and go from, say, 5 games we have now to 10. And then, we've done the one McBookie acquisition, which was a pretty big one for the company. The merge was a very transformational event for the company between Ascot and FansUnite. We're in a good cash position. We're generating revenue. So M&A will be a big part of our strategy going forward. So I think we're getting close on time, so I'll end there. My contact information is there. You can reach me at scott@fansunite.com. Happy to answer any questions through that, and we may have a couple of minutes here to answer some now. So I will stop my speaking and let the moderator come back.
Yeah, why not, Scott? Right? Let's use a little of the time here while we got you. We do have a question, and just to say that again, fansunite.com. We do have a question here. Where did it go? There it is. From Benzinga's own Mitch. I'm in Colorado. How can I bet with FansUnite?
Yeah, it's actually a good question, a good location.
Thank you, Mitch.
Yeah, thanks, Mitch. So currently, you can't bet with FansUnite right now. In Colorado, but actually the first US deal we announced is in Colorado. So we've partnered to provide an esports betting platform with the Southern Ute tribes. They have the Sky Ute Casino. And so they'll be launching with our esports product. I don't know when. We've done all the work to get them ready. Now it's just up to, regulators when they turn that on. So today you can't, but hopefully very soon you'll be able to access a site that shows our platform. If anybody's in the US and wants to see a demonstration, just reach out to me and I can get a demonstration link over.
Awesome. What was that email one more time for us?
Yeah, Scott@fansunite.com.
Awesome. So I got a couple questions here from myself. So, you know, when a user is looking at a lot of the different online betting platforms, like what are some of the differentiators that you guys offer? Is it execution of the bet? Is it the, you know, user interface? Like what should people be looking for when they're trying to make a decision?
Yeah, I mean, I think the first one is look to a properly licensed and regulated site. So, you know, it's one of the moves in Canada is to allow operators to come in and get licensed, because so much of the betting activity in Canada is going offshore to unregulated sites. So as a protection for the user, I mean, that's the first step I would take. What we really started out to do in terms of esports betting, and, you know, we started in 2014, 2015, is we wanted a highly engaging real-time product. So we actually we're the first ones to bring out stream betting, which allows you to watch a live stream of the actual video game event. So Counter-Strike, League of Legends, Dota 2, and then bet real time as the action's going on. So every 20, 30, 40 seconds. So that's what we were looking for, is more engagement, get users on site, stay on site. So you'll see that differentiator from us in terms of our esports product. You know, the things we're bringing into the platform on sports betting, I think would be also pretty unique for a US user. And when we're able to show that here, I think you'll see a lot more around specials. So not just regular pre-match, you know, who's going to win, who's going to lose, the over-under, but a lot more prop style bets, more in-play product, but then things like cash out. So the ability to actually limit your loss or take part of a win. So actually, while, you know, we'll be offering cash out type functionality. Bet Builder is another one that would be unique, where users can build their own parlay bet within a game. So you can take a soccer game, for example, and say, okay, on this match, I want to bet, you know, who's going to score first, how many yellow cards there's going to be, how many corner kicks, and build your own bet. So looking for unique things like that is, I think, something people will see with our platform.
Awesome, Scott. Really good presentation today. Thanks a bunch for coming on. Scott Burton, he is CEO of FansUnite Entertainment.
All right. Thanks a lot.
Yes, sir. Have a good weekend, sir. Cool. How's everyone doing out there? I'm like starting to hit my stride. I might even put on my Dow 100,000 hat here because I'm pumped. Yeah, that was it wasn't as funny as I thought it was going to be. Let's, you know what? I wanted to ask real quick in the chat, who or what has been everyone's favorite presentation today so far? Throw them in the chat. What has been your favorite presentation? Whether it's been one of these individual company presentations, that educational segment with James Putra, or our blockchain crypto panel. Let's see what the chat's got to say. And then also, let's get back over to one of our questions here for a contest. We are doing a contest. It's some trivia questions. And a quick reminder, I'm going to pull the next question up here in a sec, but a quick reminder that for people that are answering the most questions, I think that's how it goes today, you could win a chance to win 3 really awesome prizes from Benzinga. You can win a lifetime subscription to Benzinga Pro Lifetime. That's a long time. We could win a lifetime subscription to 2 of our newsletters. There is a breakouts newsletter, and then there is also an options newsletter. And so let me pull up our next question here. Next question, question 2. What is a 50-day DMA? Is it the average closing price of a security over the past 50 days? Somebody jumped at that one right away. Is it the amount of DMA pollutants a company can emit and still be considered, quote, clean tech? Or option 3, is it a debt margin assessment, the maximum amount of debt a retail trader can take on when trading on margin? Give you a little time to answer this one. And again, we are going to have these questions open all day. I asked question 1 a little while ago. you can still answer that question. If you use this QR code up here, scan that QR code, you can get access to the poll here. And these questions are going to be open, so go ahead and answer them throughout the day. And let me check back in. I am going to stop my screen share here so you guys just see me. And let's see. Oh, let's do some more here. Why not? Yeah. Next question, question 3. Ooh, name this chart pattern. There's a little zoom in on that chart pattern. You got your nice neckline here. Yeah, it looks like one top up here, maybe top up here, and then back down she goes. Let's see what the options are for this one. Is it called a double top? Is it called a head and shoulders? Or is it called a reverse head and shoulders? Is there a fourth one too that I can't see? What's the fourth one? I can't see it. This thing's in the way here. I see a T and the top of an I. It looks like an L. Triple bottom. That's it. That's what I wanted to see. So fourth option, triple bottom. I probably missed an option in that last one. We'll forget about that. Don't worry about that one. And let me check in with the chat here and see who had a favorite. Oh, Benzinga, thanks for the compliments on my Dow 100,000 hat. I just found it around the office and thought could play around with it. So we have one saying FansUnite was their favorite. We have two saying FansUnite was their favorite. Lone Wolf is saying he or she loved the blockchain panel. Chris saying he liked Elys and also FansUnite presentations. Chris is like big into sports betting and gaming, so he would say that. Lone Wolf saying also excited for the presentation coming up from SurgePays. That is at, where's my schedule here? Why don't I just do the quick screen share? So that one is SurgePay is coming up at 1 p.m. Lone Wolf, if you didn't know. And you know what? I don't know if I had my screen shared when I was doing that last Slido. So let me see here. I get that back up. I don't know if you guys saw this. Jeez. Name this chart pattern. Neckline. I see a 1. I see a 2. And it looks like a sell-off. Cool. How's everyone out there doing in the chat? Yeah? And let's, why not? I mentioned a few minutes ago, for a couple of our presentations ago, I mentioned that one of, I think it was FansUnite actually. FansUnite had, close my, oh, let me pop this open for you guys here. This is Benzinga Pro. I showed this off a little bit ago, and before FansUnite came on, I said, you know, stock's trading up a good little tick here. And what I did is, let me close the chat here. What I'm looking at over here on my left-hand side is the watch list function in Benzinga Pro. In Benzinga Pro, there's on this vertical bar over here, there's a bunch of different tools. There's a news feed. This is where you get all your information, whether it's aggregated, curated, exclusive content from the Benzinga Pro news desk. That's what I do most of the day. I'm a news desk guy. Or whether it is raw information coming in from corporate publicly traded corporations via press releases or SEC fines. You can do all that stuff on here. Why don't I just pull it up and show you guys? Over here on the right, popped over the news feed, and it's probably a little small. So let me give a couple of zooms here. Why not? Look at, here's some coverage from this event. What do you know? So how the news feed works is, this is a traditional news wire, traditional in that it is popping in news when something is being broken. It's not traditional in the way that you can filter some of this information. You can filter by a ticker here. Let's see what kind of coverage we got for Virios Therapeutics. So you can type in a ticker there, and it'll show you just the news on this company. And what I like to do is I like to just watch this feed. This is called our BZ Wire feed. This is from our human reporters. They're typing in all this information. Also, content that's going to benzinga.com you can find in here. And you can tune into this to be up to speed on news that you didn't know what was going to happen, literally breaking news. But you can also use this feed to find more information about a company you already know you're looking for. So let me give you a quick example here. And what I'm going to do is I'm going to hit my sources button here, and I'm going to turn on a couple of our other sources. Benzinga Signals, that is our automated solution. Things like trading halts, circuit breakers, 52-week highs and lows. You can get alerted to these things right away. It happens. It's automated. Happens in a second. I'm going to turn on press releases. I'm going to turn on SEC filings. Those are two of the top ways that a lot of the information publicly traded companies are getting to investors come through. And you can also turn on partners here. And then what you can do is you do a ticker search. Like let's just do PFE. Why not? That was the last one I saw. You can see a bunch of option alerts here. You can see there was a partner article over here. Here was an SEC filing from Pfizer. You can look at it right here in Benzinga Pro. You can see, let me find a press release here real quick. I don't see one. I guess Pfizer doesn't put out a ton of press releases. But anyways, I started walking you guys through all these different tools over here on Benzinga Pro, newsfeed, details. And the one that I stopped at here was watch list. What I wanted to do is make a watch list for all of the companies that we're going to be presenting today. We can actually see how these companies are doing very easily. You can see Elys shares up 17% today. Bitfarms shares up 10%. And actually, I kind of had a little ringer here that I wanted to show you guys just as a demonstration. So here's our schedule. As I was going through and researching some of the companies that are going to be on the stream today, I was using Benzinga Pro to add them to the watch list, and then using this details tool over here, another of those buttons. You can scroll down to the bottom and you can see a really quick description of what the company does. And I saved a couple. I think I saved like DMG and Aptorum. I did not add them to my watch list. I'm going to add them to my watch list now, just so you can see how easy that is. So the ticker for DMG is DMGGF. So go up to my search field here, DMGGF, and there it is. We got a little auto suggest. I can click there. Boom, it gets added to my watch list. That stock's up 12% today. And one more here, Aptorum. That's APM. Boom. Aptorum, click it. There's added to my watch list. I can sort some of these columns up here if I want to. I can expand these. I can click on a ticker here, and it's going to pop it open in the details tool over here. I can see news right here. I can get a little description down here. Again, this is Benzinga Pro. This is a real-time news platform. You guys should definitely try it out. I'm around on Benzinga Pro all the time if you want to get a hold of me for whatever reason. Cool. So next presentation here we got lined up. Who's excited? We have Rory Cutaia. He is founder, president, and CEO, and also the chair of VERB Technology. That's ticker VERB. Rory, what's going on? How are you, sir?
Thank you. Thank you. Great to be here. How are you doing?
I am doing awesome. This is a blast. I'm having a blast so far. I hope
the
audience out there is too. I'll let you take it away, sir. Have at it.
Okay, terrific. Well, again, I'm Rory Cutaia. I'm the founder and CEO of VERB. And thank you all for joining me. I appreciate the opportunity to tell you all about VERB and really the incredible year that we're anticipating now in 2021. So I want to give you all a brief overview of who we are, what we do, and then I want to jump to what we believe will be the greatest value creator for ourselves and our shareholders for years to come. And I'm talking about live stream e-commerce. I'm going to talk about what it is, why it's going to take this country by storm, and how VERB is incredibly well positioned to lead the disruption that we expect will impact online commerce as we know it. Let me move up a couple of slides here. So let's start with who we are and what we do. We're a software company, a SaaS-based recurring revenue business model with what our customers say are the most effective sales tools on the market today, because Our suite of sales tools, which comprise our sales enablement platform, are based on our proprietary interactive video technology. Now, this is technology that produces 600 to 1,200% increases in sales conversion rates, 3,300% increases in sales rep retention rates. We've now had more than 2 million downloads of our products and well over 25,000 4.9 star ratings on the app stores. We're in 60 countries, 48 languages, and we just reported our 2021 first quarter earnings yesterday, and I could tell you that our SaaS recurring revenue is up 38% over the same period last year, up 12% over last quarter, and continuing to grow at a really nice clip quarter over quarter. But look, what we believe that when we look back at this quarter, we're going to recall that this is when the pivot began. This is when all of the work and development time and all the trials and tribulations, all of that was validated, because we believe that what we've begun to deploy literally this week, and what we will be continuing to deploy throughout this year, will demonstrate the true value creation opportunity that VERB represents. So let me tell you what I'm talking about. Let me show you. So I want to start with VERB Live, our truly innovative live stream e-commerce platform. So for those of you who don't know what live stream e-commerce is, it's the ability of consumers to click in a video during a live broadcast, just like we are right now, to purchase products, not just click on the text and static images on popular websites, but true click and purchase capability for the masses right in the live broadcast itself. And we're bringing that technology to everyone, allowing anyone to host their own live QVC or home shopping network style sales channel with clickable in-video purchase capabilities, eliminating friction from the sales process. And obviously, that's how you spell sales success. Eliminate friction from the sales process. That's right. Your viewers, they don't have to go call a phone number, or they don't have to go to a website to purchase the products that they're watching live. We're delivering this capability on both mobile and desktop. It's fun, it's quick, it's intuitive, it's easy to do. So how do I know that this is going to be really big here in the US? Well, here's how I know. It's already started in China. They're almost 2 years ahead of us here in the US, and it's just beginning here now. But let me give you some of the data points to illustrate how really meaningful this is. So in China, they have something called Singles Day, which is sort of like our Black Friday. It's on November 11th. So going back now, November 11th, 2019, one company, one person using live stream e-commerce sold $145 million of merchandise in one live stream. Now let's fast forward 12 months later, just this past November, again on Singles Day in China. One person reached 37 million live viewers, sold $425 million worth of merchandise. Combined sales through live streams on that day alone were $75 billion. In 2020, 500 million people purchased products through a live stream in China. More than $136 billion worth of products were sold just in 2020 alone through a live stream in China. Let's talk about the US market. As I said, it's really just starting here. But here's why I believe that it's going to be even bigger here than it is in China. Because look, here, think about it. Over the past couple of decades, people have already been conditioned for live stream buying through decades of QVC TV and home shopping network style TV. And today, look, people have adopted webinars and other video streaming products to promote their products and services. You may have heard the term social selling. Well, we've taken that to an entirely new level. Let me tell you what we've done with live stream selling. Let me tell you about our attribution feature that we just released this week. Now, so think about this. Not everyone wants to be in front of the camera, right? Not everyone feels comfortable hosting a live event. Not everyone feels confident pitching anything, product, a service, or pitching themselves on a live video, right? But we all know somebody who does, right? We know that person. So this is where our new attribution feature really becomes the killer app. With VERB Live Attribution, you can send your prospects and customers to watch that person's live stream. And when any of your prospects or customers make a purchase while watching that live stream, you get paid. The VERB Live platform tracks it all and is able to attribute each sale to the correct person that invited the purchaser. Look, that's how we all win. And that's how we expand what we believe is an already massive total addressable market for live stream e-commerce exponentially. Attribution is our proprietary technology. We conceived it, we developed it, and now we've just launched it. We have several different pricing models, including subscription-based pricing, as well as participation through a percentage of the sales done through the platform and combinations of both. So let me show you how it works.
Imagine being able to refer your prospects to watch a leader's live stream broadcast and actually get paid for the purchases your prospects make. Well, now you can. VERB Live makes it easy to host a live stream broadcast to promote and sell your products. This powerful tool allows you to place clickable Buy It Now buttons right on the screens of all your viewers, so they can click to purchase without ever leaving the live stream, eliminating friction from the sales process. It's no wonder VERB Live users everywhere are raving about how amazing Live is. And it just got better. Our new team attribution feature allows you to invite your prospects to upcoming live streams hosted by top leaders and company executives and get paid when your prospects make a purchase. Simply select the scheduled live stream in the app and share it via social, text, or email to your prospects and contacts. When someone you referred clicks on a button during the presentation, you will automatically receive credit for their new enrollment and/or product purchases. For example, let's say Jane schedules a VERB Live sales meeting for her prospects to purchase products. Jane invites Tammy and Dave to attend, and using the app, they each invite others to attend. When Tammy's prospects click on a purchase button during Jane's VERB Live meeting, they're taken to her site for that purchase instead of Jane's. The same is true for Dave. After the meeting, Jane receives a report telling her which of her team members invited which guests, how long each was on the video, and exactly what they clicked on. Live is not only the ultimate live selling tool. With team attribution, it's the ultimate tool to help grow your team. Even new members can invite guests to leader-hosted meetings and get credit for any of their purchases. Gone are the days of manually following up with every contact. This is an absolute game changer. With VERB Live with team attribution, you can take live meetings to the next level.
So that's our attribution feature and VERB Live. And look, we're really excited about this. Live stream e-commerce is just really starting here in the United States. We do believe, for the reasons that I've said, it's going to be, I think, way bigger than how already massive it is in China. And this attribution feature really just takes it to a new level. So I've got another catalyst about our business that I'd like to share because it's imminent as well. This is called VERB Mail. And again, another major value creation catalyst for our business. It's the integration of our interactive video technology into Microsoft Outlook. And here's how it works. So Outlook users who subscribe will have a new button on their toolbar that says VERB Mail. So clicking this allows users to create a quick video mail right in Outlook and then add interactive icons such as Buy It Now, among other interactive features, and then send it out through Outlook. So look, videos become the preferred means of communication. Nobody really wants to read anything anymore anyway. And now you no longer have to leave Outlook to create and send your video, and even better, a VERB style interactive video right in and through Outlook. So look, there's over 1 billion Outlook users worldwide, and we expect that many of them will likely be drawn to this kind of feature set. We anticipate that enterprise users will be able to add it to their Office 365 subscription, making it available to their entire organization. So let me show you how this works.
Well, it's official. Video is now recognized as the most effective tool for sales and marketing. Professional salespeople know that VERB's interactive video sales tools allow their customers and prospects the ability to click right in the video to purchase products and services, essentially eliminating friction from the sales process. Our clients have reported increased conversion rates of up to 1,200%. And we've now had almost 2 million downloads of our apps by sales professionals all over the world. Now it's time to bring this incredible technology to the masses. So we've made it available to the 1 billion users of Microsoft Outlook. Just click the VERB Mail button in Outlook and you can send an interactive video to anyone in moments. Want more? How about this? You can track when your prospect or customer watches that video in the VERB Mail library, allowing you to follow up immediately while their interest level is peaked to close that sale. Unless, of course, they've already clicked the Buy It Now button you placed in your video, in which case your work is done. With VERB Mail, you can add interactive buttons to an existing video or create an entirely new one, all within just a few minutes. Imagine being able to skip the typing in favor of simply recording a quick personal video and adding buttons that allow your prospect to download a proposal, quote, or contract, or anything else. And with multiple packages to choose from, you can pick the right one for your budget. Welcome to the future of email. You're going to love it.
So that's VERB Mail. You're going to see that just in the next several weeks in the beginning of June. And we're really excited about that. But look, this is just the initial feature set, which we think all by itself is a pretty compelling value proposition. But I want to give you a glimpse of what's to come with our Microsoft Outlook integration, and because we're going to be offering a whole series of updates and upgrades that'll come every few weeks. So picture this. And this is specifically for professional salespeople. You're going to be able to send your VERB Mail interactive video through Outlook, and then the moment when your customer or prospect watches that video, you're going to get a pop-up message on your screen, whether it's on your computer or your mobile device, notifying you. So let me stop there for a second, because we actually already have that capability. We already have that feature built into our VERB CRM application, which has really been our bread and butter over the past couple of years. And I don't think I'm going to have time to get to that. But here's where we take that to the next level. So that pop-up message in Outlook not only tells you that your video is being watched at that moment by your prospect, but it also gives you the option to click on that message and decide if you want your prospect to know, while he or she is watching your video, that you're online and available right then and there to chat with them if they want. Now check this out. If you select that option, a message pops up on the screen of your prospect while they're watching the video, letting them know that you're available in that moment if they want to chat with you. They can click on that message, and then it will automatically launch a two-way interactive VERB Live, like a Zoom-like session, except with VERB's proprietary e-commerce capability built in, right then and there, while their interest level is peaked. And this is how salespeople will be able to eliminate friction from the sales process. And while we expect to deliver this feature this year, as I said, VERB Mail will indeed be delivered actually just in the next few weeks, on time in June. So I think I am kind of just about out of time here. I'll just mention, look, we've got IP protection around this on the work we've done over the past many years, with patents issued as well as patents pending. I hope that I've got some time for Q&A.
I think you do, Rory, and I have so many questions, like in a good way. This stuff is really intriguing. We did have one good question from the chat. Let me find it real quick, and I pop it up on the screen. I think you're gonna like this question too. BZ Films says, can you stream a live concert and utilize this technology?
Absolutely. Concerts, in fact, look, one of the things that we're predicting is going to occur, and we really intend to be at the forefront of it, is you're going to see a convergence of pure entertainment and shoppable capabilities. So look, you're watching a concert, you're watching your favorite artists, you can click on that artist and buy the t-shirt, buy the cap, buy the guitar. I mean, that is the capabilities of this, and the ability to do that without disrupting the entertainment value, we think is going to be massive. Think about pure entertainment, pure sitcoms and things like that. Instead of commercials, you'll be able to click in the content where that advertising is incorporated into the storyline itself. Think of how much better that's going to be. And an interesting stat out of the information that's coming out of China that we are really tracking very closely. You saw how massive that growth has been of live stream e-commerce. Well, 30% of the people that are going to those live streams are reporting that they're not going there necessarily to shop. They're going there for pure entertainment value. So that really validates our proposition that we're going to see this convergence. We're going to be right there in front of it.
Love it, Rory. Another one I'm going to pop up on the screen here. Have you heard of any other companies doing something similar within the US?
We've seen a handful of startups coming into the space, no public companies yet. All of them have some interesting take on it. None of them have our capability where we're actually placing those interactive buttons right there in the video where you could point to them, move them around the screen. We haven't seen anybody with that. And as I said, we have some IP protection around that kind of stuff. But look, we're believe it or not, we're actually hoping that we're going to see more companies coming into the space, because what we're talking about here is a shift in consumer behavior, and that's going to really drive this. And no one company is going to be able to accomplish that alone. Now, we do believe, and we've seen some data, that the pandemic has accelerated all of this live stream e-commerce by as much as 3 years, people are talking about. But again, the more people coming into it, the more attention we're getting, the more we're sort of grouping our marketing spend together to create awareness for this, the better we're going to be. And as I said, we're way out in front of the competition with this, so we're feeling pretty good.
So a couple more quick questions here, if you don't mind. I mean, just kind of off the heels of what we were just talking about. I mean, how many people are going to be using a kind of software like this? If I'm thinking about how, YouTube and Twitch have really sped up the rate that individuals are able to, broadcast their own content. I mean, I guess what is the potential addressable market you have for this kind of software?
Well, think about this. How many invitations are you guys getting a week in your inbox to somebody hosting a webinar, selling you something? Right? I mean, I get countless, a ridiculous number of them, and I imagine everybody else does. Well, why wouldn't those people that are hosting those events use this technology? Because in those events, what they're doing, right? They're telling you, oh, here's the website, go to the website, or here's a phone number to call, or I'm putting a URL in the chat, right? What is that? Friction. So what we're talking about is
smooth it out.
Exactly. Let them click right there and then. So we think we think the audience is pretty big. Look, Outlook, I mentioned 1 billion Outlook users. Now you don't have to leave Outlook to send your videos. I think it's the market's enormous. It really is.
And that was actually, you've given me a couple good segues here, Rory. I wanted to ask, why mail? Why Outlook? I mean, are you, that was the place that you thought to start. I mean, do you have thoughts for doing something more with a Slack or a Discord?
So as we looked at the, where people sort of live during their business day, there's two huge email platforms that people spend most of their time in. One of them is Outlook, and you know what the other one is. So so we thought that with that massive addressable market of 1 billion Outlook users, and knowing that everyone wants to utilize video and is utilizing video, and you can't really do that effectively, you have to leave Outlook to go do it. Starting there, we thought would be a really good place. We will be in the other platform in the near term, certainly this year, but we haven't really spent a lot of time talking about that, but that's coming. But one of the things I'd like to just point out so people understand the implications of this. If you're hosting a live stream event, And you've got, look at the attribution feature. Everyone's going to be sending their contacts to you, their relationships to you, because if any of them buy during your live stream, they get paid, they get credit for it, which is really going to drive this. But the other thing is, you're going to have the ability when you're hosting that live stream to actually stream it not just through our platform, but it will simultaneously stream through other platforms, including Twitch, including YouTube.
There we go.
You know, all the other platforms that you see out there. When you're doing your live stream, it's going to all be there. So you're going to see, you'll have the ability to really get to a massive audience with this.
I am intrigued, Rory. I like the presentation a lot. Thanks a lot for joining us, Rory Cutaia. He is CEO of VERB Technology. Thanks for answering a couple extra questions there. The chat was like loving the presentation and wanted some more info. So I think we are going to pop on the URL. There it is. Verb.tech is the website if you're looking for more info from Rory and the VERB team.
Thanks so much.
Yes, sir. Have a great weekend.
You too.
Yeah, that was cool. That was cool. Let's do a little fun here. Why not? A little bit more fun. Not that we're not already having fun, but one of the favorite. Here we go. This is going to be a hard take. This is going to be something that Jason Razik might not like me saying, but one of my favorite parts of Benzinga is our apparel, our clothing line, Benzinga swag. I might have a shirt on here. I got a couple other shirts somewhere around. I go to the Benzinga swag website like on a weekly basis because I want to see the team is like updating new apparel. We're like getting in new apparel all the time, and it's really cool. It is a blast. And so with that bit of a tease, that was a lot of a tease, I think we have a little swag promo. If producer Aaron is out there, can you play? This is the shirt that I'm wearing today. It's just your classic. We should just call this one the classic Benzinga Detroit. Nothing on the back, just looking classy. What else we got here? Aaron brought me in a few other little hoodies. We got a nice little one here. Just a nice little Benzinga logo there on the breast. Nice zip. We got a nice blue here. We got a black. If you have a favorite show, on Benzinga's YouTube, we got all the swag. There's a couple Get Technical shirts. There's a shirt with Joel's face on it for pre-market prep. Pretty cool. Check that out. It is swag, I believe. Swag.benzinga.com. If somebody wants to drop the link into the chat there, that would be a big help for me, and I appreciate when you guys help. So I am getting word that we do have our next presentation ready to go. I see him in the green room there. He looks like he's ready. We have up next Safehold Inc. The ticker is SAFE. You made it nice and easy. And we have Ian Selig. He is the Assistant Vice President of Investor Relations at Safehold. Ian, how's it going?
It's going well. How you doing?
I am having a fantastic Friday. I love alliteration, so I'm going with Fantastic Friday, the 2 Fs. How you doing?
Likewise. Lovely. How you like that?
Likewise, lovely. Thank you for playing that off with me. I will let you have the airwaves, sir.
Terrific.
Take it away.
Terrific. Well, good afternoon, everybody. Actually, depending where you are, I'm here in New York, so it is afternoon. If you're further west, maybe not yet, but happy Friday. I think that would count. I'm delighted to be with you all to discuss Safehold, a truly unique investment in a world of Me Too ideas. So I have about 20 minutes or so of prepared remarks, and then hopefully we'll have enough time at the end of the presentation for some Q&A. Today's presentation is broken up into 2 parts. The first walks through our business model. But then, most importantly, the second describes the investment in SAFE. I think that we'd all agree that before we ever decided to make any investment, it's really important to understand the fundamentals of the business behind it. So to begin, Safehold is the first and only publicly traded company that's focused on ground leases. We are listed on the New York Stock Exchange, and as you just heard, our ticker is SAFE. Now, many of you may be familiar with ground leases, but for those of you who are not, allow me to give you a brief primer about ground leases. They're pretty easy to understand.
Hey, Ian, if you want to show what you're looking at for the audience, then you can just go ahead and share your screen. I'm not sure if you have a presentation to share.
It should be shared. So
hit so you have to hit the share screen button, and then.
All right, let's see. We have a little technical issue, but let's try. Let's see what's going. Let's try it again.
They happen.
Yeah.
Not that we don't like looking at you.
Yeah, right. I hear you. So let's try this again.
I know you. I'm sure you guys had it set up in the backstage.
How does that look? Can you see this screen?
There she goes. Thank you, sir. Right. You are good.
Well, okay. So let me it's actually perfect timing. So as I was saying, we're just going to do a little brief 101 primer about ground leases, since we are the first and only publicly traded company that is focused on ground leases. So any piece of commercial real estate is literally just two components. It's the land and it's the building that sits on top of that land. And in a ground lease structure, we separate those components, and one party owns the land, and that would be us at Safehold. And another party leases that land for a long duration, typically 99 years. The tenants of that building are, in effect, the owners of that building. They're responsible for all expenses. They're under a triple net lease, meaning they pay the taxes, the maintenance, the insurance. Any capital expenditures are on them as well. But also any net operating income or profits that building kicks off is theirs to keep. So one thing about ground leases are, at the termination of the lease, like some other leases that we could think about and talk about later, not only does SAFE get its land back, but it gets the building and all its improvements back as well. So I know a lot of you are thinking, why would a real estate investor ever consider such an ownership structure? Because we're all somewhat hardwired to believe that you must own the land and the building together. Well, a simple way to understand Safehold's business is to realize that every time someone buys the property, they're really buying two things. They're buying the land and they're buying the building. But those are very, very different investments. The building is the higher return operating part of the business, where all the leasing, designing, managing, and marketing needs exist, making it a very active investment. The land, conversely, is the quiet, passive, lower return part. And it's much more like a bond, in fact. And the truth of the matter is, there's no other place in the investment world where those two types of investment are forced to be together. For example, in the corporate world, you do not have to buy the bonds of a company to buy its stock. That would be considered senseless, entirely inefficient. But that's what's been happening in the real estate world, because there's never been a nationally scaled institution to acquire that land component and do it in a way that actually enhances the value of the building. And that's our value proposition. And the math is pretty compelling for building owners. By selling that relatively low return land to Safehold, and by creating a properly structured ground lease, owners earn a much higher return on their buildings, and they do it with less risk. And as you will soon see, it's really a win-win for all of us. So Safehold ground leases have created three very important efficiencies for building owners. First, there's a capital efficiency because, as I just explained, the land and the building are very different investments. And by separating them, building owners earn a higher return with less risk. And by just buying the building itself, you utilize obviously less upfront capital needs than if you would just do with typical fee simple investments. Next, there are substantial cost efficiencies that are associated with the various friction costs every time that building sells, which could be 10 or 15 times over a 99-year period, such as mortgage taxes, brokerage fees, all of which are based upon the entire purchase price of both the land and the building. And lastly, and maybe most importantly, there is significant maturity risk reduction on a large portion of the capital structure because we're replacing it with near permanent capital, 99-year capital. So actually, this whole idea of separating the land from the building via a ground lease has been around for centuries. And over that time, it's really proven to be one of the greatest wealth creators for a very elite group of landowners. In New York, where I am from, the Chrysler Building today is on a ground lease. Cooper Union University owns the land under that building. Trinity Church owns much of the land in downtown Manhattan, and a lot of the buildings on Wall Street are on ground leases. Some of the wealthiest families in New York, in fact, have attained their wealth because some patriarch 100, 150 years ago realized that that land was going to be worth a lot of money. London, another great example. The Duke of Westminster bought West London 150 years ago, and it was primarily apple orchards and swampland at the time. Today, the royal family receives close to 100 billion pounds of ground rent every year from that purchase of that land. And probably one of the best examples is the picture on the bottom of the slide, which is Hong Kong. The British leased that land from the Chinese, built this megapolis on top of this tiny little island, and literally handed the keys back to the Chinese in 1997. But quite candidly, these ground leases of the past have had an awful reputation because most of these old-fashioned, archaic ground leases contained negative provisions such as arbitrary rent resets, required permissions for just about any improvement, and were really written to be very one-sided toward the landowner, which would make these leases value-destroying for the building, not value-enhancing, and created two things that the markets despise: uncertainty and ambiguity. Look what was just happening with gas prices just a couple of days ago. So at Safehold, we recognize that the problem is that nobody has taken this fundamental idea and modernized it to work in today's capital markets. But there's still more that makes any business really revolutionary. Many of the biggest and best companies today are being built by rethinking how things were historically done and delivering fundamentally better solutions while offering a better customer experience. Think about for a moment what Amazon has done for retail, what Uber and Lyft has done for the taxi service, what PayPal and Venmo has done for payment processing. Utilizing this proven formula, Safehold is literally taking a $7 trillion real estate industry and making it more efficient and delivering a better customer experience. This idea is revolutionizing the way property owners think about their buildings and the land underneath them. So let's see how our portfolio has penetrated the market since our inception. So at Safehold's IPO 4 years ago in June of 2017, our portfolio consisted of $300 million of these ground leases. Safehold really gained traction in 2019 by closing $1.8 billion of deals and grew our portfolio to approximately $3.4 billion today. And since we are focused on the top 30 markets in the US, the best cities in the United States, I think it's meaningful to take a moment and appreciate the caliber of the institutional quality properties that SAFE invests. So the ground leases on this slide are just a sample of the types of properties in the top markets which Safehold has closed since our inception, all with high quality, world-class customers and sponsors. In fact, out of the nearly 100 assets in our portfolio today, half are with repeat customers, which is evocative that our capital solution is really working for them. And quite frankly, it's also quite validating that we are proving our thesis. So now that you all have a general understanding of Safehold's business model, let's get to the fun part and kind of why you're all here today and learn why SAFE is such a compelling investment. So as I just mentioned, 4 years ago when we took Safehold public, something really extraordinary happened. By putting a ground lease investment in a public wrapper, we democratize this investment. So what do I mean by that? Well, typically, as I had mentioned, ground leases were the domain of churches, royal families, universities, ultra high net worth individuals, because quite frankly, who has 40 or $50 million to park for 100 years? I know I don't, but I do have $70 to buy a stock. Now, for the first time ever, this investment is available to the individual investor, you and I. And not only that, we can express our opinions on ground leases every single day. If we like ground leases, we could buy safe stock. If we don't like ground leases, we could sell safe stock. Think about that for a moment. We have turned a 100-year passive investment and gave it daily liquidity. Now that is powerful arbitrage. So Safehold was taken public by iStar, who's been in the real estate finance business for over 3 decades and has completed more than $40 billion of real estate transactions. Not only is iStar Safe's founder, but it's also its manager and largest shareholder. Clearly, having iStar's years of expertise in real estate finance and sale leasebacks, along with their robust ownership position, is extremely important in Safe's ongoing successes. iStar has offices throughout the country, and I think we all know that real estate is a local business and it's a relationship business. But most importantly for us investors, an investment in Safe contains the 3 most significant characteristics that any investor should seek, something that I like to call the trifecta of investment attributes. So let's examine those for a moment. The first is principal safety, and that's just making sure that your capital is well protected. Our Safehold ground leases are literally one of the safest ways to invest in real estate since they occupy the senior most 30 to 40% of the capital structure. Akin to taxes and utilities, you must pay your ground rent. We're even senior to the leasehold lender. And that means if that tenant doesn't pay the mortgage on their building, well, what will happen? That bank will foreclose, but then the bank will be responsible for paying the ground rent. So we're even senior to the bank. And also having a portfolio of great ground leases in fantastic locations adds an additional layer of safety. The second attribute contained with this investment is growing income that's achieved through long duration, contractually escalating cash flow streams. Our ground leases are structured with 2% annualized rent bumps that compound over the life of the lease. And I think we all know like the power of compounding is literally a page out of Warren Buffett's playbook. I think even Albert Einstein called it compounding the 8th wonder of the world. When you compare comparable AAA-like bonds with a similar duration, this 2% compounding bump structure within Safehold's ground lease portfolio creates excess returns exponentially greater than other investments with similar risk and maturity profiles. I'll get a bit more specific about these cash flows in a moment. And lastly, and this other, the second leg of value on this stool is this whole idea of capital appreciation, which is just another way of saying, how can I get wealthy from this investment and then be able to pass that wealth on to my children and for generations to come? Well, to understand this attribute a bit better, let me remind you what I had mentioned at the beginning of the presentation, that at the expiration of the lease, not only do we get our land back, but we get the building and all of its improvements back as well. Now, I know a lot of you are thinking, it's like, hey, I'm not going to be around in 100 years, so what does this really matter to me? But in a moment, we're going to examine this store of value in more detail and understand why it's such an extremely important part of this investment. So let's take a moment and understand these ground lease cash flows that I was just talking about. As I mentioned earlier, the land is akin to a AAA bond. However, when you compare the compounding escalating cash flows of Safehold's modern ground lease portfolio to that of very similar investment instruments, typically very long-term high-grade bonds, we can generate approximately 200 basis points of excess value. A great example is MIT's 100-year bonds traded in the market every day with significant volume, and that's that gray line on the bottom of the slide. As you can see, those bonds traded approximately 3.4% yield to maturity, while our ground lease portfolio generates about 5.2% yield to maturity. Now, in the AAA CMBS world, when you can generate 25 or even 50 basis points more than your peers, you would be the best performing manager on Wall Street. We are literally generating 200 basis points wide, and that's remarkable. In fact, I don't believe there's any other similar 100-year compounding escalating cash flow in existence today with this type of growth. Now, let's get back to that third component of value in this investment, the capital appreciation piece embedded within Safehold's ground lease portfolio. So as you can see on this slide, when we IPO'd 4 years ago in 2017, we had $400 million worth of buildings sitting on top of the land that we owned. As of today, that value is $5.6 billion, reflecting a compounded annual growth rate of 97%. And while the store of value is not ours today, it will be someday because of ground leases' reversionary rights. We often like to compare this unrealized capital appreciation account to a 401k. Many of us have these kinds of liquid accounts. We can't touch them yet. Hopefully we have some smart folks managing that money for us. So let's take a step back for a moment and look at this slide. And imagine you had $400,000 in your 401k 4 years ago, and it has now grown to $5.6 million. Guess what? It's quite clear to me that you would be hard-pressed to find any other asset class to have such significant growth. Most importantly for our investors, we are presently working on strategies to monetize this unrealized capital appreciation account without having to wait until these leases terminate. However, it's a bit premature to discuss this now in great detail, but this UCA account will be an extremely powerful element of this investment as Safehold's business continues to scale. That being said, something that we can all wrap our head around is Safe's overall stock performance since our inception. So let's review that for a moment. So as you can see on this slide, Safe stock IPO'd at 20 bucks and closed yesterday at around $69, growing over 240% since our inception. The four middle bars in the chart represent the four follow-on equity offerings that we've had in the interim. And I certainly would be remiss not to mention that Safe has been the #1 performing Nareit member stock over the course of the last 2 consecutive years. And we've recently been awarded investment grade ratings by both Moody's and Fitch, allowing us even more flexibility to access capital and positioning us for continued growth as we move forward. So what's the real opportunity set that lies ahead? Well, as I mentioned earlier, it's our estimation that there is approximately $7 trillion of institutional quality commercial real estate in America's top 30 markets. Now, if you were to take 35% of that, which is the approximate value of the land, that leaves an opportunity set of approximately $2.5 trillion. And guess what? Presently, we're the only ones playing in that sandbox, and it's fantastic to be the first mover in any business. We currently have no competition, and we're running the field alone, and that is a big sandbox to be playing in. We are revolutionizing real estate ownership by making it better, more efficient, and reinventing a big part of a $7 trillion industry by offering our customers higher returns with less risk. And for the first time ever, we have made investment in ground leases available to the individual investor, you and I, an investment that provides principal safety, growing income through contractual cash flow streams, along with the opportunity for significant future capital appreciation. So I know we've covered a lot in a very short period of time, and I don't know where we stand on time, in fact. So if we have some questions, we can certainly open them up. I'm going to put my digital business card up here. So nice. Please feel free to take my name and email and telephone number and ping me if you come up with questions now or later. I'm always available.
Ian, the chat was going crazy with your presentation. They loved it. I saw a very, very interesting company. This is very awesome. Really good response that you got. If you do have time for like a question or two, sure. The track that we're on today is called The New Economy. I asked one of the presentations a little bit earlier this kind of question, and it's kind of a cool theme that I sort of want to keep going. And you did just kind of touch on it with the last couple of slides there, but you know, real estate has been around forever, right?
Right.
If we're thinking about you know, post pandemic and post COVID and
Sure.
technology in our face all the time, I mean, how is real estate going to be a part of the new economy moving forward?
Sure. So, I mean, there's a couple of things to unpack in that question. Look, I could tell you, being, a New Yorker and having our offices in New York City, clearly during the pandemic, there was this urban to suburban flight, right? And everyone thought this, the big cities were dead and things like that. And well, guess what? It's all turning around again. I mean, obviously, just as of yesterday, with the mask mandates going,
right,
everything, all of that stuff. But your technology question is a real good one because buildings are going to be smarter, right? So they're going to understand like people flow and how and
wow.
And all how traffic works and all of those things are going to be how they build buildings moving forward. The interesting part of what we do at SAFE is we buy the land under those buildings. So the folks who own the buildings actually do all these improvements and they pay for them themselves. And the really cool part is we get to inherit all of that stuff at the end of the lease. People are like, well, why would anybody do that? But the only thing I would leave you with is to think about when you lease a car, right? You go out and lease your nice, new car. You don't pay full freight for it when you lease it. You have your monthly payments. And guess what? At the end of 3 years, you either give it back or you buy it, right? So this whole idea of giving something back when you lease it is not a new thing. In fact, leases have been around for a long time. This is just on a wider scale, and like I said in the presentation, we're just hardwired to think, because this is how we buy our homes and stuff, is you buy the building and the land together. Well, we've come up with a solution that we can give our customers and have them make more money on their buildings, right? And they do it with less risk. So it's a win-win. Look, when we have customers that come back for 4 or 5 deals, we have 100 assets in our portfolio, and we've done it in pretty short order. In 4 years, we've grown this business, to almost a $4 billion business. There's a reason why we've been the #1 performing NAREIT stock over the last few years. I think I'll leave you with this. In 2018, we delivered 118% returns on our investment. So if you bought a share of stock, you got 118% back, and last year was 84%. So I mean, it was literal. It's been remarkable, as you can imagine. Not only for our investors who are now able to play in this ground lease game, which was just only available to an uber elite group of folks. Because now you can just buy a stock rather than actually having to buy, put your $50 million in the ground and just let it sit there for 100 years.
Love it, Ian. It's a great pitch. That's like the great elevator pitch for it. Absolutely.
Yeah. Done this once or twice.
Well, we do have a bunch more questions here for Ian, but we unfortunately can't get to them due to our time constraints, our strict schedule here.
Sure.
If we could pop on the URL to get a hold of Ian. There you go. It's Ian Selig. He is Assistant VP of Investor Relations over at Safehold. It's ticker SAFE, and the website is safeholdinc.com. Ian, thanks a bunch for joining us today. Have a good weekend, sir.
Yeah, you likewise. Thanks for everybody for listening and enjoy.
Yes, sir. All right. Let's just keep it rolling. Let me do a quick check here on my phone. We're at 190 likes. We need to get up to 300. So let's see it. Click that sucker, everybody. Next up, hey, Brian, how you doing, sir? We have Brian Cox. He's chairman and CEO of SurgePays. The ticker on OTC is SURG. Surge. What's going on, mister?
You know what? We're out here. I'm actually a little bit remote. Your team's been awesome working with me. I'm out of pocket. We've got a new office opening up out in Nevada. So I appreciate your team working with me to get this on the show today.
Well, best of luck with the new location, sir. And I'll let you take it away.
All right, good deal. Hey, first of all, I want to thank you guys. Thank you, Brent. Thank your team. They've been awesome. Thank you, Benzinga, for giving us this platform to be able to talk about the company. Anytime we can talk about our company, we're excited about it to take the opportunity. SurgePays, we're a B2B fintech. For the time being, we're traded on the OTCQB under SURG. And just so you know, Brent, I don't go off a teleprompter or script. I've been in the underbanked and software development business for 20 years. So I take it straight from the heart and straight from my mind, although that gives my attorneys heartburn. So let me say that there's a really good shot that I'm going to give some forward-looking statements today. And so just if everybody knows, they can go to surgepays.com to look at any of our filings and make wise decisions. All right, got that out of the way. Now we can have some fun. This is our company. We're a B2B company. We've built a blockchain platform where we go into convenience stores, bodegas, tiendas, any retail store that the community depends on, that the people that live in that area depend on to buy everything from their calories to, as you see, gas, any type of products like that. Independently owned stores, we provide them with all sorts of services for the underbanked. We help them become a quasi, let's just call it a financial institution for their customers. And then we upsell them most of the top selling goods that you'll find. And I think you guys will be interested to see as we go. And a lot of times we walk into these stores, we have a purpose, we're in and out. A lot of times it's to pay for gas or get coffee. But hopefully now when you see some of these products that we sell these stores, your subconscious will flag when you walk into these stores and you'll realize what the opportunity is and our market. Just to give you a quick background on SurgePays, I took over as CEO, brought my team in 2017, changed the name to Surge Holdings. We were a conglomerate of a couple of different companies. We had a specific goal. We had a purpose of incorporating our fintech software platform. It's kind of a funny story. My first press release as CEO, I mentioned blockchain and digital currency, and I was on the phone with FINRA and the SEC a week later with them asking me questions. What was blockchain? What was I talking about? So it's been a good little journey. In 2020, we rebranded the company SurgePays. We did not want to be known as a holdings company. We wanted to better refine what we were doing and our target and goals for the company. So you can see the revenue growth that we've had year over year. I'm going to jump right in. I'm a relationship sales guy, and the architecture of our company is based on reoccurring revenue through building relationships with independently owned companies, independently owned retail stores. So the best way that I have come across selling anything, and I don't care what it is by crushing the old mentality of business 101. You got to spend money to make money. That's not true with SurgePays. We walk into a store, our salespeople pull that door, we come in and we enable that store to service their customers in a way that allows all the things you see on the screen here, everything from loading debit cards, wireless payments, which is a big deal considering there's 100 million prepaid wireless customers in our country. A third of the population is going somewhere to pay their monthly bill. A lot of folks rely on these corner stores to pay their utility bills. Something that probably a lot of folks watching right now may not think about. All of the apps on our phone really become significantly less meaningful if there's no credit card attached to it. So we enable that store or customers to walk into that store and load value, whether it's Amazon, iTunes, DraftKings, all the popular apps. We allow that store and enable them to process and add value so the customers can use the apps like most of the people watching right now. The Mass Transit Authority is, as with the rest of the folks in the economy, are shifting away from any type of payment at the point of your ride. So in the third quarter, we'll be rolling out, and we're one of the select few companies that will be setting up convenience stores to load the MTA app and cards. It should be a big boost for us in LA and New York, where that's, we've seen the numbers there. So we come in, we enable the store to provide these services. The store is able to process these transactions. We ACH the store for what's due us and the third party, and the store keeps his money. So to reiterate that for you guys out there that run businesses, we enable the store to make money without spending money. It's purely transaction based. They get more door swings. They provide more services for their existing customers, And then they create the opportunity for these customers to come back every month, every week. And as you can imagine with things like Amazon, it's a weekly thing. So by doing that, no different than a convenience store putting the cold beverages in the back of the store, we so that you walk past all the other products and have impulse buys by realizing there's other products there. We do the same thing. This is a screenshot of our secure platform, and we force the store owners to go by and see, oh, by the way, not only are we providing you all these services, we can sell you many of the products you're already selling. And our model for doing so, let me go ahead and click to it. Our model for doing so is we go directly to the manufacturer. We have set up with manufacturers to, a store owner places the order, we send a pick, pack, and ship directly to the manufacturer's warehouse. They fulfill the order, ship it directly to the store. So we've been able to overcome a lot of the regional footprint challenges, a lot of the minimums, a lot of the bottlenecks, especially over the past year that we've seen with distribution, logistics, warehouses. And one of the things that has really worked out well for us and for our stores is not only are the stores able to realize usually a 10 to 15% savings on products that they're already buying now, and many times they get a bigger selection because their selection of products is not dictated by their regional distributor. And as we all know, I'm an old econ major. Anytime that there's more options or more selection, there's also more competition, which creates an environment of better pricing for the store owner. So that's one of the things that we've been able to do. And one of the unique aspects of this is that the manufacturers also realize the value. So you got to put yourself in the manufacturer's kind of chair as well. Now they can have access to thousands of stores coast to coast without having to have contracts with regional distributors all over the country. And the products go directly from their warehouse to the store. So, and with us being able to do this, it also for goods, like you see the bagged snacks, instead of it spending 2 weeks, 3 weeks, 4 weeks in warehouses, big trucks, what have you, it goes straight to the store. So we've also been able to increase the shelf life, which is another cool byproduct of selling these wholesale goods directly to the store. So in summary, we've got a 1-2 punch. Like I said, I'm a relationship sales guy. We want to go in, enable the store to provide these underbanked products, create them. It's a different environment. Now we're a profit partner. We're on your side. We're helping you. Oh, by the way, we can also help you make more money by selling you many of the other products. And one of the unique things that we've put in place is we have feedback by what we call our friendly stores, our advisor stores. And they're actually on the lookout, giving us feedback of what products they would like us to carry, and they would like us to start providing and see if we can save them money. And I tell you, Brent, one of the unique aspects of this is I'm now, one of my next hires at the company is going to be a person that will manage the influx of manufacturers who ironically are using our invest@surgepays.com email address, wanting us to sell their products. So word's getting out there. We're really excited about it. The store owners are really excited about it. Our salespeople are obviously excited about it. And, we're hustling. So I know some of the guys out there, especially in the community there at Benzinga are interested in some of the latest technologies. We've gone to the nth degree. Like I said, we're not a Johnny-come-lately on blockchain or anything like that. We've been working in blockchain for over 4.5 years now. We've uniquely built our platform to withstand any type of craziness. We have, when you see hybrid data cloud, what we've done is we've got our, let's call them hard servers, 80 feet below the surface in Missouri. But we also have all kinds of other fail safes built over with AWS Cloud, Azure Cloud, and as you can see, the blockchain as well. So we're interconnected with multiple fail safes. There is no limit or bottlenecks or throttles that we would need to undergo. And for those of you that are watching who are obviously paying attention to everything going on with the digital currency world, one of the, I don't want to call it a byproduct because this was always one of the things that we wanted to build by putting this together. But every store that we add, whether it's the gas station whether it's any of the Hispanic stores, mercados, bodegas, convenience stores, whatever store we add, we've added another store to a closed loop network. And by closed loop network, I mean, we can settle up every single day, whether that store did a payment for track phone or the store ordered a case of potato chips. We're settling up every night. There's no difference in settling up by APIing into any of the digital finance, whether it's tokenizations or any of the other currencies out there, where we could allow people to spend the value that they have in these stores, whether it be through a card or an app. We'll be primed, as I think let's call it, the guys in Washington are probably still a little bit away from feeling comfortable with that world. Meanwhile, we're building it. We're building a railway, a backbone, a financial railway. And the way that I tell it to our guys all the time is it's almost like a railroad that we're building into each one of these stores, where not only are we going to be able to continue to selling them more products per store, we add more stores, but we also will be primed and ready to incorporate any type of other currency as our country is going into a cashless direction. So we're really excited about the DeFi opportunities for the underbanked and being able to help these folks out with life-enhancing products and services.
Love the analogy there, Brian. That it really paints a effective picture, in my opinion.
Go ahead.
We're running a little short on time here. There was a interesting question that I just wanted to get to really quickly.
Sure.
If you don't mind, I'm going to pop it up on the screen here. And Beatrice asked for you to speak a little bit about your moat. And I think you just touched on it a little bit, but in a few seconds, if you could just answer that question a little bit more deliberately.
No, sure. Hey, and I love the financial moat, the old Warren Buffett question. It's one of the things that we studied before we even got in here. And this is actually a perfect slide, Brent, for us to talk about it. The moat is we don't have one contract with a huge company that a person in a coat and tie could dictate our future. Our moat is relationships. We're not tied to a product. We're not tied to one service. We're tied to the relationships with every single one of these mom and pop individually owned stores that we've shaken their hand. We're on their team. We're providing them products. As you can see right now, we're 8,000 stores strong. We built a sales funnel where we have 35,000 other convenience stores. We're going to be outbound calling to work and send warm leads to our sales guys to go out there, especially as we conquer the West, the Midwest, and the Northeast. So I think the best way to describe our future and the stability in the moat is that we have the relationships with these stores to where, let's say, for example, there's a new variation of a product that comes out. Well, we're not going to be yesterday's news. We'll sell that product. New iPhone comes out. We'll sell those chargers. A new variation of cannabis comes out that's legalized. Hey, boom, we'll put it right up there as a hot selling product.
Gotcha.
So that's always been, with my background being in real strong and reoccurring revenue from the telecom side, and from a relationship standpoint of putting myself in the shoes of that store owner, that's the moat that we've built around the company to ensure not only our success, but our growth.
Awesome, Brian. I wish we had a little bit more time here. We are getting some good questions in the chat, but if we could pop in the URL on screen, there it is, SurgePays.com. I would encourage the chatters to go to that website. I'm sure you can find Brian and get a hold of him and ask some of these good questions that the chat was asking. It's been a pleasure. Brian Cox, Chairman and CEO of SurgePays. That's ticker SURG. The stock was moving while you were talking, Brian, just to give you a little heads up. They liked the info, man.
Hey, we're working hard. We're working hard. I've got a great team, and we're excited about the future.
All right, sir. Well, thank you for coming on, and I hope you have a very nice weekend.
Hey, thanks, sir. Thank you, Brent. Thank all you guys on your team.
All right, ladies and gentlemen, we're going to keep it rolling here. It is 1:16 p.m. sharp, and our next presentation is coming up from somebody we already saw a little bit of on a panel a little bit earlier, Diginex CEO Richard Byworth. The ticker here is EQOS. Richard, are you out there? Here we Go. Let's see. Calling all Richard Byworths. Is he out there? I see him in the backstage here. Let's go to, while we're waiting here for a sec, why don't we go to another question for a contest? Oh, I see the Benzinga chat. The Benzinga user in the chat is saying now presenting. I will pop in here very quickly and we'll do one more question for our giveaway that we're doing. Let's go to the next question here. Last question was a fun name this chart question. Let's see what the next one is here. It says, ooh, this one's only got 2 options. Blank options give holders of the option the right, but not the obligation, to sell a specified amount of an underlying security at a specified price within a specified time frame. Is that a put option or is that a call option? Cue the Jeopardy the final Jeopardy theme song. All right, we got a few answers in here. We got a few answers, and just a reminder: these questions are going to be available on your phone if you hit that QR code. They are going to be available all day. So I know I pulled that one up pretty quickly, but you can still go answer it. And it looks like we are ready to go here with Richard Byworth. Again, he is from Diginex. It's ticker EQOS. Richard, have at it, sir.
Hello, everyone. I'm Richard Byworth, the CEO of Diginex. I'm extremely excited to be here today. Diginex is a full digital asset ecosystem with the broad vision of bringing digital assets to the world, institutions and individuals alike. This vision statement is as much about making these assets more accessible through education and innovative product offerings as it is about working with regulators to make this asset class available to the world. Diginex was the first and only full digital asset ecosystem comprising a crypto exchange to be listed on NASDAQ, obviously up until the recent listing of Coinbase. This statement is important as it demonstrates a level of transparency and governance that this industry has been significantly lacking to date. Early adopting institutions need to mitigate reputational risk, and the Diginex ecosystem is unique in offering a regulatory-focused platform with NASDAQ standards of governance, and the institutions are coming. Last year, Fidelity conducted a survey of institutional investors and assessed their interest in digital assets. The results show an industry primed for explosive growth. 80% of those investors believe that digital assets are appealing, and 22% of those investors have already started trading derivatives. Derivatives are extremely important instruments for the continued growth of the industry, and I'm going to talk about that more in a moment. So just to touch on this institutional adoption that we're seeing, the pandemic and the fiscal and monetary stimulus that it's brought has seen increasingly rapid adoption of this brand new asset class, more than we could ever have anticipated at this point in the adoption curve. Many of you will have heard of Tesla adding Bitcoin to its balance sheet, but this was actually led by the CEO of MicroStrategy, who not only moved the company to a Bitcoin standard, but also levered their balance sheet to buy Bitcoin with what they've described to be a melting US dollar. This action has started to lead other corporates to put Bitcoin on their balance sheet. However, it's only the beginning. We ourselves have taken a leadership role in helping corporates to understand how to put Bitcoin on the balance sheet. That's through our partnership with the Treasury Management Institute, the European industry body for corporate treasurers. And these corporates are accompanied by some of the world's leading asset managers and investors: MassMutual, Tudor, Rafa, and Guggenheim, to name but a few. Paul Tudor Jones actually recently called Bitcoin the fastest horse in this latest bout of monetary inflation. Not surprisingly, the investors that are leading this charge are traditional bond investors who've recognized the destruction of yields brought about by the central bank activities that we've seen to date. On the payment processing side, we've seen everyone from PayPal, Visa, MasterCard, and most recently Venmo start to replicate Square's strategy and move into the crypto space, offering a huge growth opportunity to its customers. And the banks are starting to come too. US banks, Goldman Sachs, Morgan Stanley, and even the very conservative Swiss UBS have stated that they will start offering crypto to their enormous asset base of wealth clients. Institutional adoption is coming fast. A watershed moment happened for the industry last month with the listing of Coinbase, one of the most established players in this space. Coinbase was founded in 2012 versus our exchange, which launched in July 2020. We're a fraction of their 52 billion market cap at 210 million. And today we do approximately on average $100 million of volume a day versus Coinbase first quarter 21 average of $3.72 billion per day. So we're 2.6% of their volumes at 0.4% of their market cap. Our fees are lower, but our growth is rapid and accelerating. We listed in October 2020, and that 7-month period has seen our volumes grow by around 50x. But the most important difference between these two companies is our focus on derivatives. Coinbase is purely a spot exchange, and we do both derivatives and spot. So just to talk about derivatives for a moment. 4 years ago, we started to see the emergence of derivatives in crypto. Today, derivative volumes are 3 times larger than the daily traded spot market. And while this sounds like an enormous growth trajectory, it's likely just the beginning. In the traditional market, similar instruments to crypto assets like FX and interest rate derivatives trade hundreds of times the underlying spot markets. The spot market today is illustrated in dark blue in the graphic, with turquoise representing the current derivative market. The potential for growth for crypto derivatives to continue with this meteoric growth trajectory is represented by the pink circle. We have built an exchange to the regulatory and governance standards required by institutions. We are ideally positioned to benefit from this adoption cycle as we continue to roll out the foundational pieces of a full prime brokerage stroke derivative experience. So let's take a step back and look at the full Diginex offering. We are a lot more than just an exchange. We are an entire ecosystem that's designed to be fully accretive to that exchange. So starting with the exchange, Equos is the name of our exchange. It operates under the Payment Services Act from the Singaporean Monetary Authority. This is one of the most credible regulators in Asia. And as I mentioned before, we are a spot and derivative exchange, and our growth has been explosive. An important point to note is whether Bitcoin goes up or down, we benefit. And quite often when the price of Bitcoin drops, we hit even larger daily volume numbers. And while it might seem like an odd thing to say, Equos volumes are genuine. This is not the case with many exchanges in this space. We also don't make markets on our own exchange, which is an important requirement for professional traders, many of whom have suffered at the hands of pretty much every other exchange who trade with full visibility of the order book flow against their clients. The growth of the exchange is going to continue to be fueled by the accretive nature of this whole ecosystem. Each business adds value and flow to the exchange. Starting with Digivault. Digivault is our highly secure digital asset custodian, and of course is a service provider to the exchange as well as to its other clients. Digivault has been built to government standards of security. Digivault is CREST certified and Cyber Essentials Plus accredited for cybersecurity. And that accreditation was designed by the Ministry of Defense in the United Kingdom. This week, we were fully registered under the FCA's AMLD5 regulation, and we have specific crime insurance for assets under our custody. The team is led by ex-Ministry of Defense security specialists and ex-Royal Marine Commando Rob Cooper. Rob has hired and built an exemplary team and product which continues to add features and functionality required by some major financial institutions. And when you have such a solid custodian offering, and as balances build and we add other features like borrowing and lending, you get to a point of very, very sticky behavior around these assets. Bletchley Park is our asset manager. We have a fund that's positioned to provide an on-ramp for institutional capital wanting exposure to this asset class. It's effectively a fund of hedge funds, which allows us to provide a portfolio approach to the very unique alpha that is available in crypto. So to give you an idea of the performance on a 12-month rolling basis, this fund, a market neutral fund, so non-directional, is estimated to have returned over 100% with a Sharpe ratio north of 3. This return profile is unique, and of course, investors are paying attention, and so assets are growing nicely. We're going to be launching a US domestic feeder for the fund in July and anticipate significant demand from onshore US investors. Our fund team have assessed 350 different managers in this space, and we finalized a pool of what we call investable managers of about 25 funds. And this highlights something very important about the industry. There are very many talented managers and traders, but most of them are uninvestable. And this is where Equos and Digivault can come in and provide value to the asset manager. By running managed accounts on Equos and Digivault, Bletchley Park and other allocators can access far more funds. This means that investors can allocate to very talented managers, but don't actually need to touch their fund structure. And we have a first fund testing out the Equos managed account functionality at the moment. Next, Diginex Access, a multi-venue trading platform. This is integrated with two of the world's largest trading technology firms, FIS and Itiviti, both of whom have integrated it into their execution management, order management, and portfolio management systems. We are the exclusive provider of crypto trading platforms for both of these firms. And this is important because the first step that many of these institutions make is to use the technology that they already have on their desk, like Itiviti's T-Bricks or FIS's Front Arena. Our Access product allows them to trade across Coinbase, Kraken, and of course, Equos, along with many others. Itiviti have around 1,600 institutional clients, FIS closer to 5,000. The partnership with both these firms helps put Diginex firmly in play as one of the go-to institutional providers. Equos Capital is our capital markets business. This is focused on the longer-term disruption that blockchain will bring to capital markets. Today, it is a small boutique securitization advisory firm. Every security that we issue comes with the option to convert it into a digital security. And in this way, we're effectively planting seeds for what we see as the impending total disruption of capital markets as we move away from paper to blockchain-based digital securities. And while this business is small and certainly insignificant today in terms of our overall business, it's a long-term play to position us at the center of that disruption that I talked about, a $200 trillion opportunity for the disruption of the capital markets. Two of our businesses yet to launch are borrowing and lending and Equos investment products. Borrowing and lending will be doing its first institutional trades this month, with exchange integration coming next quarter. It's a very important piece of the overall ecosystem. As it evolves into the platform, it provides a service very much like the investment banking prime brokerage model, where you have core collateral and you can borrow and lend and build derivative optimizing strategies around your base capital in a capital efficient manner. For retail, this is a little bit like having your own private bank account around digital assets, where again, borrowing and lending and portfolio overwriting and underwriting with derivatives are essential tools for wealth protection and generation. And this creates a remarkable stickiness to the platform and increases long-term balances, which in turn become more accretive to the offering whilst increasing revenues. Finally, our investment products business will launch next month with its first exchange traded product, a Bitcoin tracker fund, which will be listed on the German exchange Xetra. Market makers for our product will source Bitcoin directly for Equos, and this will guarantee that all Bitcoin in our tracker is not tainted and has been through blockchain screening tools. This provides investors a differentiated product from the exchange traded products out there today. And additionally, assets will be stored in Digivol's custodian. And once again, as the business scales, it will continue to accrete value to that exchange business and of course the custodian. And as we evolve the business, we're going to be adding more product with guaranteed yield notes based on the borrowing and lending business and structured products to feed flow into the options market on Equos. So how do we make money? This is probably a good moment to highlight that the exchange makes money in up and down markets, actually often more so in down markets. When Elon Musk recently announced that he was no longer accepting Bitcoin for Teslas, the market dropped 15%. On that move, our volumes broke 150 million, setting a new record for the platform, 30% above the previous record. So down markets really help the volumes on the platform. Our exchange fees are aggressive and competitive to focus professional traders, but liquidation fees are a lot higher. And again, these big moves that I mentioned before drive liquidation levels, meaning higher average fees on the platform on days with large moves. The rest of the fees across the ecosystem vary very much by business, and they're illustrative of the fact that our ecosystem is designed to deliver a complementary yet diversified revenue stream, from the very attractive commissions of complex securitizations at 7% through to the high volume institutional rates on the exchange at around 2 to 4 basis points. But then you have the very sticky annuity businesses of custody, borrowing and lending, and asset management. And obviously these have interesting fee structures given how sticky those businesses are. So this is the roadmap for the exchange in the coming 2 quarters. Equo is our own exchange token, which launched last month. Since its launch, volumes on the exchange have quadrupled. This is again an example of the strong financial engineering capacity of our team. We have designed a token with strong incentives to drive volumes on the exchange, and that is exactly what it's doing. Along with the launch of Equo, this quarter will see the introduction of some of the foundational pieces of the derivatives ecosystem. User-defined leverage and isolated margin, combined with cross-collateralization, all improve user experience within levered and derivative products. I touched on managed accounts earlier. This really is unique. No other exchange is offering this functionality for asset managers and allocators to increase their capacity. Going into the next quarter, we're going to be launching our first version of the mobile app, which will increase the on-ramp of retail customers. And we're also going to have a daily settlement for Bitcoin versus US dollars, which means finally that you have a settlement price for physically delivered options, and then the structured products market can settle against that as well. These are all really important milestones in the delivery of a full functioning derivative market. On the subject of product delivery, the token deserves a little more attention. We are the first NASDAQ listed company to launch our own token, and it was specifically designed to incentivize and drive volumes onto the platform. The beauty of this overall technology is that it allows companies to provide future value to their clients in order to fuel early growth. The Equo token was never sold to our investors and users. Instead, it can only be earned by users through trading on the platform or acquired on the platform from other users who are earning it. The token pays out daily staking rewards, which means it effectively pays yield every single day, which incentivizes users to hold it rather than sell it, which means people don't want to sell it, and that then has the effect of pushing the price upwards. As the price goes up, so do the volumes, which grow revenue. And as revenue grows to the point of profitability, the company will implement a buyback program, which will drive the token higher, which will drive volumes higher. The token helps an early stage exchange like Equos drive volumes higher and higher and allow us to rapidly catch up with some of our incumbent competitors. For this last slide, I often get asked by investors, how do I get access to this asset class? And for investors in our stock, this shows the full value of the ecosystem play. The most direct option is investing into the asset itself. We facilitate that through our exchange and through our OTC business combined with our custody. Investors who want to make a more stable, reliable, and less extreme returns can invest in credible asset management products. And as highlighted, our fund is offering a very key, unique alpha opportunity for those investors in the crypto industry. For those who want direct exposure but can't touch the asset directly, they can invest in a listed product. And again, we roll out our Bitcoin tracker, our first exchange listed product on Xetra, the German exchange, next month. Mining is the one area that we're not involved in. However, this is a highly capital intensive business and only the most efficient miners will consistently do well. There are focused organizations listed on NASDAQ that can provide this exposure to investors. But perhaps the best way to play this space is directly via the ecosystem that makes money whether the price goes up or down as a picks and shovels play. We offer the full remit of exposure to digital assets. Diginex is the pure play digital asset ecosystem. And I thank you for your time.
Ladies and gentlemen, that was Richard Byworth of Diginex. He's the CEO. Ton of good questions we're getting in the chat here. Appreciate you guys sending those questions. We aren't going to be able to get to any of those questions. Unfortunately, right now, we do have our next presentation ready, and it is a face we've already seen today. What do you know? This is BTCS Inc.'s CEO and Chairman, Charles Allen. How you doing, Charles?
I'm great, Brent. Thanks so much for having us. I really appreciate you providing this.
Absolutely. So you were taking part in a little panel earlier where you were kind of talking a little bit more about the industry. Now you're going to get to go into and talk a little bit more specifically about BTCS. I will let you take it away, sir.
All right. Thanks so much, Brett. So as Brett said, I'm the CEO of BTCS. We're one of the first public companies in the U.S. So I'll start off and just go through some of the investment highlights. BTCS currently has three core focuses. The first is our blockchain infrastructure solutions, where we basically secure disruptive blockchains such as Ethereum's Beacon blockchain and generate revenue doing that. We also are building a non-custodial staking as a service platform to grow revenue and expand the margins by allowing other users to secure these disruptive blockchains. That's essentially similar to running pools if you want to have a Bitcoin mining equivalent. We're also building a data analytics platform to allow users to connect multiple exchanges and view their performance metrics. And our last component of the business is just a digital asset treasury strategy, similar to what MicroStrategy and other large companies have done. And that's been extremely successful for us with over 7,500% year-over-year increases as of Q1. Our goals for the future are to uplist to a senior exchange. We actually just applied for our NASDAQ listing yesterday to secure other disruptive blockchains and to launch our staking as a service platform as well as the data analytics platform. Just for some quick industry overview, we view The internet kind of is the digitization and proliferation of information. You can share information, whether that's an Excel file or a PowerPoint, a video, anything globally. However, until blockchains came about, you were unable to share assets globally without a trusted third party. And blockchain technologies allow for the digitization of assets and sharing. We've seen that with NFTs as an example of art, but also as cryptocurrencies such as Bitcoin, Ethereum, etc. So there's a lot of use cases for blockchains, both as digital currencies, smart contracts, record keeping, securities. There's lots of different companies working on these. I think the two big use cases that are being deployed really are NFTs and DeFi, where there aren't incumbent players making it hard to launch these products. And most of these disruptive solutions are being built on top of smart contract-based blockchains such as Ethereum, Polkadot, Cardano, Algorand, Tezos. There's a whole bunch that are getting built on top of this. It's obviously a huge market opportunity. There's global investable assets are about 120 trillion, and the crypto markets are down in the 2 trillion range. So we see there being huge upside potential for the markets going forward. Moving forward onto kind of what BTCS does. Again, we have three main components: our blockchain infrastructure solutions, where we basically are staking Ethereum and securing Ethereum's 2.0 beacon chain, and we plan to stake Cardano's blockchain by the end of this month. Our data analytics platform and our digital asset treasury strategy. We had some great operational highlights. This is actually a little dated. We just put out our 10Q yesterday, so we haven't had time to update this. We had, as of May 11th, approximately 37 million in crypto, a total of about a little over 40 million in cash in crypto as of May 11th. We had 3 million in realized crypto gains for Q1, 7.8 million in unrealized gains as of March 31st. It's obviously substantially more. 15 million shareholders equity. Management invested 1.1 million in January. We're now actively generating revenue. In Q1, we did 72,000 for the quarter, but that only started at the tail end in late February. To date in Q2, for the first 6 weeks, we've generated 192,000 in revenue. And we, with a 75% gross margin, we see that expanding going forward. As far as the management, the team is Michael Handerhan, he's our COO, and myself as the chairman. We're actually looking to hire a CFO in the coming months to broaden our team and add more financial oversight as well as growth ability. We recently added 2 new independent directors, Charlie Lee, who's the creator of Litecoin, former Coinbase engineer. He recently joined as an independent director on April 1st, as well as Carol Van Cleef, who's well recognized within the blockchain space. We've been one of the first public companies in the space, and we've had the chance to try our hand at a lot of things, such as Bitcoin mining. And we think we've kind of honed in on what we believe will be the most profitable and best business for our shareholders going forward. We think we can create the most shareholder value by securing disruptive blockchains where those underlying assets can go up in addition to generating revenue from securing them, as opposed to a Bitcoin miner where you're basically buying a depreciating asset. I touched on our cryptocurrency assets a little earlier, but as of May 11th, we had 37 million. The majority of that is is in Ethereum, which is staked. We had about 5 million in Bitcoin, and 90, which is 90 Bitcoin. One of the big goals for the company is to uplist to the NASDAQ. In that effort, we've recently submitted our application. We believe uplisting to the NASDAQ will open the company up to a wider array of shareholders, specifically investors that have accounts with Webull as well as Robinhood are unable to purchase our securities, and many institutions are unable to purchase our securities as well. So we believe if we're able to successfully uplist to the NASDAQ, there'll be a wider addressable audience in terms of investor universe, and hopefully that will translate into share appreciation and shareholder value. Compared to many of our OTC peers, we're just a huge discount. Looking at all these companies based on their last public filings, we have substantially more cash in crypto than all of them combined. I think it's 2 to 3 times more cash in crypto than all these companies put together. So we're, in our view, a value play compared to our OTC peers, and even compared to our NASDAQ peers, we are still a relatively decent value play in terms of the assets we have on the balance sheet. I touched on the blockchain infrastructure solutions. That's kind of the main revenue driver and one of the core focuses of the company. Our core goal there is to, 1, expand the company operations. Right now we're staking Ethereum. We have 240 nodes running on the Beacon chain. We plan to expand that into other disruptive blockchains, and then build out a staking as a service platform so that we could leverage other users' capital and generate revenue from effectively what is a pool. So we're very excited about this, and we think this will be a big revenue driver for us going forward. In terms of how we select new blockchains to secure, we really have 3 tests. The first is the quality of the blockchain, the market cap, liquidity, what exchanges it's traded on, and most importantly, probably the utility of the underlying blockchain. And then we look at how much revenue can we generate, and then the technical difficulty in order for us to spin up operations and commence securing that blockchain. I mentioned earlier, we're also working on a data analytics platform. The platform allows for a user to connect multiple crypto exchanges into one centralized web portal, so that they can evaluate the performance as well as other ratios, such as equivalent of a Sharpie ratio. The end goal would be to allow users to share their data and allow other people to follow them, very similar to a copy trade, where they would get alerts when someone else trades, and a user on the platform could basically charge other users a fee to allow them to follow. For those of you that do have accounts at various exchanges, most of them do not give you your performance. They only give you the balance at a particular point in time. So you can look at your balance over a day, a week, a month, a year, but whether or not you've actually generated a return on your investment is hard to say unless you've invested just at one point in time. Here's a preview of some of the screenshots. We're actually working to update this to give it a nicer graphical user interface. As far as the roadmap, we're anticipating launching a public beta release in Q3 or latest Q4, so we can get testers on there, with a public release coming early next year. With respect to our digital asset treasury strategy, right now we just own Bitcoin and Ethereum. However, we're looking to expand into other tokens that we believe have tremendous value. Unlike when the internet kind of came to fruition, you could invest in companies that built applications on top of the internet, but you couldn't invest in the actual underlying protocols. For instance, you couldn't invest in the FTP, file transfer protocol. You couldn't invest in HTTPS. All of these protocols what the internet is built on top of were uninvestable. And what's very interesting about the blockchain technology is you can actually, by owning the underlying token, you're effectively investing in that protocol. So you can invest in that business logic layer that was uninvestable back when the internet was launched. So to us, that's very interesting, and we're looking at other tokens that we can put on our balance sheet as well. As far as tokens we're looking at, we're breaking them down into kind of key verticals: cryptocurrencies, smart contracts, Internet of Things, computing, and data storage. Some of these tokens on the smart contract side are proof of stake, so we'll be able to get exposure to those through our staking operations, as well as potentially our staking as a service platform, once launched. So with that said, kind of the investment highlights is we're right now the only pure play U.S. public company focused on disruptive proof of stake blockchains. We believe proof of stake blockchains are much more environmentally friendly than proof of work blockchains. Elon Musk actually just came out with a tweet that Tesla's not going to be buying any more Bitcoin. Most likely, he's going to be looking at proof of stake blockchains. We believe if you can have the same security that a blockchain offers through a different consensus mechanism, it makes a lot more sense. Obviously, there's a place for proof of work blockchains, but we see a lot more potential in proof of stake blockchains and potentially, proof of stake blockchains that are smart contract based, where applications can get built on top of. We're also, targeting revenue growth going forward. We're looking to build out the staking as a service platform. And, the big thing, just kind of summarizing, is we're optimistic that we'll be able to uplist the company to a senior exchange, to the NASDAQ shortly, assuming we're able to meet their requirements. So with that said, I'd like to open it up to any investor questions.
Awesome, Charles. I think that we have the most questions from the chat here for your presentation. So let's see if we can knock out a few of them. We probably won't be able to get to all of them here, but a couple questions on timelines. You just mentioned it a couple seconds ago there. Do you have any timeline for a NASDAQ decision on your listing?
So we submitted the NASDAQ application yesterday.
Okay.
We waited to submit that application until we filed our 10Q, such that all of the initial listing requirements that the NASDAQ requires you have were solidified in a report that had been reviewed by our auditors and filed with the SURG. So we've been advised it could take 6 to 12 weeks to uplist to the NASDAQ. Obviously, we can't guarantee they will agree to list us. It's kind of like joining a club, but the timing, based on what we've been told, is 6 to 12 weeks.
Awesome. Thank you for answering that one. And then another little timeline question here. Do you have any timeline for being cash flow positive? Another question from the chat here.
We haven't put out guidance on being cash flow positive. We have put out guidance on revenue expectations that we expect to do over 1 million in revenue for 2021. That's frankly very conservative. We did 192,000 in the first 6 weeks of Q2, and 72,000 in the basically last month of the first quarter. So when we'll get to cash flow positive, we're not putting out that level of guidance at this stage.
I figured. Another question here. Will the company use Charlie Lee's quote megaphone reach, I guess, to promote crypto and blockchain initiatives? It's a pretty good question.
Look, Charlie is an independent director, right? So his role as an independent director is to do what's in the best interest of our shareholders, right? Make sure that we can create the most value for our shareholders. If he, is open to talking about the company via his Twitter or other feeds, that's purely up to him.
Mm-hmm. Awesome. Well, I keep saying this, but I wish we had a little bit more time with our presentations. We do have a couple more questions, but Charles, how can some of potential investors or investors in our chat get a hold of you?
The best way to get a hold of us is you just go to our website and you can just submit a request. I look through all those personally. So if an email comes in, you'll get a response. So that's the best way to connect with the company, or you can reach out to Dave Gentry at Redchip, and his information is was on the screen, but it's also listed on the.
There it is.
There you go.
Somebody helped you out.
You can also reach out to Redchip as well, and they can set something up.
Awesome. Charles Allen, BTCS CEO and Chairman. Thank you so much, sir. You have a good weekend.
All right. Thanks so much, Brent. Enjoy your weekend.
You too. Thank you. All right. We're coming fast here. We're coming hard. Next presentation. It looks like she is ready. This is Amosite, ticker AMST. It's Anne-Marie Sastry. She is CEO and chair over at Amosite. How's it going?
Going well. How are you today, Brent? Happy Friday.
I know. I love Fridays, and I'm excited to be helping out today. The event has been going awesome so far, and I'm sure you're going to keep the momentum going here.
Hope so. We're pretty excited about what we're doing at Amosite. So.
Awesome. We'll take it away, Anne-Marie.
Thank you so much. So I'm going to go ahead and share my screen. Are you going to go ahead and activate that, or do I?
So you have to hit on. You have to hit it on your end.
Got it. There you go.
I see it. Yep. Awesome.
Great. Well, happy Friday, everyone, and thanks so much for letting me be a part of the Benzinga conference. We're very excited to be here. I'm very excited to be here on behalf of the team. My company, Amosite, is an artificial intelligence software company. We're a SaaS business, and our mission is to improve the way the world learns. Before getting into details, I have the forward-looking statements. And getting right to it. Why a SaaS company for online learning? Well, first, it's a huge market opportunity, addresses multi-billion-dollar online learning markets in business and education. We have a unique business model for a transparent B2B business that creates a growth opportunity for revenue for our customers and for anyone who wants to deliver learning. Third, we have a proven technology that scales. Our customers love us, and if anybody has a few minutes, if you'd like to visit the website, there are case studies available on the web that shows has our customers talking about us and how they love the solution. Fourth, we have a solution that customers love. They have great user experiences, very scalably. And then finally, fifth, these markets are urgently in need of growth. Online learning is the future for professionals, particularly. The vast majority of CEOs report that they have not enough skills among their work cohorts in order to execute on their strategic plans. These markets are large and growing very rapidly. Some of our wins to start off. First, in sales, we actually had the opportunity to teach the Ford management team AI. Amosite not only delivered that learning experience on our platform, but also created all the content. And global managers were able to upskill in AI, demonstrating very high quality and satisfaction and outcomes. Ford took the unusual step of signing off on a press release on that, and you can read about that as well. Another company, EWIE, a group of companies, were piloting an entire global solution for them as a turnkey learning system that allows them to track the learning across regions, geographies, expertise, and time zones, to track people, teams, and locations easily. This is really important because when companies want to deploy workforces on strategic problems, they need to know right away what the learning status is, what the skill level is of their people so that they can assign the work efficiently, and EWIE is taking that step. Another great example, Warrior Tech Source for the Enterprise, a Wayne State University program. This learning ecosystem has been called the most advanced in the industry. Wayne State is an outstanding institution located in Midtown Detroit, and they are very committed to making sure that their alumni keep their skills up. Many of them learned to build traditional vehicles, and now the auto industry is quickly shifting to build electric vehicles and autonomous vehicles. And so Amosite has created products for Wayne State to launch that will be sustainable and will achieve their public mission of educating their cohorts. In terms of product, the biggest number that we're very proud of is 98%. 98% retention across all Amosite products, and there are some quotes there. How do we achieve 98%? Well, quickly, I'll talk with you about some of the technology under the hood and how we do that, including design, and design is simple and easy to use. Our technology on the right-hand side has outstanding video streaming capabilities, top security, efficient infrastructure management, and intelligence that drives the solutions. Bottom line is we're a scalable B2B solution in several markets that are blowing up. So meet Amosite. This is a few screenshots of the platform. We're a cloud-based platform and content creation services, and we provide fully managed, customized learning community environments for our customers. Our mission, like I said, is to improve the way the world learns, and additional key accomplishments. We've won major organization-wide sales to become the sole L&D platform for several institutions, and demonstrated, as I said, industry-leading retention rates across all of our programs. Some of our customers are actually very well-known, nameplate customers, and we've been awarded not only for our technology, but important as our intention is to scale with purpose. So we've won 6 different Workplace Excellence Awards. We are a fully remote business, and 2 of those awards were national awards. The bottom line is that when you look at all these SaaS businesses that are exploding and changing the way business is done, COVID has accelerated that clearly. Music, retail, and banking leapt ahead, but education has been called the worst experience on the internet. That can't be the case, not for society, and there's a giant unmet need that Amosite is addressing. So our model in markets, simple. We offer SaaS scalability and flexibility, and we target high margins and high annual recurring revenue. We have simple and easy to use contracts, setup fees, course creation fees, maintenance fees, and user fees that allow us to scale. We're adaptable and flexible and can scale with our customers. For enterprise solution, Amosite is the solution that scales easily. Some of our customers don't even have IT people. You don't need it with the Amosite solution. It's that easy to use. We deliver courses and the platform, and that makes us unique in the industry, uniquely able to address the pain of standing up something that's important. A quote from the CEO of the Henry Ford Museum is shown as left, saying that the results so far have been unparalleled, and they can achieve their goals using the Amosite platform. So we deliver for the whole enterprise, or we even deliver smaller solutions, all flexibly. In higher ed, we drive revenue for our partners. Higher ed chooses Amosite because of our advanced technology and also our high retentions that result from that. We deliver ecosystems that generate revenue. Wayne State University is a classic example. They're offering programs now that alumni pay for that can become self-sustaining and deliver value to the institution and to the users. And of course, Amosite can scale very fast that way. We're delivering experiences that build loyalty as well. And so leveraging these alumni relationships is very important. Just by the numbers, alumni typically outnumber matriculated students by about a factor of 10 to 1. So that's a growth area for universities to sell products into. A case study is shown here. This is the Henry Ford. And the Henry Ford has launched what is called InHub, which is an Amosite built product that is a learning environment, and it's called a learning community environment. You can see a quote from the Chief Learning Officer at left, Lucy Howell, who talks about how important InHub is to achieve their mission and how they appreciate, as we do, the partnership. The challenge was to not only deliver learning, but also to increase access to the Henry Ford's prodigious collection of artifacts, 26 million to be specific, providing insight into 300 years of American innovation. Amosite, as InHub's, as Henry Ford's partner, not only delivered the learning community environment, but also integrated other pieces of the Henry Ford's digital footprint, enabling Henry Ford to offer an integrated learning experience. We can do that because of the architecture of our code, and I'll talk about that in a bit. Wayne State is another example I've talked a little bit about, where they are focused on helping professionals be successful, and they have credited us with being able to go faster than they ever could have. If you look at universities in general, teaching schedules are typically laid out 18 to 24 months in advance, making it very difficult for universities to quickly build programs because they're almost always built by faculty. In the case of Amosite, we utilize subject matter experts and content developers who are professionals, including frontline staff, to build content efficiently and fast. We can stand up over 10 or a dozen programs in 30 days flat. It's a blistering speed compared to what's typical in academics. And as an academics partner, we can produce these revenue generating centers. So what is the technology? Well, first off, Amosite uses AI to improve learning. We drive engagement by reading, our bots read hundreds of thousands of articles a week from qualified sources and serve them up along with content and analytics that make the experience, the learning experience, fresh every single time. We also use best-in-class code and architecture, where an Angular Node.js Postgres database shop were built with similar tools as Netflix and PayPal, and they auto-scale right out of the box. And finally, Amosite Tech supports simple, scalable solutions across the enterprise that can integrate other pieces of code easily. So whereas some of our competitors in the marketplace do not do that as a rule, we do, because it's easy for us to do it. It's straightforward for us to do it. And it builds an incredible value for our partners. So if we look at the investment landscape quickly, we have what are called the learning management systems, the LMSs. Some of these companies include Pluralsight, Stride, for example, Blackbaud. We are disrupting the LMS, but we view this space as a potential customer space as well, because we have the ability to deliver a premium product for any of these companies. There are a group of companies called OPMs, or content curators, program managers, and service providers. We believe this sector will continue to spur advancements in learning market. And again, we look at these companies as potential partners. And then finally, there are platforms for the future of work. And as you know, COVID accelerated the future of work, and many companies now are looking at having up to 30%, sometimes more, of their workforces work remotely. Amosite is an ideal L&D partner because we integrate other data sets. The rich data sets that come from learning and development experiences can be leveraged and utilized across other functionalities of the company with Amosite as a partner. and our competitors just don't do that. Our leadership and board are shown on slide 14 if you're watching the presentation. About myself, I'm an engineer by training. All of my degrees are in mechanical engineering, applied mechanics. I undergrad Delaware, Ph.D. Cornell. After my doctorate, I went off and programmed in the Big Cray at Sandia National Labs. There I was recruited to the University of Michigan, where I served on the faculty for 17 years as a professor. While a professor, I started 2 large research centers, one in bioscience and one in clean tech, and also started a large global graduate program, which in many ways was the genesis of Amosite, because I did not like the tools I had to work with. So that stuck in my mind as that was on my to-do list. I also started a company when I was a professor. It was quite successful, SAFTI3. We set a world record for energy density in a battery cell. We're honored at the White House. I was honored at the White House by President Obama on behalf of my team for technology and entrepreneurship. And we sold that business to a company called Dyson for $90 million about 4.5 years ago. After that, I went to work at Dyson as a couple of years as an executive and built up teams across the planet, and then decided to start this company. My colleagues on the board are exemplary individuals. We have successful real estate developers and professionals who have been in business a long time and are very interested in growth, including Anthony Barquette and George Parmer. We have Barbie Brewer, who ran talent for a little company called Netflix, and she is an amazing advisor on people. Mike Losh was the former CFO of General Motors, and of course chairs our audit committee and has vast and extensive experience in all kinds of fields and served on multiple public boards, as has Gil Oman, who's the former CEO and Chief Medical Officer at the University of Michigan. Among his accomplishments, in addition to being a White House advisor for many years and serving on every blue ribbon panel you can imagine, is also served on the board of Amgen as one example. Richard Ogawa is on our board as well. He's regarded as one of the best patent attorneys in the world and served as general counsel for Infi, which was just acquired by Marvell for $10 billion. And he was the general counsel in that transaction as well. So we have an amazing board of directors, and we're excited about the future. Thank you very much for listening, and happy to answer any questions you may have.
Anne Marie, I know Amosite is based out of Detroit. Are you in Detroit?
I'm located in Ann Arbor, Michigan, actually.
Nice.
So, yeah, and our people are all over the place. So we have people all over the country. It's easy for us to recruit because people don't have to move, which is great.
Right.
The first company I had the experience of moving people at Amosite. It's very quick, so we can build quickly. And we find awesome people because of our mission.
Awesome. Love it. I mean, it's good to see a fellow Detroit company. Maybe I'll go walk down the street a little bit later and knock on your guys' office and say hello. So yeah, let's get, I have one good question here. I think for you. So, you know, you were touching on some of the application for like a Henry Ford or like a higher education institute like Wayne State. I can like give me a specific example of how a user is like an alumni is using the software.
Right. So an alum gets an email from their institution. They love their institution. And so they open it and they see an opportunity to come learn about electric vehicles. They may be working at a big car company, working on IC engines. And meanwhile, the CEO says, we're all going to be electric. We're going to be all electric by 2050. So that person says, I better learn something about this. And in fact, the company needs them to learn something about that. So they go to their alma mater, Wayne State, and they sign up for a 6-week course in EVs. They double click that and decide, hey, I not only like EVs, I want to learn more about power electronics or about data transfer or about Internet of Things, or I want to learn about connectivity or vehicle to vehicle. They get another notice from Wayne State saying you want to take the next course. So Wayne State provides a very vital service and generates revenue with the Amosite solution, and the Amosite solution scales. And of course, one element of compensation for us is user fees. So we not only have a license fee, but content creation fees, but also user fees. So as they build their systems.
And so is the application for somebody like a Henry Ford pretty similar to that?
Henry Ford is somewhat similar. Henry Ford wants to deliver education. They started off with teacher training. They are focused on innovation. And so in Henry Ford's case, they wanted to teach everybody how to teach innovation. So they taught K-12 teachers how to teach innovation, and they taught it all on the Amosite platform, and they gave it great reviews. It's important to note that we're agnostic on pedagogy. We will teach anything on the platform. We want to make sure that user experience is good. So unlike, say, a Pluralsight, which is focused on IT, we've taught everything from, Psych 101 to AI for global managers.
Amazing. Awesome. Yeah. Well, thanks for answering a couple of those questions there, Anne-Marie. Anne-Marie Sastry, she's CEO and chair at Amosite. It's ticker AMST. And on our presentation, the website just popped up there, amosite.com. Any other tips on getting a hold of somebody from Amosite, Anne-Marie?
Absolutely. info@amosite.com. I read them all. And also, you're welcome to reach out to Dave Gentry at Redshift.
Awesome. Well, thank you very much, Anne-Marie. You have a nice weekend.
Thank you. You too, Brent. Take care.
All right, later. All righty. And I am not trying to, I want people to stay on this track, but heads up, we are having the afternoon keynote over on track 1 in a little bit here with Kevin O'Leary. So just wanted to make sure that was on your radar. Next up here on track 2, the new economy, we have from InvestView, Joe Camarado. There he is. How's it going, sir?
Great. How are you?
I'm doing good. I will let you take it away, sir.
Okay, great. Thanks, Brent. Good afternoon, everyone. My name is Joe Camarado, CEO of InvestView, and I'll try to keep this pretty brief and get to the Q&A section. InvestView is, as you can see here, a fintech blockchain brokerage company. We're a public company listed on the bulletin board, which has had quite a big change in the last 6 months. We'll go through a little bit of a story. We just had an shareholder webinar earlier this week. So some of the information is fresh. We've reused it in this slide, and I'll go through a lot of it and answer any questions as we go on. I'm going to start by saying that basically the default disclaimer that all the statements are historical in fact. They're forward-looking statements, and please pay attention to this and refer to any of our filings under the EDGAR at investview.com. So as I mentioned earlier, I took over as CEO in January 2020 or late December, and I'll just go through what we've been doing. For those of you that do not know about InvestView, InvestView was initially, for many years, a network marketing company that focused on investor education. They would teach people how to trade and provide different strategies. There was a registered investment advisory for a while, but it was a company that was teaching investor education, but didn't have any trading tools necessarily. So when I became CEO of the business, we decided to go in a direction of fintech with some diversity. So we'll go through a little bit of that today, talk about what happened from January of 2020, the current state, the vision, and then, as I said, a brief Q&A. This is, again, we use this for the shareholder webinar, but it's my background. Fairly boring, just almost 30 years of fintech. Some of the notables are, I created back in 1992 one of the first off-exchange trading systems. Basically, took the NASDAQ system and made it off of the NASDAQ to allow people to trade electronically. I then created in 1998 one of the first ECN aggregators or market aggregators and smart order router. I then sold that business to the Bank of New York in 2004, and then had a 3-year sentence working for a big bank, which was very tough. Came out in 2008 and started into mining, and was fascinated with Bitcoin mining very early on, obviously. But I took a lot of my trading experience into the mining and built one of the very first level 2, full depth of book Bitcoin trading system, which got a lot of interest from some large people. But the problem was, if you were a trader, you didn't know what mining was or Bitcoins. And if you knew what Bitcoins were, you didn't know how to trade. So that system kind of went on a shelf. And then I started into my next business, which was a smart order router for institutions, which quickly garnered about 2 to 3% of the US exchange volumes on a daily basis. I then sold that business along with the crypto to Overstock in 2015. It became T0, one of the first digital exchange trading system, along with the existing brokers firm that we had and all the systems. So that kind of took me out to 2018, where I started a family office. And then in 2020, late 19, early 20, got involved as a CEO of InvestView. You could advance. Oh, sorry, it's there already. So I took over, and as I mentioned earlier, this was a network marketing company that had an enormous amount of debt and really was having a tough time. Basically, the team and I eliminated the debt. We started reducing a lot of the operating overhead. There were some businesses and lines that really weren't good that we cut out. We got into additional products. As I mentioned, the big part of our business is diversity, and not just network marketing, and we'll talk about now we're into Bitcoin mining and brokerage, but also diversity of other products. So we'll talk a little bit about that. We've got the network marketing business is called iGenius, where we're a distributor of the NDAO token, which is a very cool adaptive currency. It's done great, and as of late, it's increased very nicely because as opposed to Bitcoin, where it's statement of work, we are a staking, so it's statement of proof, where you're using much less power. There's a storage requirement, but it's a lot more green, and it's in light of recent events, it's been getting a lot of interest in that it's more, I guess, energy conscious. We've established now, that being said, on the BTC side, we are one of the third largest, or we're the third largest miner in North America. We're mining about almost 3 Bitcoins a month, and we'll talk a little bit more about the financials in a bit. And as I mentioned earlier, we're diversifying into fintech and other crypto and blockchain technologies. This is a quick run through of the financials. What's most notable is, well, first of all, our fiscal year is a little bit strange. We run from April 1st, through March 31st of 2021. So we are now in fiscal year 22. So I'll talk briefly about 21 fiscal events. Basically, the cliff notes are the business lost $23 million last year, and off into this year, we are now doing about $2.8 million a month in profit. So it's been quite a turnaround. I'm just looking at 37.7 million revenue. It's up 56% year over year. 1.6 million net income. So that was just the early start of it. So you could see essentially a big turnaround in just the last 12 months alone. And we're hitting record months of revenue and profit now every month. So, and then the full year audited financials will come out on the 29th. So again, that was more for the shareholders, but thought it might be interesting for you guys. Again, quick, where do we stand? In late April, the board announced that we are now registered for a reverse split. So as I mentioned earlier, we are on the Volta board, and it's not the best place to be, especially in light of us with the expensive growth that we've had and the turnaround. A lot of people still see us as a penny or a penny and a half stock, which we were last year. So we're looking to uplift potentially on the NASDAQ and start getting some marketing and get the word out there a little bit. May 3rd, we reported, again, another record month of 3.43 of revenue, and that's just mining revenue. May 5th, we talked about, a lot of people were saying, well, the shareholders, the stock went from, 1.5 cents and it went as high as 80 cents or so. And a lot of people were saying, hey, are all the shareholders dumping? And we thought it was important to tell the world that no, the major shareholders and executives have all locked up. So nobody's selling. And we have a lockup that goes out for, I think, about 4 years with some provisions in there. And then May 7th was a big announcement. We announced the acquisition of brokerage, a broker-dealer, registered investment advisory, and Prodigio, which is a very high-tech trading system, which allows essentially for individuals to create their own customized algorithms without being a developer. So this is something that's brand new and we've never seen before, where it gives individuals and even institutions the power to create their own algorithms on the fly using if-then statements. So if you can see, we're rolling this all into a large brokerage play. maybe if you've seen Robinhood or maybe Investors Interactive Brokers, it's a combination of all of these with a network marketing play. So now we'll talk about a little bit of the future. As I mentioned a little while ago, we've come a long way. We're now looking to provide the brokerage, advisory, trading algorithms for both self-directed and institutional investors. Again, it's a very big market. I've been in the institutional space. I've played a little bit in the retail space. This is going to be a very, let me put it this way, we're in a very hot space. If you look at all that we're doing, from, first of all, Bitcoin mining, very hot right now. Brokerage, if you look at Robinhood, and fintech. So we're really on the growth trajectory to do, potentially we're looking at 40 million. We're on track to do 40 million revenues this year. We're looking to get into other products. We're looking to expand into routing and clearing services potentially, to have under the fintech umbrella, everything all encompassing. So you could trade, create your own algorithms, but then we want to be able to provide routing and clearing so everything is in-house. We're looking to get into, on the brokerage side as well, mining. So not only trading of crypto. So while we're mining, we're also able to trade any crypto assets from Bitcoin, Ethereum, and obviously we'd like to trade our NDAO, which we're offering as well as a currency through iGenius. Part of the big problem also now we're seeing in Bitcoin mining is there's millions and millions of miners out there, and a lot of them just stop working because of the high heat that they're under. They're using a ton of electricity, so they're running very hot, and they die. I mean, essentially, there's probably millions, if not tens of millions, of Bitcoin miners that have just gone to the scrap heap. So we're creating a service of mining, repairing these miners, and also cooling technology. So we've come up with some patented technologies around cooling of these miners, and also reduced consumption. So we're creating some firmware, an advanced firmware that allows these miners to be more efficient, burn less electricity, run cooler, and then again repairing of these miners in the facilities. So we think that's going to be a huge service, and again diversifying from just mining or just trading or just network marketing. And as I mentioned earlier, we're going to utilize our global distribution channel of iGenius to market and distribute all of these fintech products that we've talked about today. And again, quickly, I'll run through the basic cores of the business. It's broken up into 3 segments. iGenius is, again, the distribution of investor education and network marketing for all of our fintech products. On the right, we have SafeTech, which is the mining operation and now the repair and optimization facility. And then in the middle, we have the InvestView Financial Group, which is now encompasses more of the fintech, which has the brokerage and advisory services, Safe Management, which is a commodities and Forex registered investment advisory as well, and then the trading tools, Prodigio, which will be advanced trading tools for retail and institutional traders. So I guess in summary, what I'm talking about here quickly, and I apologize for racing through this, we don't have much time. But what we're doing is basically, we've got the vision and the team has been executing on it very nicely. I mean, the numbers speak for themselves. We've taken a network marketing company and turned it into a fintech company while still utilizing the tools that existed for distribution. And as I mentioned earlier, we're in some of the hottest spaces right now of fintech, crypto mining, brokerage, advisory. And the one thing that a lot of people aren't realizing is the sheer amount of data that we're collecting on all these products. And people talk about Facebook and Uber and Google, and these are all great companies, but they're really data companies when it comes down to it. So we're also excited about the opportunity of figuring out how to monetize this data. And again, further diversification of what we're doing. So in summary, we're in a very hot space right now. We're diversifying well, we're growing significantly, and we're very excited about the future of what we're building here.
Awesome, Joe. The pacing was great, man. You know, if it felt like you were rushing through there, no, you did a good job, man. The chat was interested in having you expand a little bit on when you were talking about you know, some of this cooling technology, some of this repair for these mining operations. Can you elaborate a little bit on that kind of segment? And do you know when you're going to hear back about some of those patents that you mentioned related to some of that technology?
Yeah, sure. We have filed, and off the top of my head, the provisionals on the technology, there's differing technology. So let's talk first about the cooling technology. We're working on several technologies. I mean, I could say broadly, there's liquid immersion is, and it's almost exactly what it sounds like. There's nothing magical about it. It's been around for years, but it's essentially taking electronic equipment and just pouring into liquid, non-conductive liquid. It's almost like a mineral spirits of some sort. I mean, I wouldn't suggest mineral spirits would gum up your equipment, but it's utilizing the thermodynamic qualities of liquid to disperse heat very efficiently. And, you know, without getting into the detail of our patents, we're utilizing some of that along with some very revolutionary other cooling technologies, which we will talk about shortly, but not right now. You know,
I gotcha.
We have an R&D facility we just opened in the US that is doing the repair and also the R&D for the cooling technologies. Now I'll talk about the repair. It's a huge business right now. With the amount of miners and with Bitcoin where it's at right now, the pricing increase, as I mentioned earlier, there's a ton of miners that just stop working because they're in very demanding environments, hot environments, and people just, they don't have time to repair it. They don't have the knowledge to repair them, and they just replace them. So there's tens of millions of units out there, and we've got a ton already that we've been repairing successfully, and we're now starting to turn that into a service for other very large mining companies.
Super interesting stuff, Joe. Wish we could get to a couple more questions here, but if you don't mind, could you give the audience some good contact info to get a hold of you? Maybe they can get some of these other questions answered.
Yeah, sure. The website is investview.com. I think it's pr@investview.com is the best email to contact.
Okay.
And that would probably just pr@investview.com.
Gotcha.
And the company's number is on the website. Oh,
Appreciate
yeah, it just popped up. So great.
Yep, investview.com it is. All right, Joe Camerata, he's CEO of InvestView. Thank you so much for joining us, sir.
Thanks, Brent. Take care.
All right. Yep, later. All right, next. It is 2:29, just checking in here on a little time. We have Leaf Mobile. Ticker is on the Toronto Exchange. Leaf, that's a nice one you got there. This is the CEO of Leaf, Darcy Taylor. What's happening, Darcy?
Not much. How about you? Looking forward to a weekend, I would say.
Always looking. I mean, I like Benzinga. I like when we're at work. We got some great people here. We're building some great stuff. So, you know, I'm excited to be here, but I do love my weekends. Don't get me wrong.
Yeah, sun is shining here, so we're waiting to get outside and enjoy the mountains of Vancouver.
Looks like you got a very nice cityscape behind you there. You said you're in Vancouver?
Correct.
Awesome. Well, I will stop taking up your valuable time here, and I will let you have at it, sir.
Thank you. Well, thank you, everyone, for allowing me to present today. So let me light this up. Obviously, we have some forward-looking statements, some boilerplate here, but let's jump right into it and sort of set the stage by highlighting our accessible market. So very simply, we're a mobile game developer, and we are accessing one of the largest, fastest growing markets in the world. Very simply, mobile is eating the world. 50% of the world has a smartphone in their hand. It started in 2007 with the introduction of the iPhone. It has continued to grow with no signs of slowing. Then if we look at gaming and mobile games, gaming is eating mobile. What do most people do on their mobile phones? Predominantly, they're spending money and playing games. Overwhelmingly on iOS, mobile gaming is the highest revenue generator. It dwarfs all other areas combined. Then if you look at the entertainment sector that we participate in, the gaming is the entertainment vertical at the moment. Gaming is growing faster than all other areas and is actually bigger than every other entertainment sector combined. That's music, TV, movies, etc. So if you're gaming, you're mostly likely doing it on a mobile phone. And if you're enjoying entertainment, you're most likely enjoying gaming in that space. So just quickly leaf at a glance, we're a mobile powerhouse. We are also Canada's largest publicly traded mobile game company. We're headquartered in Vancouver, 150 plus employees, roughly 2 studios currently in Eastside Games and Leaderly Games. Our main markets are English-speaking world, predominantly US, UK, Australia, Europe, and Canada. We operate a distributed studio model and have a software technology platform that we believe will disrupt the way games are developed in the market. Just to give you an idea of the size and scope, we've finished last year with reported numbers of 80 million in total revenue, 11 million plus in adjusted EBITDA, and we exited Q4 with 23 million in revenue. And we refer to it as a 232 because we doubled our revenue, tripled our EBITDA, and doubled our quarterly revenue in the past year. We have a portfolio of 10 games. We are leaders in the casual idle genre that we participate in terms of revenue generated. And we have a very robust pipeline of 7 games coming in 2021. Just to walk you through our journey, I'll highlight right now we're in a very firm structure phase after graduating to the TSX in 2021 February with the acquisition of Eastside Games for $159 million in cash and equity. We've appointed KPMG as our auditors. We've brought on a seasoned public markets CFO, but we haven't slowed down our journey because we have just signed an LOI for Truly Social Games as an additional studio to bring into our group. How do we make money? We have 3 revenue generating pillars of growth that I'll tap onto and speak about. Our first is portfolio and product. This is our publishing and games development side of our business. We generate free-to-play mobile games that create revenue by in-app purchases and ad revenue. The mix is roughly 70-30 between in-app purchases and ads. We focus on IP-driven games, and you'll see a couple of the names that we have launched into the market, such as Archer with FX, as well as It's Always Sunny in Philadelphia, Goldberg with other studios in the US, and Trailer Park Boys, as well as Cheech and Chong Bud Farm. Our second portfolio is our distributed growth portfolio. This is what we refer to as our blue sky or technology platform that allows developers to develop games faster, cheaper, with a higher propensity of success. We generate very high margin SaaS type revenue with an upside sweetener on participation of the royalties in the games in the back end. And then lastly, M&A. This is our acquired growth pillar where we look for accretive or scale and unit economics improving studios, and our revenue consolidator in the space. We have 2 acquisitions already under our belt and a 3rd one in play. Just to underline some highlights that we've had since the start of the year that line up with each one of our growth pillars. I'll just pick and choose a few ones of note. Most recently, we signed a major deal with WOW Productions for the worldwide global rights to RuPaul's Drag Race. This is an absolute coup for ourselves. One, because it creates a category that is being absolutely underserved in the free-to-play mobile space, and that's the LGBTQ+ category. And secondly, we are leaning into this category with the most recognizable name in the space with RuPaul and his Drag Race show, which is now shown in six countries globally, and is a massive success and Emmy Award-winning production. In our technology platform or distributed growth, we brought on 5 partners already in 2021. I'll highlight 2 which show our geographic reach expanding, which is Mighty Kingdom, who we just signed up in April. They are based in Australia and are the largest independent developer in that country, as well as Bigfoot Games, who are based in South America, Argentina specifically, who are allowing us to gain further sort of base in new markets for us to build up and grow our network. On top of that, we've done some very innovative stuff with our Idle Kit platform, which is introducing a game creation tool set that allows developers to introduce non-fungible tokens or NFTs into the space. We think this is an absolutely exciting area in the what was referred to as the metaverse now, where you start to blend or blur the lines between games, where you can carry game-based assets from the virtual world into the game world. And additionally, we launched Bitfarms Nifty Stash as a part of this with Wax partnership, which is the largest marketplace for NFTs in the video game world on 420, to sort of lean into and learn from doing versus learning from the outside. We're excited about this because one of our founders of Eastside Games was also the co-founder of Dapper Labs and co-creator of CryptoKitties, which is a unicorn in the space, and he's been shepherding us through this world. And then lastly, as I highlighted, M&A, we have an LOI out for our next acquisition, which we should close in Q2, which is for Truly Social Games, who was the developer with us for our Archer launch. When we talk about our portfolio, I highlighted earlier, we have 7 games in the pipeline. We have 3 major IPs that are yet to announce, partnered with major studios such as NBC and 2 global studios. We're very excited about this because we are building into the year, exiting with a $23 million run rate and $80 million full year. We are basically going to double our portfolio in the next year, bringing on top tier IP and revenue stacking as our current portfolwe is moving into the high EBITDA and high earning optimization phase. So if we think about what we delivered last year and doubling the portfolio this year, we're excited about our opportunity going forward for further growth in 2021. Now, diving a little deeper into our Idle Kit platform, as we highlighted, this is an absolute blue sky for us to leverage. We've had very high interest from independent developers in professional studios. We have 9 announced partners on the kit currently, of which we use internally to build our games also. The big point about this is that it de-risks development for these studios, providing a build framework for them to develop idle-based games that also sits on their existing tool sets that they do to create, which is Unity and Steam. And it's a seamless tool for them to build upon and basically reduce time, reduce a cost, and increase the propensity of success. The huge benefit that we see from it, on top of this distributed revenue piece of recurring revenue on a SaaS-based margin, is that it's also an absolutely brilliant M&A pipeline. It gives us true clear line of sight of studios that we potentially can work with or could join our group in the future. So we consider it an incubator of sorts for creating a flywheel of growth or a flywheel of trapline for us to build further studios within our group. Truly Social is a perfect example of this, as we had worked with them for a year on the launch of a previous game. They fit our culture, they fit our model, and now we're working through them to be a part of the group. I'll highlight that we have 3 partnership types within the IdleKit platform, ranging from, I'll say, lower investment of resources and time to higher investments, resources and time. And then correlated with that, we participate on the gross economics of on the back end of our partnerships based on this element. Very simply, we have simply a base license that is an invite only to our platform. This is low touch, low economics, but obviously because we're not leaning in with investment, it all drops to the bottom line. Our second partnership is IdleKit plus publishing. Obviously, we lean a bit more and support on the publishing angle. Then the last part is IdleKit plus publishing. And then if we bring IP to the game, such as we've done with RuPaul and others we're about to announce, then we're participating in the greatest element of the back-end gross economics. So sort of wrapping this all up with the next few slides, it's been an absolutely transformational year for ourselves. We doubled our full year revenue year over year. We tripled our EBITDA, as we highlighted. Our Q4 revenue was an exit of 23 million with very strong baseline fundamentals. We've had this 70% CAGR over the past 3 years. And our view is that we're just getting started on the journey. So there's plenty more opportunity for us to leverage our growth pillars going forward. Now, where do we sit regarding competition as far as public multiples? We highlight very simply that we fit in a mid-market consolidator world as far as a game publishing and distributed studio model. Our North Star is Stillfront, which is a $4 billion market cap company trading at LTM or NTM multiples between 7.5 and 5.5. But we really are excited about the blue sky opportunity when you look at gaming and platform tech, of which we operate in now with our IdleKit platform. And then you start to see multiples in the mid 30s or low 20s as far as LTM and NTM, with examples such as Roblox and Unity. So we see ourselves as a mashup of these two. And when you look at our current valuation right now, we feel that there's a generational re-rate opportunity once we gain awareness in the market. And I would highlight that since we just graduated and listed on the TSX in early February, we're very early in the journey as far as building awareness for the company. Additionally, if I speak regarding gaming in general and the scarcity of opportunity to participate in the space, if you look at other companies coming out of Canada, what we're known for, which is either resource mining or more specifically recently cannabis, the global markets of those, I would argue we compete on, with gaming being a $159 billion market, but only having roughly 10 companies participating in this market. And we would highlight that only 2 in Canada specifically that are participating in the free-to-play model. So we feel that us being the largest publicly traded company in Canada are a very good on-ramp for institutional players as well as retail players if you want to participate in this space. It's not very different in the US. There's only about 5 major players in the mobile gaming space. 1 was just acquired by EA, which is Glue, and 2 on the platform area, Roblox and Unity, that just entered into the market. Now, speaking about capitalization and where we sit as a company, I'll just highlight We're very closely held from an insider ownership position, 67% insider ownership, locked up, of it, which is 80% over the next 3 years in various escrows. We've also been buyers in the market when blackouts haven't obscured this. We've been purchasing anywhere from 38 to 43%. 43 cents in the market post our listing and offering because we're very long in the stock and believe in what we're doing and feel that once people realize what Leaf has in hand, that valuation will quickly change. We have 2 analysts covering us right now, Haywood Securities, as well as 8 Capital that just provided coverage at the end of April with buy ratings and a target of upwards of $1 on the stock. Now, companies aren't made up of anything but people, and people are the key drivers for that. So just talking about shaping our vision, I will highlight that we have 60 years of combined experience in mobile games and mobile game development across everyone from EA as well as Magellan and Eastside Games. As far as combined experience in IP management and marketing, we have over 50 years plus. Myself's background was with IMG and Endeavor, or now Endeavor, that just listed on NYSE. Mike Edwards, my co-founder, had experience with CAA, and we have very deep ties with all the major studios from our time working with major IP. On top of this, we have roughly 100 years of AAA game building experience across our studios, everyone from the likes of EA, Rockstar, Ubisoft, Disney. So very strong pedigree of games, mobile, venture, and entrepreneurship, top to bottom. So wrapping this up in 6 simple boxes, we believe Leaf Mobile is positioned to capitalize on multiple opportunities. One, we think we have a generational re-rate opportunity of being a tech platform as well as a studio consolidator to come in line with the current valuations of companies in the space. We have our idle kit blue sky with our distributed growth model that allows us to drive SaaS-like revenue with a sweetener of royalties on the back end for our game development. We have a very strong trap line of M&A through our organic M&A flywheel with idle kit. We have world-class talent within the organization and attracting further leadership talent due to the fact that we're the largest publicly traded mobile game company in Canada. Timing, it's a watershed moment for gaming. Growth has been exponential, as well as we have very good tailwinds and a very strong total accessible market. And then lastly, scarcity, the ability for people to participate in this entertainment sector, as well as mobile being a huge growth segment. We are an access point for institutional capital and an on-ramp to the sector. So with that, I'll stop. And if any questions are here, I'd be very happy to answer them.
Awesome, Darcy. Thank you very much. Just one quick question here. I'm coming from like the news background, more sort of thing. So when somebody says M&A, I'm like all over it. So you know, you were saying that was one of the sort of pillars that you guys are focused on. Can you comment on the types of mobile games you might be looking at for some kind of acquisition?
Yeah, I'll highlight, we don't look for specific games. We more so focus on finding studios that we think have a mix of either, we say, adult management, strong revenue games with long life cycles, as well as fit that would allow us to diversify away from what we have currently in our portfolio, or games that we think are exploited, and we feel we can bring value to the market from that side. So I wouldn't say that we look specifically for RPG or core
right.
or it's a choice of whether we think it fits our model and whether we think we can add value as a group to that. And there's a portfolio of things.
Hey, super smart, love it. Darcy Taylor, he is CEO at Leaf Mobile. It's ticker LEAF on the TSX, and I'm sure, Darcy, in a sec here, we're going to get the website popped up. There it is, leafmobile.io, if you're looking for more information on Leaf. Thank you very much for joining, sir.
Thank you, and please download any of our games. I think you'll find them very enjoyable.
Awesome. Well, you have a good weekend.
You too as well.
All righty. Checking in on our clock here. We got a good couple more hours here to go, ladies and gentlemen. Up next, we have Charge Enterprises. The ticker on the OTC is CRGE, and joining us is the founder and CEO, Andrew Fox. How are you?
I'm great, Brent. How are you?
I am having a great day. It's a good Friday. I usually have good Fridays, but today is an extra good one. So thank you for asking. And I will, without further ado, hand it over to you. I can see your presentation there, so take her away.
Sure. Thank you all for listening. I'm Andrew Fox, founder and CEO of Charge. We're having some technical difficulties, so I'm going to just say next slide a couple of times. First, our safe harbor agreement, and then just perfect into our company history. So we were founded January of 2019. I was an early investor in Lime Scooters, the micromobility company, and was really the impetus for this idea. In January 2019, I had this thesis that electric vehicles, predominantly at the time micromobility vehicles, lack infrastructure. And so from January of 2019 to April of 2019, we locked up exclusively real estate for being the exclusive charging partner for micromobility. In November of 2019, just briefly, we won our first major agreement with the city of Paris. And then as we all witnessed the pitfalls of COVID, we kind of came out of it on the other side. We reversed into a public vehicle October of 2020. We had a 5-point plan. It was to acquire businesses through the telecom and EV space. I'll now get into that. But in 2.5 short years, we now operate across 12 time zones in 19 countries. Next slide, please. We have two interlocking kind of divisions. Our motto is connecting people everywhere with communications, infrastructure, and charging. We do that in the infrastructure space, specifically in electric vehicles and micromobility and personal charging. And on the communication side, our business model is connected calls and telecom network infrastructure. Next slide, please. So as I said a minute ago, our mission, connect people everywhere. And so the way that we see it is telecom, network infrastructure, connected calls, power banks, EV, charging infrastructure, all this unglamorous work, so to speak, in the world of EV and telecommunication is what we specialize in. And because this EV revolution is starting upon us, millions upon millions of EV charging stations need to be deployed domestically. And we don't manufacture these stations, we install, maintain, and service them. Next slide, please. The market overview that we are talking about is relatively large, $200+ billion. And these markets are maturing and continuing to evolve. And so I think that continues to grow, but a very, very large addressable market that we're in. Next slide, please. Our team, today, we're a relatively small team, just under 50 people full-time. Myself and my two co-founders, very, very active entrepreneurs in building businesses. Next slide, please. So our strategy, establish ourselves as the global leader in the installation, operation of EV charging and portable power banks and telecom network infrastructure. It really is the unglamorous side of the glamorous world of telecom, so to speak. But we expect to be the most trusted infrastructure organization in the world. And how we do that is we provide superior hardware, location selection, engineering, installation, testing, and maintenance through this entire life cycle of charging. And from a strategic standpoint, it's a very new industry, the EV space. And so we're pioneering being kind of the infrastructure side of it. Next slide, please. From an infrastructure standpoint, this is where we got our roots. So no, you can keep going. Next slide, please. Thank you. So just to put this at a high level perspective, there's, domestically in the United States, there's almost 290 million cars. Today, only 1.7 million of those cars are EVs. That number is expected to grow to close to 20 million by 2030. And so when you think about where we are today, domestically speaking, we have 100,000 charging stations. That's it. We need in the neighborhood of like 10 million. And so there's this just straight up upward trajectory in terms of the infrastructure that's needed to power the EV revolution. Next slide, please. So we do, like I said, the unglamorous part. That's fine. We do the unglamorous part in terms of selecting the location, installing it, servicing it, and maintaining it. And the way that we see it is because that's a bit of the long pole in the tent for both the manufacturers of electric vehicle charging stations and for the automotive industry, we're looking to find a way to remove that friction and help accelerate the transitions away from kind of fossil fuels into more electric vehicles. Next slide, please. And just to go into, once again, the unglamorous part, that's what we do. We look at the EV world as a bit of the Wild West right now. And our business model is akin to pickaxe and shovel work, or pickaxe and shovel selling to that glamorous, EV world. And so we expect to be the most trusted infrastructure company. And by providing the services that we do, we're more like Switzerland to most of the companies. And that's a good thing, because the infrastructure side of it, if you don't have the infrastructure, you're not going to sell as many electric vehicles, and you're certainly not going to do as much charging. And so we find ourselves uniquely positioned to not only take advantage of it, but also be the most trusted source for this type of work. Next slide, please. So once again, this is where we got our start in micromobility. We saw the scooter Armageddon, so to speak, plastered all over cities. We believe that it's a safety issue as much as a business issue. But if you look at where micromobility was yesterday and where it is today it operates in over 150 markets and over 1 million scooters deployed already. And so our infrastructure, even though we pioneered this at the early stages, it's still really only, the first inning of the micromobility game. Next slide, please. This is a new product that we will be introducing this summer. We made a strategic acquisition at the end of last year in a business, and what we saw was that North America was right for this type of market. It's a clone of a business that we saw in Asia, but we think that if we're in the charging business, then we have to offer portable power, micromobility power, and electric vehicle infrastructure. Next slide, please. And now from a communications standpoint, this is a bit of our Trojan horse. So we do telecom network infrastructure and tower service work. We provide all of the engineering and furnishing and installation in telecom. The way that we see this is that this is a hedge against what we hope happens in the EV space, but if it doesn't, we're still, very, very well positioned to grow our business. Next slide, please. So we have a global reach in our business today. Like I said before, we operate in 19 countries across 12 time zones. From a business standpoint, our customers are the largest telcos in the world. Those telcos are very, very hard to break into. And so the services that we provide to them today are very defendable. Next slide, please. So from an investment highlight standpoint, we're a global business, like I said before, with interlocking capabilities. We have a seasoned management team with expertise in each of the domains we've fight for business in. And more important, we expect our annual revenues this year to be north of $500 million with our presence in 19 countries and growing. Thank you very much. And I hope everybody has a great day. Any questions?
Here I am, Andrew. I got a couple of questions for you, if you don't mind, if you're ready.
Sure, man.
Okay, so I love questions too. Answers are great too. So you just mentioned a recent M&A you did, right? What did you mention? What that company was called? What was that company called?
Yeah, we just released actually the announcement. It's scheduled to close before the end of this quarter, but all the definitive docs have now been signed. And that company is called ANS.
ANS. So walk me through a little bit, sort of, the opportunity that you saw with ANS to combine with some of your, already existing stuff potentially.
Yeah. So my thesis on this is really simple, which is the telecommunications space and the infrastructure for telecommunication is matured, and it's got predictable revenue streams and great earnings. And the EV space is like, up and down, up and down, up and down, up and down.
Mm-hmm.
You don't really know where it's going. And so we acquired this telecommunication business that works on small cells and all that. And the goal, as we see it, is to prepare for the install of the electrification systems, not only with the hopeful passage of the infrastructure bill, but just common sense that more and more Americans want electric vehicles. But they don't want electric vehicles when their anxiety of how they're going to charge it flares up. And so by buying this telecommunication company, the workforce similarities are very, very similar to the same person that installs the EV systems. So we buy telecom multiples because the EV multiples are out of control. And then we introduce our EV strategy into that. And so we look to eventually cover the entire country and world with this strategy where we buy and then integrate. But I love the predictability of the telecom work that we have. And so we don't take the same worker and make him now work on both. Of course not, because we've got too much work in the telecom space. We train and build a new workforce that works alongside that person. And so it's a super exciting time for us.
It's almost a sort of an infrastructure play a little bit. Is that correct? Am I understanding that right?
That's exactly right. And it turns out it turns out in the EV space, unless you're Tesla or an electric vehicle manufacturer who's basing their earnings on 2028 to get their market cap, in the infrastructure side, when you have to permit and provision and maintain an EV system, a charging system, you've got actually real profit there to do that work. The guy who doesn't get the profit is the guy who sadly is, the car is subsidized by the government. The charging port might be subsidized by equity investors and whatnot. But when you have to actually dig the hole and put the system in, that doesn't get subsidized. There's meat on that. And so the way that we see it is that by providing the infrastructure in these early stages, it gives us the opportunity to kind of position ourselves similar to the way that the telecommunication world works. First, 1G comes in, you rip out 1G, you put in 2G. 2G comes in, you rip it out, you put in 3G. And so as the EV market continues to evolve, we're really doing the unglamorous work of installing and maintaining those systems while simultaneously doing it on the telecom side as well.
So zooming out just a little bit, and maybe, less from operations standpoint, and maybe just more from a little bit of your own perspective, like what is the next application of charging? Obviously, you're talking about electric vehicles. That's everyone's main focus right now. I mean, can we go look to the horizon a little bit? What's kind of like the next application or two of this kind of charging?
I mean, I think it's twofold. One, charging is still kind of in its very infancy stages, right?
Absolutely.
Yesterday I met with a really amazing company that, is in Norway, trying to pave the roads with pavers that you could charge your car on. And in Norway, in Norway, where they have so much hydropower, so to speak, they can afford to burn off some power. Whereas in the United States, natural gas, we can't afford to do that. And so I think that we have a real challenge domestically here, which is how do we innovate with the political landscape up and down the way it is? And so I think what you'll see more in the US market are these fixed stations, and these fixed stations charging. You'll see gas stations starting to retrofit their their pumps to electric. But I believe there's a world one day where an autonomous vehicle wakes up and goes to your apartment complex and recharges you and keeps recharging people along the ecosystem. I can't imagine that there's not going to be great innovation, but I still think we're 10, 12 years away from that. And so over the next 10 to 12 years, we need to install somewhere in the neighborhood of 10 million charging stations domestically just to meet the demand of cars that we're going to have on the road. So, that's why we focused on this unglamorous side, because we know there's certainty in that, just like we know there's certainty in, the telecom space going from 5G over the next 3 years to 6G, 4 to 10 years. And so it's just a kind of, for us, a rinse and repeat. We understand where the infrastructure play is. It's a global opportunity, but we're not trying to build the next Tesla. We're trying to help the next Tesla owner be able to reduce their anxiety by there being enough charging ports out there for them to drive, hopefully in the future, cross country.
Awesome stuff, Andrew. Appreciate you answering those couple of follow-up questions. Really intriguing stuff I just heard on Charge Enterprises. Hope the chat liked this one also. Andrew Fox, he's founder and CEO of Charge Enterprises on OTC. It's ticker CRGE. And one of our lovely producers just put up your URL here, www.charge.enterprises. Any other quick ways that prospective investors can get a hold of you?
a@charge.us is my email address, and I welcome all. I prefer questions and answer, than presenting. So anybody has any email that anything they ever want to ask, I'm always kind of you're pushing an open door with me in terms of trying to get responses back.
That's awesome. And say the email again. It's just your first letter, right? Of your first name.
Yep. a@charge.us.
Probably couldn't make it any easier than just the first letter. I like it. All right, sir. I'll let you get to your weekend. Andrew Fox, thank you, sir, for joining us.
Have a great day, buddy.
All right, later. Cool. So we've been hitting at like quite a breakneck pace, I would say. Chat, what do you think? Last couple hours, maybe 2-3 hours. It's really been just kind of like go to the next one, go to the next one, go to the next one. How you guys hanging in there with that pace? We're gonna take like sort of a little slowdown here, just to give everybody a little breather for a sec. And I am going to pull up, I know you guys love them, the Slido questions that we have been using throughout the day. Let me share my screen here, and we're gonna get to a few more questions. I think we have like 10 questions to go through for this trivia. So we're only on like question 4. So we're going to see how many we can kind of like bust through here really quickly. Just one sec, y'all. Sharing my screen now. Engage. Question. Wait, we already had this one. Silly goose, Brent. Let's go to the next one. What? Who answered this question already? Where is Doge going to? To Uranus, to the moon, to the Jupiter? I think there's just one Jupiter. I think we can just say to Jupiter, right? And I like this one. The limit does not exist. What do you think, gang? Where is Doge going to? Obviously, this one's a little subjective. I got into not a serious fight at all, but it was a little back and forth with my fiance the other week, because I said the word Uranus. I like space and I like the solar system. So I said the word Uranus, and she's like, that is not how you say it. You're the only person that says that. And I was like, geez, I just like astronomy and I like the solar system. So I try to say it how I see other astronomers say it. I imagine Neil deGrasse Tyson would say Uranus. How about that? All right, we're getting some decent answers here. I think To the Moon probably is going to end up being the winner here, but how about we go to the next one? Oh, yes, I love these. Another name this chart pattern. So what I'm going to do here is I'll let you guys focus a little bit more on this one. Somebody's already responded. Geez, shoot from the hip there on the quick response. The contest is how many you can answer, not how quick you can answer, okay? Name this chart. So we're coming from below. It looks like it just bashes through some resistance there, kind of tests that resistance, turns into support, back to new highs, and then we kind of start pulling back. What, ladies and gentlemen, is this one called? Let's take a look at the options. We had a few people with a head and shoulders answer, an inverted head and shoulders, a triple top, and what does that one say? A double bottom. Let's take a look at the picture one more time here. What do you think, gang? Let's do maybe a couple more here. I think a couple more. What in the heck? I feel like I just said this. I didn't mean to do this. I'm sorry. Previous resistance becomes blank. And let's see if do the blanks indicate letters? 1, 2, 3, 4, 6, 8. Is it an 8-letter word? So we got a couple of supports. We got nobody yet to say exhaustion. Previous resistance becomes a whipsaw. Previous resistance becomes your price target. That's pretty funny. I like that one. One more. How about one more? I'll stay on this one for another 5 seconds or so. And then we'll go one more. And then that was we got through a good little chunk there of them. I think, again, we got to get to about 10. And this will be number 8. A daily chart of a stock closed yesterday at $11. Today, it opened at $13 and closed at $7. Based on this information, today's candle should be lower for red or higher for green. All right, let's run through these one more quick time. I want all of these answers to get. I want all these questions to get answered. So whoever the jokester that made this one is, I like you. Where is Dogecoin going? Name this chart. Looks like we have a pretty resounding consensus, at least here. Previous resistance becomes blank. Is it an 8-letter word? I think the blanks don't mean letters. I think it's just blank. And the last one, a daily chart of a stock closed at $11. Today, it opened at $13 and it closed at $7. That was not the greatest day the stock has ever traded, I can tell you that. Based on this information, today's candle should be red or green, ladies and gentlemen. This stuff's kind of fun, right? The fun part, I mean, talking with me is okay, I'm sure. But the fun part is going to come later today. I think we are going to do this later on the broadcast towards the end. We're going to announce the winners. And the winner, there are 3 potential winners here. I'm trying to get you guys some more wins. Maybe we could throw in some Benzinga swag or something. 3 potential winners. A lifetime subscription to Benzinga Pro, a lifetime subscription to a couple of our newsletters, one newsletter, the Breakouts newsletter, and the last newsletter that you can potentially win a lifetime subscription to is the Options newsletter. Options is one of our favorite categories on Benzinga Pro. That is our real-time breaking news service. And while we have a quick second here, why don't I just share my screen really quickly and let's check in on our stocks. I made that nice watch list earlier to take a look at all the stocks that we're tracking, at least on this track. I didn't, this is track 2. I did not include my track 1 stocks. I am very sorry, track 1 and Neil. Love you still, buddy, but these are just track 2 stocks. So this one, look at this one. Elys Game Technologies, ticker ELYS. This was one of the early presentations. Stock's up about 26% today. Let me click this thing and we can actually, it's good. So I'm going to click the ticker over here on my watch list and it's going to pop open in a details tool. The details tool is what it sounds like. You can see a chart. You can see some basic fundamentals. You can see some news down here that normally you might have to look in the newsfeed for. You can scroll down a little bit further here and you can learn about what Elys or any company that you're looking at and you're researching here does. And what time was this presentation at? Oh, a change of the 1-day chart. And you know what? I think the presentation, this is one of our first presentations, ladies and gentlemen. This might have, the stock might have got some of its legs here this morning following that presentation with Elys Game Tech. Quick demonstration of obviously how information, new information, or potentially, you know, updated sentiment coming into the marketplace can drive stocks higher or lower. Here's a good one. This is a really good reason that you should be tuning into Benzinga content. Of course, our events have been excellent over the last few years, but also you can find so much good content on benzinga.com and Benzinga Pro. I am fortunate enough to be one of the guys on the Benzinga Pro news desk who gets to look at this lovely platform on a daily basis. And I'm actually one of the ones that's making a lot of the content. You can get a hold of me pretty quickly if you ever want to chat. I'm like a personable guy. We can have a nice little conversation. You can hit this blue button in the bottom right corner. This is a little third-party chat interface that we use, but you can click it and you can get a hold of somebody from the News Desk team really quickly. Me can get a hold of somebody for support if you have any questions about the platform, that kind of thing. Also, I'm like in the chat actively pretty often throughout the day. We have a chat that's our own organic chat on Benzinga Pro. This is probably one of the more underutilized tools on Benzinga Pro. Obviously, there can be some noise in here, but a bunch of really smart traders in these chat rooms. The one that I hang out in a lot of times is the Benzinga Pro Lounge. And what's happening in the chat is you can obviously talk with other traders. You can get ideas from other traders. If you have a thesis about a stock, you can pitch the thesis in there and you can hear, you know, a little bit of feedback. Hey, here's, let me punch a hole in your thesis, or wow, that's a really good idea. Let's see what I can do with it. All right, you guys have heard enough about Benzinga Pro. I love Benzinga Pro, so I could talk about it forever, but you guys have heard enough about it for right now. I am going to turn my screen share off, and we have our next presentation ready to go. I'm excited for this one. We have UR Energy. It's ticker URG on the NYSE American. Chairman and President and CEO of UR Energy, Jeffrey Klenda. How are you, sir? Happy Friday.
Great. How's it going this morning? Or this afternoon, depending on where you are.
Same thing. Yeah, I'm sure there's people that are tuned in and it's morning. So doing awesome, man. I'm excited to be here, and it's nice that it's on a Friday, so we get a little weekend after this, right?
Amen.
Amen. All right, sir. I will let you have at it. I see your presentation. You are up.
Great. Thanks so much. And I want to thank everybody at Benzinga for giving us this platform to tell our story today. And thank you, folks, for taking the time to join us. And I'll jump right in. I know that I don't have much time, but so I'll give you kind of the New York version. What you're looking at right now is the front page of our PowerPoint. And what you're seeing on the left-hand side of your screen is the interior of our state-of-the-art ISR facility, uranium processing plant in the south central part of the state of Wyoming. And basically what that means, if it looks like a giant water treatment plant, that's because it is. What we do there is that we simply pump into the ground a highly oxygenated solution called a lixiviant. It dissolves the uranium in place or in situ. We bring it in. We run it through a series of circuits in the plant. Ultimately, we filter press, dry it, and package it. And it goes out the way it looks on the right-hand side in 875-pound drums. And when we have, say, $50 contracts, those drums go out at $43,000, $44,000 per barrel, and that is our business model. So let's see if I can forward now. Got it. Next, this screen is a familiar one to all of you. It's a disclaimer. I will try to identify. I'll make forward-looking statements, but I will try and identify them each time I do. Next slide, please. Here is just an overview of our company. And one of the things that's important to remind ourselves of is that when we started this company 17 years ago in 2004, we just marked 17 years. It was our intention to be a provider of U308 or yellow cake to the domestic nuclear power providers in the United States of electricity. So we spent the first 7-8 years, frankly, as a permitting and licensing story until we finally in 2012 got our final record of decision, spent the next 9 months building out, and went into production after 2 months of commissioning in August of 2013. So come August, we will be 8 years in production. Since that time, we've produced just under 3 million pounds of uranium. And right now we've scaled back production so it's more consistent with current market conditions, but it has been just a monster of a producer. We have emerged as the lowest cost producers in the uranium space outside of the country of Kazakhstan. And there's a reason why they're the lowest cost producer, because they have great resources, but they also produce in a currency that's been devalued by 95%. So they get to produce in their Kazakh tenge and sell in pounds, euros, and dollars. And anybody can look like an economic marvel if they do that. But one of the things that has distinguished us is that we have kept our operational staff on while we've been waiting for these higher prices. So we're actually in a very unique position. But another thing that has distinguished us is that Fukushima occurred, and everyone knows what that event was 10 years ago. And so what we have done is that we put contracts in place right after Fukushima. Prices stayed up near $60 for a year after that. So we put contracts in place that lasted all the way through the decade until calendar year 2020. We just delivered into our last contracts last year, but in doing so, it gave us great, consistent, reliable cash flow, and we became known as a reliable provider of material to the United States utilities, and it allowed us to build inventories. 4 out of the last 5 years, we've been cash flow positive. I don't think there's anybody else in the uranium space that can say that. We have a second project, Shirley Basin. I'll talk a little bit more about that in a couple of minutes, but we just recently received all of our permits and licenses on that, and so that is ready to go, and that is truly a brownfields project. But the thing that I think we're the most excited about is the fact that the Biden administration is making nuclear a central pillar of their clean energy agenda. But in addition to that, in December of last year, we also got an appropriation in the omnibus budget for $75 million toward the stand-up and the establishment of a strategic uranium reserve here in the United States. So that is critical for the well-being of our industry, and it's critical for the national security of our country. Next slide, please. I'd like to spend just a couple of minutes talking about the supply-demand fundamentals of our industry. Let's see if we can get to the next slide. There we go. I think it's important to understand that we are not alternative energy, if as it were. We are baseload energy. The nuclear power industry in this country provides 20% of our baseload electricity, and it is 55% of our carbon-free emissions. Around the world, there are nearly 450 uranium or nuclear power plants up and running. These are the big ones, but there are 55 reactors that are under construction globally. Again, very big ones. So what's happening is that we are very much a growth story. And last year, because of COVID, we were not able to open up as many reactors. The new ones didn't come online. Only 3 or 4 of them did. So this year, we're expecting 12 to 15 new reactors coming online. This is going to increase demand. That next bullet point is very important. This slide is important because it's important to understand fundamentally our industry is now in the third consecutive year of a structural deficit of more than 50 million pounds per year. And to put that in perspective, in 2019, we consumed a total of 187 million pounds of uranium globally, but we only produced 139 million pounds, which meant we had a 58 million pound structural deficit that had to be made up for by secondary supply or above ground inventories. In 2020, it was 56 million pounds. This year, it's going to exceed 60 million pounds. But in addition to that, we've had new purchasers come into the market buying yellowcake that are for the first time, and some really exciting developments in terms of this new demand that's coming into the market. Next slide, please. But while this has been going on, while the demand has been growing, we have been seeing very real supply destruction take place in this industry. Cameco, that for a good part of last year, had both MacArthur River, well, it was shut down all year, but also had Cigar Lake. These are their two flagship properties in Canada and two of the biggest producers in the world. Both of them were shut down by mid-year. And at one point last year, now ostensibly this was because of COVID. I think it was simply because of poor pricing, and they were using COVID as a cover for shutting down plants that were no longer economic. But at one point, we had seen 46 million pounds of uranium shut down, or the equivalent of roughly 35% of global consumption. Even the Kazakhs, the biggest producers in the world and the lowest cost producers in the world, have been in the market as buyers. And the thing that made this really unique is the fact that for the first time since the 1940s, we were not producing any uranium in North America, a truly extraordinary event. Next slide, please. But what we are focused on is what's going on here in the United States. Here in the United States, you may have already heard this. If you haven't, it is worth knowing. We remember we're 20% of the baseload, but we find ourselves in a position where we are 100% dependent on foreign sources of nuclear fuel. We no longer produce any nuclear fuel for the 94 reactors, the largest fleet in the world, and we're also the largest consumers of uranium on the planet, consuming more than 50 million pounds a year. And that colorful chart you see is really a depiction of the last 20 years of production here in the United States. And we have reached a point now where we are producing so little uranium in the United States, the Department of Energy no longer keeps, they keep the statistics on it, but they don't publish them any longer. The fact is we can't let nuclear fuel go the way of rare earths, where we're dependent not 80% on the Chinese. Of all the nuclear fuel that we consume, more than 50 million pounds right now, we have put ourselves in a position where we are more than 50% dependent on Vladimir Putin, Russia, Kazakhstan, and Uzbekistan for more than 50% of our nuclear fuel. It's not only insane energy policy, it's downright dangerous national security policy. Next slide, please. But let's talk about something a little closer to home. Our flagship property is Lost Creek, and that in that picture that you see in the upper left-hand corner, the green area is the larger Lost Creek area, about 36,000 acres. Inset in blue is the permit area, and this has just been recently increased. We increased the size of the permit area. We added 6 new mine units. We also added our production capacity there at the plant to 1.2 million pounds per year. Remember, the total capacity, though, is 2 million pounds per year. We've been producing there now for more than 7.5 years. And when we originally did our preliminary economic analysis on this property, we estimated that we would achieve probably a 80% recovery rate. We have averaged in excess of 93% recovery since this plant went into production. I would suggest to you that nobody in the world has accomplished anywhere near that and doesn't accomplish anywhere near that. 93% of what's in the ground, we get out of the ground. And if you look at the bar chart down below, you'll see that at the time of Fukushima on the far left, we only had 6.25 million pounds there. 5 years later, when we updated our PEA, we had more than 21 million pounds. This is a very scalable project. Next slide, please. But not only is it a scalable project, it has just been, from an operational standpoint, it's been a beast. And here's where the rubber really hits the road. If you take a look at this slide, sorry, it's a little bit busy, but you'll look at the years across the top and you'll notice that even though we went into production in 2013, I took that one off on the left-hand side because that was our ramp-up year. And then on the right-hand side, I took off 2020 because we were also ramping down in that year. But during these years, These were normal operational years for us, and then a variety of different items on the left-hand column that we want to highlight. But I would direct your attention to 2015 here, because this is the year where we actually produced the most pounds at the plant, a little over 700,000 pounds. It's also the year, and you look at the middle of the slide going across from left to right, and you'll see that it shows the number of pounds delivered, both purchased and produced, and that we purchased 200,000 of the 925,000 pounds roughly that we delivered that year. And for one simple reason, I have $50 contracts that I'm delivering into, but I can buy it in the market for $21 a pound and scrape a $29 delta. As that was the case, there's no reason for me to be producing the pounds and delivering them into our contracts when I could actually buy it for less. But when you take a look further down that year, notice that we got our C1 cash cost down to $16.27 the pound, and our all-in costs were a little over $25 a pound. But I could still buy it for less in the market and deliver it into our contracts. So we made the decision to do that. Next slide, please. But we also were able to build our inventories in this process. Like I said, Lost Creek has been just an absolutely fantastic flagship property. Pathfinder will come on next. This is a true brownfields project. It was a former producer. We bought it from the French giant Areva, now known as Orano. But you'll notice here, and I have it highlighted in yellow, that we expect our first production here to come in at $14.54, nearly $2 below my lowest cost at Lost Creek. And the reason for that is that it's 4 times the grade. But we just got our full permits and licenses here, our final permits. And this is important because now what it enables us to do is basically double our licensed production capacity from 2 million pounds a year to 4 million pounds a year. Next slide, please. So as this is how we would envision a ramp up scenario. You can see that blue would be Lost Creek. In a year, we can ramp up to about 1 million pounds a year. In 2 years, we can ramp to 1.25 million pounds a year. The burnt orange is Shirley Basin. We can ramp to 2 million pounds in 2 years. And the reason for that is because of what's highlighted in yellow. We have kept our operational staff on, and this is critical to understand. These are not guys you can find on Craigslist or any other type of website. They're not just sitting around waiting for a phone call. This is highly technical what they do, and these are very, very experienced people, and we've made the decision to keep them on staff. It's cost us a lot of money, but that's why we can ramp up so quickly. Next slide, please. This slide is probably the single most important slide in the deck. And because this is what our true advantage is over everyone else in the industry. Notice at Lost Creek, if I want to spend $15 million, let's say I get contracts from one of the utilities, or because from the federal government, the uranium reserve has stood up, and so I'm delivering product to them, and I want to ramp up Lost Creek. I can ramp to 1 million pounds per year run rate in as little as a 6-month period of time, and at a cost of $15 million. In the following year, in the first year and a half, in about a 15 to 18-month period of time, I can add in Shirley Basin for another 500,000 to 750,000 million pounds per year at a cost of $26 million there. So we're going to have to build a satellite plant there, but it's already planned. The roads are already in, the electricity's already in, the outbuildings are already there. My point is that for $40 million, I can ramp to a run rate of 2 million pounds per year. I can do it faster and at lower cost than anyone else in the industry. There's only 1 or 2 other companies that can even ramp to 2 million pounds per year, but I can assure you they can't do it at anywhere near $40 million. Their cost for the next best producer is going to be somewhere around $70 million. The third guy in the queue to ramp to 2 million pounds is going to be more like over $100 million and more than 3 years. So this is our strategic advantage. Next slide, please.
Hey, Jeff, want to just pop in and give you about a 5-minute warning or so? Just a quick heads up.
I'll wrap it up in the next few. But this slide right here really gives you a good picture of our share capital and cash position. We've done a good job of really containing dilution over the last several years. We have about $16 million in the bank right now, which actually we have cut our expenses down to the lowest point in the last 15 years. So we are really running lean and clean right now. That second box on the left, you can see we have almost 300,000 pounds of Lost Creek produced inventory. We trade very well at nearly 4 million pounds per 4 million shares per day. And we have great coverage from all the best guys in the industry. Next slide. Before you buy a stock, though, you got to know what the catalysts are that are going to drive the industry. And here, supply demand is really the name of the game. Everybody's expecting growth in demand while we are seeing a widening gap in that structural deficit. Something very, very significant has happened, and that has been that we have been able to see buyers like Cameco and Kazatomprom come into the market as buyers. The current market conditions, the pandemic continues to keep projects shut in. We have got the $75 million from the federal government. That is an appropriation. But in addition to that, some of you may have heard that Sprott bought out UPC. This is a very significant event that just occurred last week. I won't go into it now, but what it means is it's going to increase demand substantially. And of course, we can't forget that there are the political risks out there. We are the most politicized commodity on the face of the earth, whether we like it or not. And we are highly dependent on the Russians. If for any reason we end up in a conflict with them, and there's a disruption in the flow of that material coming into the United States, our U.S. utilities would go into crisis literally overnight. Last slide, please. If you take a look at it, the takeaways from my presentation today are actually very straightforward. There we go. Look, we're set up well on cash. We've got about 16 million in cash. We've got inventory to back that up. We took out a PPP loan. We got full forgiveness on that. We have a second part of it. We'll get full forgiveness on that. And we've been able to restructure the small amount of debt we have. So I don't even have principal payment for until the end of next year. But I think what I'd like to leave you with today is very simply this. Because of our operational staff being kept on hand, we can ramp up faster, at lower costs, and at less dilution than anyone else in the industry. That is our strategic advantage, and no one else can say that to you. There's only one of us. Thank you so much. And then from there, if I have a couple minutes, I'll answer a question or two.
Let's hit on so much there. I think that we are going to have to conclude it there. I mean, he covered a ton there.
Again, didn't I?
No, you didn't go long. You're good. Just so much information in there. If we could get a URL popped up on screen so that some of our watchers can get some more information about UR if they want. It's just ur-energy.com. We have Jeff Klenda. He is the chairman, president, and CEO of UR Energy. Thanks so much for joining us today, Jeff, and you have a great weekend, sir.
Thanks for having me, guys. You have a great weekend as well.
I'm sure I will. Thank you, sir.
Righty.
Coming up next, another education segment here. These are kind of cool. We have, I see him back there. We have Bruce Liu from Esoterica Capital. How's it going?
Hi, Brent. This is Bruce. Thank you for having me today.
Yeah,
it's good to be here.
Thank you so much for joining. What are you gonna give us some education about, Bruce?
Well, we set up the firm 2-3 years ago, like try to help like a retail investor. I believe this is a really, really important part of a business. And now, just sharing. I actually just want to share how we manage the portfolio, particularly picking the stocks. And I'm gonna give our viewers a real example, and I'll talk through like why we like the stock, how we pick a stock, how we add the positions, through that, walk
love it, man.
Through.
our audience is gonna love it, so I will let you take it away. Have at it, Bruce.
All right, I might need to share my presentation a little bit. Just one second.
Yeah. So you're gonna have to do that, Bruce. So
are you able to
share your
see
screen? Yep, I see it. It should be popping up in a sec here. There we go. You're good.
Okay, guys. Brent, let me know if I should start now or like.
Yeah. Yep. Have at it, sir. The floor is yours.
All right. Thank you. Thank you, everybody, for having me here. Well, let's make it this just get to the point. A very brief introduction to ourselves. Myself, and I'm Bruce Liu, CEO of Esoterica Capital. And we're running an actively managed ETF, WGI, investing in digital technology, digital economy, especially in the coming 5G cycle. That's who we are. And, we made a conscious decision 3 years ago, and we want to do this for the retail investors. Having the right product there is one thing, but educating, helping retail investors, and really let them know what that takes to pick the stocks, put together a investment portfolio for long run. That's our purpose. We're not like a day traders, and that's not what we are good at. We are picking, long-term winners, and in our words, and compounders. You might have heard that a lot, but actually in my mind, that's what I believe in, what the firm believes in, especially for retail investors. Just thinking back, if at the beginning of the 4G cycle and somebody could put up a portfolio and picking the 4G cycle winners, guys like Google, Amazon, Facebook, and after 10 years, and I think anybody who has bought that ETF just did pretty well. Well, we missed the 4G cycle. We don't want to miss the 5G cycle. That's where we are. I think for retail investors, that's the way you should go. Construct your portfolios based on your belief in the themes. Actually, you believe become the bigger themes that can, it's just like growing pies. You want to invest in the sectors, industries, and themes that has the potential to grow exponentially. I think that's the name for retails, and it's a lot easier and much more rewarding than try to timing the cycle, play cyclical, timing the market. You win, I lose. I just don't think that's the right mentality. It might be for the hedge fund guys, but for retail investors, try to focus on the growing pie. So that leads to, we call it quality growth investing at reasonable valuation. 3 keywords here. Quality, actually growth should come first. You want to grow in pie that I mentioned earlier. But growth has to be a quality growth. You don't want the dreaming stocks, a lot of like specs. They're telling you they can grow and giving you a really, really nice picture, but they have trouble to deliver. You should actually avoid those players. Well, and the third thing is the reasonable valuation. At the end of the day, you just don't want to pay, crazy prices for, growthy names, because maybe it's just not worth it. And this is a hard part, actually. A lot of people are challenged. First of all, it's hard to put a reasonable valuation for growthy names. A lot of those companies, they are in the phase of growing. They invest back to their business. So if you try to follow the traditional valuation metrics, they might look very, very expensive. But actually, if you really know the business, that they have the scalability. And they are just in the phase of investing back. They have the pricing power. They have the potential to, expand their margins. And the true valuation may not be that bad. But nonetheless, so we believe that's the optimal framework and to look for long-term compounders. And as long as you're patient enough, I believe investors should get rewarded. A couple of key points. I touched most of them already, but I want to just repeat it a little bit. First of all, try to find the secular industry tailwinds. That's again growing in pie. Find the industry sector themes that can grow exponentially faster. In our case, we picked the digital economy, which is disrupting the legacy technology stack, which we believe it has that kind of a tailwind. Well, you also want to find the players in industry that has the rational competition. People don't just try to compete on pricing, and nobody is actually having a good time. And also, again, you have to pay attention to return on scalability. It's not like some place very easy for new entrants. So you still want to have that kind of moat. The next thing is actually it's hard to measure, but it's actually very important. Earning visibility. You have to have certain confidence with your forecast of the earnings of the companies. All in your mind, where they generate their money, and then the money can reasonably translate into the profits. Especially when those stocks are actually very expensive, given the valuation. Again, like a strong ROC, capital allocation, policies, and good, it's always, good management team is the key thing. And those are the things that matters a lot. So this basically gives you the framework, concepts, what it takes to be a quality growth names at a reasonable valuation. I'll walk you through with the example, and Well, I know this is a small cap conference. Today this is for the education. I didn't have AMD is the one I actually picked because we have I can show you how we really done over the years, and although it's not a small cap, it is started as kind of like a small cap though. AMD's thesis right now is very straightforward. With the new products, if you are familiar with the semiconductors, first of all, semiconductor industry is transforming itself, driven by this digital transformation. Used to be a cyclical industry, now actually it has a huge potential to become a secular growth industry, just because everything is digitalized. At the end of the day, you need semis to power that computing, transformation and stuff like that. Well, AMD plays a very significant role of there. If for people maybe in my age, and you still remember back in old days, AMD was just perceived as a low-end CPU provider, right? When you have a high-end, laptop, desktop, you never wanted like with AMD CPU in there. You always want the Intel. But actually, things has changed, and the AMD has transformed itself. So the thesis for AMD, especially now, because of this new architecture with their like products, plus the very advanced, the cutting-edge, manufacturing process from the TSMC, putting two things together, that really gives like AMD an edge over the competitors, particularly versus like Intel. And AMD is also expanding their product portfolio. They really focus on this data center, cloud, computing, and try to grow their business there. So far, they're the only one who can deliver both CPU and the GPU. NVIDIA is gonna deliver very nice, CPU like maybe two years later. But right now, AMD is just the only major one who can do both. So having that synergy is very, important, and it gives you top line growth. It also helps you to expand the margins. And so like what the market really care about is see how AMD is gaining the server market share. That's what's really driving the AMD share prices. Too much talking. I'll just give you the example here. I walk you through the timeline how we started covering the stock and where we took actions and our thought process. This is really like of course, I love like you have to do your research, and we have like 4 research analysts like behind the scene, and we do all kinds of field study and expert calls, and reading into the sell side research and our own research, and I love like hard work. But at the end of the day, we started getting noticed the name actually at very beginning, 2014, and we call that the first phase of AMD. Back then AMD was really in trouble. They were almost like they were running the risk of like going bankrupt, and you can see that from the stock market cap. It's at the low end. It's almost at just 2 billion. That's what I'm saying. It's a small cap back then. Well, what really brought the change is first Lisa Su became the CEO of the company. Well, Lisa Su has been a fantastic CEO in the semiconductor industry. And she really brought life back to AMD. The first like 2-3 years, she has done everything right. First, de-risking the company. She really de-risked the company by deleveraging the balance sheet, just to pay back all the debts. From almost like I believe it's sorry, I kind of like forgot the total. The net, I believe it's at the high end. It's almost like 15 billion, net debt. She find different ways to pay down the debt, deleverage the balance sheet, reduce the risk of default. That really helped stabilize the business. So that's the first thing she did, very correctly. Second, she had a really laser focus on high performance computing. That was announced back, I remember that's back in 2015 in their analyst day. She was just updated the long-term growth of the company and telling everybody they're gonna stay very focused on the high performance computing, and also announced this Zen architecture for their next generation of CPUs. So that's really set the tone of the company for the next decades. And that's kind of like a roadmap for the company. Then make sure everybody understands, where AMD is gonna go. And also, after that, and like what I said earlier, reduce the deleverage the company and reduce debt load, and that's all she did in the first phase of the company, AMD, when she took over the CEO role. We started the firm a lot, participates all the expert calls and reading all the materials, but we didn't pull the trigger. Why? To us, it's still too risky, and it's still lack of sustainability. The story makes perfect sense. You just don't know they can deliver or not, and also very little visibility. They don't have the product yet, right? So although it sounds very nice on paper, how do you know they can deliver? So during that time period, stock ran up quite a lot. It's from like I put the number there, 2.7 billion and up to like 10 billion. It's very nice, 400% up. And we didn't pull the trigger. We were watching the company, but didn't pull the trigger. Just because, thinking back to our framework there, lack of visibility is one thing really bothers us. It's still too risky, a lot of like a downside risk. All I'm trying to say, as retail investor, when you enjoy doing research on the companies, and be patient, and know the risk reward, and know your game, know your process, and stick to your process. Although it sounds so tempting, and I give up like a 400% up, but it's okay. Actually being patient get rewarded later on. So then after that, coming into 2017, and we got the first confirmation of AMD was really on the right track. They started shaping the Zen CPU, and based on TSMC's like a 14 nanometer manufacturing process. That's the first major product since Lisa Su took over the office. Sounds very good. We're very promising. And from there, AMD entered the second phase of their life cycle, and until now. And we call it improving the fundamentals and the growth. From there, we're getting ready to pull the trigger. We believe actually the story makes sense. They had been executing consistent with our story. You can see that upside is growing, downside is getting limited. We wait. We're still very patient. We wait until we get the first third-party data to confirm actually AMD's product is gaining market share. They were gaining market share. Back then, it's a hard story to tell, even for the professional semiconductor analysts. Not everybody, I wouldn't say nobody, but not everybody believed in AMD. And they always have, especially given the history, what they did back then. Everybody has the thought process, the thinking went like, they have nice products. They gain a little bit of market share. But if Intel started to do something and like lowering the price like they did like 10 years back, AMD will have trouble again. You always have that kind of like conversation or debate out there. But like we were convinced a little bit. That's where we first time we build the position. We really build a position. Well, then we wait until later on Zen Plus CPU came out, and based on a better TSMC 12 nanometer like a manufacturing process. That just improved our conviction. We find opportunity to add the position more. Well, the market also realizes that this story became really good, as became better. This is just typical market. Market can become like irrational over times. When it went up too much, we took it, the opportunity and took some profit. And you can see this line here. And when market became like just too excited about it, that's where we took like a profit there. Now we keep watching, keep studying the company, see where they go with their it's the key word here is execution. It's not like AMD has been doing something magical. No, they laid out their plan roadmap, and that's almost 3-4 years back. What they did well is they actually executed their plan step by step, no miss. That's just perfect. We call it even like so perfect is even a little bit boring. We call it boring execution, but that's what you need from a good management team. That kind of like a boring execution really delivered. They promised you like 5 years back. Well, we keep adding the positions. Here we did that again. Then this is a breakthrough, and that's another way like improved our conviction. It's another new like architecture. It's called Zen 2, and based on the latest TSMC 7 nanometer manufacturing process. That's actually the first time in the entire history AMD has a CPU product with an advanced architecture, also advanced, better manufacturing process than Intel. That really add on to our conviction level, and we just like the name so much. Still, debate was all still there, and many like analysts believed AMD will get across once Intel decided to pull the trigger. Time goes on, and it's March 2020. We launched the WGI, our ETF, and we just put AMD there in our ETF product. That's our top position, just based on all the conviction level we had with the stock. And just a couple of months later, and finally Intel, probably a lot of people remember this, like last year, Intel, the stock was down like significantly. That's the first time Intel admitted they kind of like messed up with their manufacturing process. They had to delay this 7 nanometer. That's just triggered everything. Well, when Intel like finally admitted that they failed, at least with this manufacturing process, that makes the AMD's story looking even more convincing. So that's where the AMD stock got like a jump, and while they keep executing, the AMD didn't stop there. Again, back here, the thesis stays the same. AMD keeps gaining market share, especially in the data center market, server market share, by having the right the new architecture and advanced manufacturing process together. At this time, that's the end. Towards the end of like last year, they announced they started shaping this Zen 3 CPU based on a better 7 nanometer manufacturing process from TSMC. Well, I stopped there. I didn't, because they're still in our portfolio for the compliance reason. I couldn't really talk about at least I couldn't really show things there. But it's still in our portfolio. We like the name. Things has changed a little bit since the beginning of this year. What has changed? Intel tried to come back, and they got a new CEO, which is really a good thing. They got a new strategy. So back then, the AMD's story, all the growth, the potential growth of AMD stock came from two factors. One is this gaining market share, earnings growth. That's all coming from the fundamental. The other one is more coming from the multiple expansion, because people were betting on Intel is gonna mess it up, and AMD really becomes the leader in this space. Well, since Intel is hired a new CEO, Pat, and Pat has the reputation, and people give him like the benefit of doubts. Hopefully he can help Intel to have a nice turnaround story. So that put a cap on the multiple expansion part of the AMD story. So that's where you see what coming into this year, AMD has a little bit of trouble, keep growing in terms of stock price. It's just it's lacking one leg of the growth. Really, you have to rely on the earnings growth to help you. But that part has been doing really, really well. From the recent earnings, you can still see that. Since Intel is based on Intel's new growth strategy, it's almost given in the next 2 years, and AMD gonna keep gaining market share in the server CPU market. So that's our thesis. You know, what I'm trying to show here. So if you enjoy doing research, long-term research on, you know, fantastic technology companies, compounders, long-term compounders, at least this is our process. And hopefully, you know, this can give you some ideas how you should start, you know, looking into them, and where you should start, you know, building your positions, you know, building your conviction levels, and where you should take profit, where you should add. And so that's the framework I'm trying to share here today with the audience. So that's that. Then, you know, at the end of the day, you're picking stocks. You put a nice portfolio together. You know, sometimes, you know, people might get frustrated. You'll find, you know, especially these days, actually coming into this year, a lot of times, you know, market up and down actually has nothing to do with the stock fundamental itself. More than often, that's the case. So you actually just doing the stock research is no longer enough for you to manage your portfolio well. So here, I want people have a, you know, portfolio perspective. If you manage your own, you know, assets, you really need to know. We rely on our own, like we call it a market cycle indicator. It really tells us where you should take risk, where you should be more careful, and you know, it goes like this. You know, I'll give, you know, I also put a PMI there, and it really measures the market cycle. March last year, that's the bottom of the market cycle. We call it recession or whatever you call it. I mean, so actually, when you start using this, and you should know when, you know, when you get to the bottom, and that's where you actually should start taking risk. And when this goes up, and you know, you should feel good. We call it the expansion cycle, and you should be, you know, that's improving your conviction level, risk-taking level. Well, it goes up, and until to the point, you know, it might, you know, topping a little bit. That's where you should start thinking to, you know, taking off a little bit of risk, and you know, try to, you know, take some profit, reduce the risk-taking level until, you know, it goes down. You know, that's where you should be more cautious. You know, don't take unnecessary risk. That's how, you know, more than often you can see this kind of like a market cycle goes hand in hand with like a PMI. So, you know, for retail investors, if you don't have your own market cycle indicator to measure where where you are in terms of the market cycle, and it's like focused on PMI. PMI is really nice indicator for you to have a gauge, you know, the overall risk-taking environment, basically. That's another thing I want to share with our audience here today. So, you know, you have, again, to summarize it up, you have a nice, hopefully, I still believe that retail investors, you should focus on long-term, like secular growth opportunities. It just doesn't make much sense for retail investors to try to outsmart the market and try to timing the market and play these cyclical things. And you want to find the long-term compounders, which can, you know, have a high quality growth. Eventually, you get paid off that way. Well, to do that, to identify those winners, you need to have a framework, and you have to be patient and have a really long-term, you know. But you also need to do work. And back to here, you know, see how, like this is almost 6 years, and we have been studying the portfolio day and night, the stock day and night. And it's fun, you know. I think that's actually a lot of people underestimate the fun part of doing research. That's where you really get to know the industry, the company, and you just feel good. Well, having that framework is important. Having the process to pick the stock is good. At the end of the day, you also need something to help you to measure the overall portfolio risk-taking level, to just get a sense of where the overall market is. Because a lot of times, you know, it's the different beta driving your portfolio, not your single stock story. Then this is the last chart I want to show with people. You know, don't just looking at the equity market. You know, at the end of the day, all risky assets are connected. When the whole world was trying to pricing all those risky assets, somehow they're connected. There are connections there. So watch all markets. Interest rate markets, equity markets, FX markets. Even these days, crypto, Bitcoin, because it becomes more mainstream and it matters. The way I use Bitcoin, I use it. To me, Bitcoin is a very speculative, trading vehicle. If you have a risk spectrum, it's at a really far end of risk spectrum. So the theory goes, when market is risk on, everybody is so bullish, and people have like liquidity is good. Of course, Bitcoin is gonna have a really, really nice day, and just like any other small cap. And so that actually that's what has been driving Bitcoin in my mind, and it has the same driving driver as like a small cap. I show you literally this is what happened last year. I'll explain a little bit. The white line is Bitcoin. You can see that. And this, light blue line, it's a CT pure size factor. I'll explain it. This is too technical. It's really just you long small cap, short large cap. We call it the size factor, size premium. So a lot of times, the theory goes, when market is bullish, when you have enough liquidity, one curve is steepening, people try to take more risk. That's really you want to bet on that kind of like a size factor. That's a good measure of risk taking, how crazy market could be. You can see, like since the March last year, they almost go hand by hand. Bitcoin is just trading like a small cap, small size factor. Again, back to my original point, watching multi-asset classes, try to connect the dots, get a sense of where market is, and it's very helpful. Okay, that's actually that's all I have today. And I know it's I went through it very fast. If our audience have questions, I'm here to answer.
That was a ton of really good education, Bruce. I know it's a small cap event. I really liked the case study on AMD. Did you know that AMD is like one of our most searched tickers in Benzinga Pro oftentimes?
Really? I didn't know that. That's good.
I thought you knew that by the way you worked that out. So a little coincidental coordination there, but yeah, I'm sure there was a ton of people in the chat who were really interested in that stuff. I just have one super quick question for you. Who are Esoterica's clients? I'm wondering if there's people in the chat who could get some exposure to Esoterica.
It's an ETF, just like a Cathie Woods, like an ARK ETF.
Great.
It's actively managed ETF, and to be honest with you, and the latest, based on the latest data I know, I could say maybe 95% of our clients are retail investors. That's
awesome.
The reason we set up Esoterica Capital. That's the crowd we're trying to serve.
Love it, man. Well, I really appreciate the education that you provided. That was an awesome segment. Everybody, Bruce Lius, he's CEO of Esoterica Capital. And thanks a lot, Bruce. We will see you soon. Have a good weekend, sir.
You too, and thank you for having me. Have a good weekend, guys.
You are welcome. Awesome. Everybody, take a quick little stretch. I know that was a little bit longer segment, but a ton of really good information there. It looks like we have our next guest ready to go. And there he is. He's from Schaefer's Investment Research. Matt Timpane, you are a CMT, sir, and you are also the senior market strategist at Schaefer's.
I am.
Nice.
So,
well, welcome. How's your day going so far?
Today's been great. It's finally nice and sunny here. It warmed up nicely today, so we're over in Cincinnati and
nice.
Loving the weather.
Awesome, man. Midwest Connect here with Detroit. Love it.
Exactly.
So I see you got a little presentation or a big presentation. I will let you take it away.
Yeah, as always, we have plenty of slides here, and we're going to kind of go through our small cap summer outlook. As he said, I'm Matthew Timpane. I'm a CMT, senior market strategist over at Schaefer's Investment Research. We have been providing retail traders analysis, trade recommendations, and news for over 40 years now. So we're going to go over the small cap summer outlook, and we will touch on the overview just really quickly here. And we're going to just cover some macro, some sentiment data that I have to share, and some seasonality data I have to share with everybody as well. We'll even have a couple trade ideas at the end. So this is just the IWM, the ETF, Russell for the Russell 2000. Recently, we've been finding support at the plus 10% year-to-date level, but it does have this weird kind of head and shoulders pattern. So it's something you want to just kind of be aware of. Head and shoulders patterns don't always play out. They're probably one of the most prone to not playing out, actually. So it's interesting that it is kind of finding support recently right here at the 210 level on our open interest configuration. 210 is actually the May peak put level in options. So it's not really the fact that we're going to break down necessarily, but we want to be aware of where our risks are. In the past, the Russell has loved testing the 200-day moving average, which is near the year-to-date break even. It's this red line on the chart. And during the last bull market, it actually did this 4 times, which was during 2016 to 2018 bull run. It also likes to test the 320-day moving average, which that was more often in the 2000s and the early 2010s that happened. So it's reasonable to think that we could still see these levels before the next rally really resumes. So we just want to be careful. That being said, if we do break out above 230 there, bull market is back on. These are just kind of the major levels that we're looking at. The funny thing is that the $200 level at the 200-day moving average and the $170 level, which is near the 320-day moving average, actually kind of lines up with our open interest configuration as we head into the summer. So we'll take a look at that here. I took out May's standard expiration so I could kind of illustrate what it looks like going into the summer. That 200 strike right there is now peak put. Usually that's a great area for support. Those are bought to open puts. Market makers want to keep it above that level. For some reason, if we do break that 200 strike level, we could be in like a delta hedge scenario where market makers will have to continuously keep shorting IWM to keep those puts that they sold to open to hedge their delta risk against it. What happens is it usually goes all the way down to the last significant strike price before you kind of get this exhaustive bottom. So that would be the 170 strike. That's kind of our worst case scenario right now that we're looking at. And I'm not saying this to be all doom and gloom. I'm actually telling you because these are great buying opportunities. In the past 20 years, when these levels actually have been presented to market participants, these have been great entries where we saw rallies over the next year at a minimum, if not a multi-year run after that in small caps. For those of you who've seen me before, I love to do relative charts. The Russell 2000 versus the S&P 500, I know we kind of just saw that. I pulled it back a little bit more. This is a weekly chart. So we are looking for a little bit more underperformance from the Russell 2000 versus the S&P 500 in the near term, but it is approaching the support area. And, that doesn't mean that price action in the Russell has to go down. It just means that the S&P 500 may run a little bit hotter if we are going to continue to rally right off these lows this week. Since a lot of the companies I've been presenting here are also smaller microcap companies, I figured it was only prudent to show a microcap chart. It's extremely similar to the IWM, so I won't go over it too extensively. It also loves to find support at its 200-day moving average, which is right around year-to-date break even. And the 320-day is also important, just not as much as the small caps have been. 2 things that have been important that we can look here at the chart, both on the IWM and the IWC here, is that relative strength actually has never broken below 30. That's where you can kind of get these bigger exhaustive breakdowns if that happens. So you'll want to watch to make sure that kind of stays above that level so that you know that we're still in the bull market and we're not going to go into maybe a bigger bear market cycle, whether it's cyclical or secular. As well, a relative chart on the microcaps, we're already approaching support levels after finding resistance. So we could see a little bit push lower, maybe even a peak through that support level for it only to pop back up to keep that bull market running. But these are things to just kind of keep an eye on as we go forward. Another chart that I have here, because we want to know where we should be kind of allocating within the small cap space when we do get that buying opportunity. This is the growth versus value on the Russell. It's really a kind of a do or die moment right now for growth. It's kind of at this very minor support level. I almost didn't even want to put it on there. It did touch back in 2001 and then 2020 before it resumed higher. So if we broke this level, this would mean that we could be underneath a major regime change within leading stocks. So you no longer will be thinking about technology. You'll be thinking about materials, miners, industrials, transports, financials. You know, they're not the cool kid stocks, but they could be entering a prolonged bull run that we haven't really seen since the early mid-2000s if for some reason the support does break down. Something that we do at Schaefer's that is a little bit different than a lot of other places is we aggregate short interest data of stocks within the indexes. So we do this for the S&P 500, we do this for the NASDAQ, we do this for the Russell 2000. If you look at the S&P 500 or the NASDAQ, you would see that the short interest is in this lower 25th percentile. It even has been touching the 0 percentile ranges as shorts covered mostly throughout the past year here on those stocks. But what's interesting about the Russell is that it has remained in the 69th percentile over the past 5 years. So even though we have had a pullback and over the last year we're in the 25th percentile and short interest is down 4.84% year over year and 5.96% year to date, you know, there is still plenty of fuel to fire another bull run here. So, you know, we'd be a little bit more concerned on small caps if this was approaching more of the, you know, 25th percentile or lower on that 5-year basis. Another unique thing that we do is we take buy to open data and we do equity put call ratios. So we ran a 10-day on the IWM. We do this on, you know, again, all the indexes. We do 10 days and 20 days to kind of get smooth out this average a little bit. It did recently close around 0.342. That was the other day. So I'm suspecting we did kind of see a little pop with that volatility in the last few days. I know we did in the NASDAQ. What we really look for in these is we like to see those spikes up to about 0.5, 0.6, or even higher to mark definitive, you know, big bottom lows. We haven't quite seen that yet. It doesn't mean that we have to have that for the bull run to continue. If we do break out, sometimes just muddling around like you kind of saw at the end of 2020 and the beginning of 2021, it still could run. So these are just types of things that we look for. If we do end up breaking those support levels, something we would want to look out for is just a giant spike in this. Since we are an options firm, we do look at equity call option volume, obviously. We do think that the options market is a big driver in stocks. It is nearing its 1-year average right now in call option volume. And this is telling us that risk appetite is kind of fading a little bit as the economy reopens. People are going back to the office. People are starting to do other things. You know, they're not sitting at home trading as much. So what does this really mean? It means that we're a little bit more vulnerable to pullbacks and volatility as dealers are buying less shares to hedge those sold calls that they sold. This also means that we'll likely see probably less gamma squeezes than we saw last year in a lot of those small cap, high short interest stocks. This happens usually when, you know, the dealers and the market makers, like I said, they sell the calls and then they have to buy stock to hedge those sold to open calls. Well, as those deltas increase against them, they need to keep buying more and more shares to hedge those deltas. So it's kind of almost like a self-fulfilling prophecy that fuels price appreciation. So it's something that we're just keeping an eye on. As long as it keeps holding that 1-year average, maybe we can get another ramp up, and then that would bring us into a nice another bull market. We do a lot of sentiment work over at Schaefer's as well. One of the things is that we like to look at is the active managers index here. And we kind of look at it a little bit differently. I like to look at the 2-week percentage change versus just looking at it from a relative or from a regular basis or the naive basis. The score did come in at 46.86, but on that 2-week percentage change, we did see a minus 54% reading this week. The last time we saw this was early March, right before we started another short-term rally. When this happens, market lows are usually put in within a week to about 4 weeks. So we could be in the process right now. It's not the greatest timing tool, but it's telling you kind of look out for a bottom. If we do get another flush, you know, it'll likely stay down there for a little bit. But that's just, like I said, it's just telling you that it's probably coming soon if we do see a market low throughout this consolidation. So we could be there. We could be moving on already, but we also could see another flush. It's just kind of giving you a heads up. As we move into summer, we wanted to kind of present some seasonality on small caps. I ran data on the last 20 years for the Russell. And as you can see, we're kind of right on track. May, we typically struggle. And we kind of actually pull back right into standard expiration for options in May. And then we kind of see a pop as we head into June. So as of right now, we're on track for that. We want to kind of look, after next Friday to see if we're going to get that pop in stocks as we head into the summer months. And then we also brought something else for viewers. We ran seasonality on all the Russell stocks. What ones performed the best from May 1st through August 30th since 2010, and what were the worst performers as well. So I have 75 of the best performers, and I have 75 of the worst performers. So feel free to take a screen grab of it so you have the data. I'd like to just point out, you kind of see some of the usual suspects here if you've been following small caps for a while. Workovia, Rapid7, Boot Barn, RH, Wingstop. Love Wingstop, actually. It's been one of my favorite companies. It's been the last 5 years. It has outperformed the S&P 500 every summer, and it's been positive every summer. Another few names are Novavax and Sunrun. A lot of these right now aren't even fully technically setting up. Some of them look actually pretty ugly from a technical standpoint or even from a sentiment standpoint. But you want to be aware of these things as we possibly do go through maybe a larger correction, or at least they go through a larger correction as we head into summer. Here's the other side of the list. For the bullish stocks, again, you'll see some familiar names, Vonage, TriNet. That actually looks pretty good technically right now. Sentiment, not so much. Arrowhead Research, Fizz, that kind of ran right with GameStop, AMC, and all those stocks last year. EXPI is on this list as well. That's a competitor with Zillow and Redfin, and then Stamp. That thing is extremely volatile, as we know, on the upside and the downside. So these are the type of stocks that typically have bullish readings throughout the summer. Now to the bearish ones, or more so just stocks you might want to stay away from. What surprised me was most of the stocks that are on the negative seasonality side throughout summer in the small cap space have been some of the biggest year-to-date winners. You have Whiting Petroleum there, WLL. That is on average down 22% during the summer months. It's also only positive 30% of the time. It also beats the S&P only about 36% of the time during the summer months, but it's been on quite a tear. Another one is Century Aluminum, which is in a similar scenario, kind of like Alcoa, as you know, if you've followed any of the aluminum stocks. Lumber Liquidators also, that thing was on a tear throughout the year. It did kind of just look like it broke down from like a bear flag and could be maybe in a massive, more of a head and shoulder pattern. Like I said, not the biggest fan of that pattern, not exactly something I trade off of, but it's something just to be aware of. When you look at a lot of these stocks, what I'm kind of looking for is, you're looking for what stocks maybe it's time to take profits on, have had big runs. The other two here that on this page are Hibbert Sports and Abercrombie & Fitch. So it doesn't mean you need to sell these stocks, but some of these are up 100% or more. And, if you're sitting there with some of these profits, maybe it's time to take half off the table. You can probably reallocate those returns into something better that has a better opportunity cost for you going forward. And maybe you can take from that bullish list and look for some of those beaten down stocks. Small caps is a little bit different than options trading if you're buying the stocks. I always look for more beaten down stocks in the small cap space versus when I'm options trading, I'm really looking for momentum and trend drivers. So two of our trade ideas, we'll get through this here before we're over. We have Aerie Pharmaceuticals. It's engaged in the discovery, development, and commercialization of therapies for treatment of glaucoma and other eye diseases such as dry eye. Since inception, what really stood out to me is this 100-day moving average has possibly been the most significant daily moving average. It's capped gains in bear markets and marked bottoms in bull markets. It's also got an open interest ratio in the 97th percentile. And when we've seen short interest ratios above 1.0, it's been very bullish. Revenue growth is also supposed to be around 50%. And as you can see on the chart, it broke above resistance and now retested support now twice, and it has an upward sloping 100-day moving average. You can see it's just been a major pivot point for it just in the short time. Apologies for that. This next chart is GAN Limited. It is a software provider for online casino gaming and online sports betting applications. It provides a platform for simulated gaming operation and provides back office management tools to its clients. Now, we all know online gambling is moving forward in many states, so they should see continued catalyst as states seek revenue after many states took huge hits to their tax receipts during the pandemic shutdown. It's very similar to the cannabis scenario that's playing out. You're seeing a lot of these states move forward with legalization of online gambling and sport betting, just like cannabis, because states are looking for revenue. So what do we have here? It's a little bit more of a risky trade. It did fall out of a bullish channel, but it did find support right where it did back in the fall. And it is kind of popping a little bit today. So oftentimes we see this, they come down, it fakes out of that channel, it'll pop right back up into it. If that does happen, this has potential to go back to the mid-20s here. It's got decent short interest data. 8% of its float is short, and we're starting to see some covering actually in the last 2 weeks. It's down about 6%. Revenue growth next year is also 22%, but that could increase as well as we move forward and as states look at legalizing online gambling or sports betting. So as always, thank you for your time. We'd love to chat with you about your options trading. We also do about 4 to 5 stock reports every year. And you can come over to schaefersresearch.com. We have a lot of great educational content, news content, and feel free to follow us on Twitter at Schaefers and at mtimpan.
Really appreciate all the good information, Matt. I have a really quick question for you.
Yeah.
If you could have one recommendation on how a retail investor or maybe an intermediate retail investor who's just looking to kind of supplement their strategy, what's like the quickest way? What's the best way you think someone could start education about technicals?
To start education about technicals, there's plenty of great books out there. But one of the things I would say is actually, get on Twitter, get on stock charts. There's a lot of good traders out there. They have a lot of recommended people to follow. See what they're doing with their charts. Otherwise, there's old school books like John Murphy's book that will teach you all about trading. Brian Shannon has a great book on multi-time frame analysis. We have great content as well. We do go a little bit more into options than just technicals, but we're always covering technicals with the options as well. So give us a follow. That's probably the best way to do it. You just gotta hop in there and look at everything itself, and then just try to find the right people to follow.
Love it, man. What's the follow we should do?
The follow that you should do
to get a hold of Schaefers. I mean.
Oh yeah. You can give us a follow at Schaefers or at mtimpan.
Great.
Feel free to reach out to us. Otherwise, come over to the website. You can always talk to somebody there as well.
Awesome. Thank you very much, Matt. That was Matt Timpane, CMT and Senior Market Strategist at Schaefers Investment Research. You have a good weekend.
Yeah, you too. Everyone have a good weekend.
Thank you, sir. Next presentation, we are winding down. Believe it or not, ladies and gentlemen, we have just a few presentations left, and I see him backstage right now. We're going to be welcoming on Daniel Kim. He is VP of Corporate Development at Sayata Mobile. It's ticker SYTA. What's going on, Daniel? Happy Friday.
Happy Friday, Brent. Thanks so much for having me.
No problem. I'll let you have the floor, sir.
Thank you very much. Welcome, everyone, to presentation on Sayata Mobile. I'll jump right into it. This is direct you to our standard disclaimer page. So Sayata Mobile is roughly a $50 million market cap company, give or take. We are a hardware provider. What we provide are cellular communication systems in very specific market and segments. I'm going to show you our devices. They look like smartphones, but they are engineered to be quite different, and they are designed to replace a very specific end market called land mobile radio. And that's the primary technology used by first responders, fire, police, and ambulance, but also now by a growing number of enterprise customers. If you look at our website, you'll see that our products are marketed under the Uniden brand name. When we came into the North American market, of course, Sayata is a relatively small, being a small company, we did not have any brand recognition, so we licensed that name, as Uniden is a globally recognized name. We were founded in Israel. Our R&D continues to be there. Officially, we are a Canadian company headquartered in Canada, but we are only listed on the NASDAQ. and we are pretty much a virtual company, excuse me. Our CEO continues to be in Israel. We have a number of salesmen located globally. Myself, I'm in Toronto, and we have our accounting office in Montreal. So now I'll identify the problem that in the market segment that we are going after, and I'll describe the solutions and the disruptive products that we have to displace what we believe will be a pretty dramatically growing market. If we look at what is the current solution, if you look at fire, police, and ambulance, and you see the microphones on the shoulders of police, that is typically what's called land mobile radio, or LMR. It's a radio technology no different than you would use for AM/FM radio, where you would put up a tower, pump up a bunch of electricity, and the RF signals will spray to a certain circumference. And it works well enough for one-to-one and one-to-many voice communication. But the problem is, once you move outside of a defined perimeter, you'll lose that signal, much like you do when you're driving and you're listening to your AM/FM radio. After a certain time, you lose signal. Within the US, there are 10,000 of these networks alone, and they're often incompatible. And the bigger problem is they're often quite expensive to maintain, and they're quite inefficient, really not compatible for any type of high bandwidth communication. So you're really quite limited to simple voice and potentially texting. If you look at the bottom left-hand corner of the picture, that's a typical cabin you would see, again, in first responders or any enterprise vehicle. It's a multitude of different pieces of hardware. Quite expensive. In some, if you look at all those different pieces, roughly $7,000 to $10,000, and you would be typically paying land mobile radio third-party vendor a monthly subscription fee of roughly $30 to $40 per month. So this has been around for roughly 70 years, and it is a very mature and well-understood technology. So what is changing and why this technology is going away was really catalyzed by 9/11. When that event happened, the shortcomings of land mobile radio became really evident. And as a result, the US government stepped in and decided to set up its own separate authority called the First Responder Network Authority to manage communications for first responders. They put this out to tender, and AT&T won this contract back in 2017. So for the last 4 years, they've now built out the required infrastructure to support this network, and they cover more than 99% of the US population. But what's exciting now for companies like ours is the number of subscribers that are now signing on to this network. This number is, in fact, a little bit dated. It shows 2 million FirstNet connections. In fact, it's now 2.2, which is more than doubled year on year. And there's, in fact, 16,000 public safety agencies. We came into the North American market with our flagship device. That's the very bottom point, called the UV350. And it's the first device to address this market segment, and is currently still the only device that is certified FirstNet ready. And now I'll explain the various solutions that we have coming into this marketplace. So on the top, you'll see that's our flagship device. We also have rugged handsets, which we're bringing to North America this year. At the very bottom, we have cellular boosters, and these are all companion devices. They all are 100% complementary. We sell them through our same end channels and largely to our same customers. So lots of leverage in terms of generating additional sales. And as far as we know, we are the only company, despite our size, to have this breadth of product portfolio. This is our UV350 device. It looks like a smartphone. It acts like a smartphone. It operates on an Android operating system. You can make cellular calls on it, but you can also install what's called push-to-talk over cellular software. And that's the key software that is really used to replicate the features and functions of land mobile radio. You'll see it to the right of that device. It's a remote microphone, so it operates just like you would typically use. So the use case is identical to a land mobile radio user, so there's really not much in terms of training required. The real key here is because it is an Android operating system, you can now download a multitude of applications that would be compatible for first responders, and they're all certified and available on our platform. But it's also very specifically designed to work in a noisy environment. You can take, of course, your smartphone and use it in your vehicle, and it works well enough. But in a commercial vehicle, which is much louder, it really does not work terribly well. So this has been purpose-built. It has additional chipsets to manage noise cancellation and echo cancellation. It has a louder microphone. It is hardwired into your vehicles. It does not have a battery. So it it starts up immediately when you fire up your vehicle and then turns off when you leave your vehicle. It is professionally installed, and so it really is an all-in-one device that replaces all the previous pieces of hardware that I showed you on the previous slide. In terms of competition, we have a number of indirect competitors, but really no direct competitors. And we've talked about the smartphone already. The two-way radio or the land mobile radio is right in the middle. And it works well enough for voice communication, but certainly does not support data applications. You'll often see ruggedized tablets as well, but that does not provide any type of cellular calls. And then, of course, you can use a modem, but that requires companion devices. So our device really is quite unique, and it provides a disruptive solution that no one else can really provide on a fulsome basis. Why this is gaining so much interest in the market is for our customers, it provides a dramatic decrease in costs, but also provides a tremendous increase in functionality and safety. In terms of CapEx and OpEx, if you look at the very bottom, we have a great quote here from Fairfax County, which is a test bed for all things FirstNet. And based on their estimates, their county saved more than $16 million in upfront costs, that's CapEx, and $2 million annually, that would be the OpEx number. And so on top of that, when you layer on the amount of cash that you are saving, both upfront and annually, and you layer on the additional functionality, safety, and network coverage that our devices provide, it really becomes a pretty easy decision for our customers to move over. The reason why the network coverage, of course, is much broader than land mobile radio, you are now operating on a 4G LTE network, which is nationwide. Our second product category is rugged handsets. Again, these are specifically designed for first responders. So they are ruggedized from the get-go. They have dedicated buttons. They accept, of course, the push-to-talk over cellular software. And these are designed specifically to work with all the various applications that first responders require as well. To date, we've only sold these in international markets. We announced recently a partnership with a third-party software vendor to provide critical software to now deploy this within the North American market. We are talking with all our various carrier partners, and we anticipate that we will be launching this product in the second half of this year. And we think this will be a potential home run for us because it works perfectly with our UV350 as a handoff device. If you can imagine any type of commercial vehicle, typically speaking, head office does like to identify the vehicle, so that is why our device is hardwired into that. But generally speaking, you will have multiple drivers per vehicle, so this is a perfect device for a handoff for all the various people. In terms of competition, on the very high end of the scale, Samsung and Apple, of course, you can take one of their phones and put a rugged skin on it and apply it to this market, but their solutions would be quite expensive and out of reach for many of the workers that require these kinds of solutions. There are other competitors such as Sonam, Kyocera, and Caterpillar. But in terms of how we're coming into the market, relative versus our UV350, which we believe is truly a disruptive solution from the technology portfolio, our rugged handset, we're coming in as a low-cost disruptor. This is a purpose-built phone that is coming in at a much lower price point, but provides all the functionality required by first responders. And for a market where you are addressing things such as security guards, warehouse workers, and inside airports, any type of enterprise environment, including first responders, they don't need a $1,000 phone, but certainly a $200 phone would be more than adequate and provides all the functionalities that they require. The third product category, which is a companion device that would work with any of our devices, of course, is cellular boosters. In fact, the pandemic is the one area that has benefited our business in 2020. And we enjoyed record sales with our cellular boosters in 2020, and we're expecting that 2021 will continue to show that momentum. We have, roughly speaking, it falls into three buckets. We have boosters that would be installed inside buildings. It could be as small, from your house to large warehouses. We have another device that goes directly in your vehicle, so it can amplify the signals. You put an antenna on your roof, and it would distribute, go from 1 bar to, say, 5 bars, depending on the area. And then we have a third product, which would connect directly to our flagship device. Like our rugged phones, we've historically only sold these on online channels, as you can see on the very bottom there, through Amazon, Costco, Walmart, etc. But because of our relationships with the carriers in the US primarily, or North America, I should say, we've been now expanding our channel reach. And we're now starting to see some significant opportunities in various enterprise markets. So this has been a real boon for us, and we expect that this will continue to drive some additional sales, both for our handsets, our in-vehicle device, and boosters on a standalone basis. This is a market that is quite competitive as well. There are significant players in this market, the biggest being WeBoost. But what we would note here is WeBoost, SureCall, Smooth Talker, they typically only sell their products online and mostly to consumer market. We are leveraging, again, our carrier relationships and then applying our booster technology through those same channels. So we are really focused on the enterprise market. And we think there's lots of opportunity. During the pandemic, as an example, we're seeing numerous enterprise customers now looking for boosted cellular connectivity. As a couple of examples would be restaurants. You no longer receive menus. You're downloading that through a barcode, so you need good connectivity. Wi-Fi would work well enough, but it is a bit clunky, doesn't scale very well, and it's certainly not as secure as a cellular connection. Likewise, for, say, a pharmacy, you walk into the pharmacist and you need to identify yourself and show your script. So boosted cellular signals are a solution that enterprise customers are quickly realizing is a critical technology required for their businesses to operate. We recently announced a small acquisition earlier this year, a company called ClearRF based out of Spokane, Washington. And we announced that we paid $700,000 for this. And the reason why we acquired them, and this is part of our M&A strategy, is we are looking for complementary companies that will be accretive to our business, ideally work through our same channel so we can sell it to our large carrier partners, ultimately to our same end customers. But this company had a very unique technology. It's called a passive bypass technology, which no one else has in the market. And what this essentially does is for their solutions that are connected directly to the end device, say it could be a cellular modem or your cell phone, generally speaking, if you would lose any power to the amplifier, you would then lose the RF signal to the end device, which of course would be a big failure point for first responders. We have now taken this technology and adopted it across our booster portfolio, and we think this could provide some pretty dramatic opportunities for us to continue to gain traction within our core end markets. They do have a US manufacturing footprint, which we think will be of benefit to us as well. We manufacture all of our gear currently with a third-party contract manufacturer overseas, but having now a Made in America stamp for various customers could be very important going forward and opens up new military and government contracts for us as well. The total addressable market for our devices, when we first came into this market, we thought it was only first responders, which that in itself was a pretty significant market. If you look at the very left-hand side, you'll see there's roughly 25 million vehicles that this would be applicable to, and that would be alone roughly $19–20 billion. But if you look at the other two verticals, coincidentally, they're roughly about the same size. The rugged handset market, the ASPs are lower, but the volumes are significantly higher. And that touches upon so many enterprise verticals that we had not anticipated. We are now deploying and seeing a lot of interest from energy and utility, public safety, construction, logistics, government, you name it. It really becomes quite a broad market. And likewise with our cellular boosters, this is a market that is forecast to double in size over the next 5 years. So lots of growth in each of these core markets.
Hey, Daniel, just want to give you about a 5-minute heads up.
Okay, terrific. Yeah, I'll just wrap this up pretty quickly. And in terms of how we approach the market, we are a small company. We're only 28 people. Even if we were to quadruple in size, we envision only growing by a handful more people. The way we get to market is through our carrier partners. We're now qualified with all the major carriers in North America: AT&T, Verizon, Bell, Rogers. FirstNet is a separate entity that AT&T manages. So we really leverage their dealer network, which reaches the thousands of end customers that they have. Quick look at the financials. We really are going through a pretty significant transition. If you look at the historical numbers, most of our revenues were generated by our legacy business. of rugged phones to price competitive markets. So our margins have historically been quite low in the 25% range, 25% gross margin range historically. Fast forward to the first 3 quarters of 2020, we've seen a complete inversion. 4G sales now represent 2/3 of those revenues. And the beauty of that model is, as we continue to transition the balance of our product portfolio into North America, is these 4G product portfolio is carry roughly 40% gross margin. Quick snapshot of our revenues. We haven't reported Q4 numbers as of yet. So this is a little bit stale, but it gives you a sense of how our 3G product portfolio has evolved over time, where we've reached saturation in 2017 in international markets. And then 2018 and 2019 going forward, we were hoping our penetration in North America would happen a little bit faster, but the carrier qualifications took a little bit longer. But the green line indicates the mix of products as North America continues to grow. Over the course of time, our target is to get to 40% gross margin. Reason why we put up this chart as well is we have a long history of both developing hardware, so we know how to manufacture and design it. We know how to integrate it with third-party vendors, and we've been delivering to very happy customers for many years now. Quick snapshot of our capital structure, roughly $50 million market cap. Our enterprise value, likewise, we do have a little, roughly, pardon me, this is a little bit dated. This is going back to the third quarter because we haven't reported. We do have, we raised $13 million in our IPO back in September, and then another $13 million in private placement in December. So we believe we have sufficient capital to grow our business and continue on our M&A strategy to complement our organic growth with inorganic growth. At the very bottom left-hand corner, you'll see our major shareholders. Roughly 1/3 of our stock is now held by institutions. In terms of key milestones, everything before the 2020 was building the company, getting qualified with carriers and building the channel. Everything that happened in 2020 was building the team. We now have key account managers to manage AT&T, Verizon, and our booster sales, dramatically expanded our distribution and reseller partners. Going forward to 2021 and beyond, we're really laser focused on growing the business to get to profitability. Very proud of the team that we've assembled for a small company that we have. Mark Seelan, our founder and CEO, has decades of experience in the telecom industry. Likewise, across the board for all of our team members in our management team. Likewise for our board, we've reconstituted that just fairly recently. Peter Goldstein was appointed to as our chairman, and each of these board members likewise bring years of experience, which has been incredibly helpful in helping us open doors within the key U.S. markets that we approach. So to conclude, we believe we are an undervalued, unknown story. We are disrupting a massive market. We have been an innovator from the very beginning, and we've continued to rapidly innovate new products. And we believe this is a market that is transitioning very quickly now. This is legacy technology that's being displaced by companies like ours. COVID certainly had a negative impact on our business overall in 2020, but it seems to be abating, and we're starting to see robust business pick up in 2021. If you look at the last 3 or 4 quarters, last 3 or 4 months of our press releases, both the cadence and the size of our deals have certainly increased. And we believe as that continues that our high operating leverage will generate significant profits for us, which we are hoping to achieve in the near term. So with that, I'll conclude my presentation. So thank you for your time.
Thank you very much, Daniel. I think a little congratulations due. It seemed like you and the Siyata team did as best of job as you could have done over 2020. Obviously, it was a tough year for everybody, but here we are. We made it. It's 2021.
I appreciate that. Thank you so much, Brenda, and thank you for the opportunity to speak here at your conference.
Yeah, and if anybody wants to get some more information, it's www.siatamobile.com. That was Daniel Kim. He's VP of Corporate Development at Siyata Mobile. The ticker one more time is SYTA. I hope you have an awesome weekend, sir.
Thank you very much. Likewise to you.
Thank you very much. All right, gang, we got just 2 more presentations left, believe it or not. Winding down in time, not in momentum, everyone. We are going to finish up with our last couple of questions for our contest that we have running. And here is the last one we looked at. Let me go to the next one. What's your favorite crypto? BTC, ETH, LTC, or ADA? Let's hear those. Let's see those answers coming in. Let's see those answers coming in. We got a BTC. We got a couple. We got an ETH. We got an ADA. We got another BTC. I'm gonna let everyone get their answers in, and we'll go to the next poll here. The next question. This is our last one, ladies and gentlemen. When would you feel comfortable returning to in-person conferences? Doesn't seem like the Benzinga events team is trying to get a little insight in here at all. Summer 2021, that's in like, a few months. That's in like a month. Fall 2021, winter 2021, or unfortunately, hopefully not until spring of 2022. And there is another little question over here. I have to keep minimizing this thing. Later or not sure. Nobody respond that way. I'm watching you. We need some optimism here, everyone, ladies and gentlemen. All right, real quick. What's your favorite crypto? Last question. When would you feel comfortable returning to in-person conferences? Winners out of a drawing are going to win a lifetime subscription to Benzinga Pro, a lifetime subscription, not all three of these. Lifetime subscription to Benzinga Pro, that's one of them. A lifetime subscription to our breakout newsletter, and a lifetime subscription to our options newsletter. And we're going to give the results at the end of the track here. Next is a face we've seen before. Sheldon Bennett at DMG. You are CEO and COO at DMG Blockchain. You were joining us for a panel a little bit earlier. Now you're here to tell us a little bit more about DMG specifically. How you doing, Sheldon?
Great. Yeah, glad to be back. Glad to see you again, and enjoyed the panel. Enjoyed Daniel Kim. Many people may not know he was an analyst at Paradigm in a past life, and actually initiated coverage on DMG almost 3 years ago to the day.
Wow. That's a good little segue there, Sheldon. Well, I'll let you take it away. Oh, the ticker, by the way, I just wanted to mention for DMG is DMGI.
Great, thank you. So yeah, great to be back. Great to see Daniel and others that I've seen today. I think crypto's a great industry. It's changed a lot over the last few years. DMG has grown a lot over the last few years, and I'm looking forward to sort of bringing everybody through our company. Here's our forward-looking statements, as all investors should be aware of these issues and look at this information. Getting into DMG. So a few things about DMG. So our company is vertically integrated, and you're going to see and hear a lot about vertical integration the next 15 or 20 minutes while I explain DMG to everyone. But what I mean by vertical integration is I sort of see the company like an Exxon Mobil, where it has sort of upstream, exploration and production. It has sort of midstream distribution, refining, and then it has downstream, retail sales. And then there's obviously R&D in there and other parts. And with DMG, we're trying to do the same thing. We have our core business, which is, sort of the upstream. It's creating the Bitcoins. It's the physical infrastructure. And then we have sort of the retail or the movement of those Bitcoins through our analytics and forensics, which is really our software products that allow people to use Bitcoin in very responsible ways. Our company's not, huge in headcount. We're around 25 and growing. We're located up in Vancouver, BC. We have a subsidiary that's out of California, out of the San Francisco area called Blockseer that we purchased back in 2018. To date, we've raised just around 125 million in public markets. We own our large Bitcoin mining center in Christina Lake, BC, which is a privately owned and built substation of that DMG constructed on our property. And of course, our symbol is on the TSX Venture, DMGI, and we're on the OTC as well. And for those over in Europe, we're on the Frankfurt Exchange. So a little quick story about us, and I normally do this presentation over an hour, so I'm going to try and move quickly through this, but you can see that we were founded back in 2016. Early in 2018, we listed. We built our substation and completed it on Christina Lake in late 2018. We've done different partnerships. We've got power infrastructure built properly. Crypto started coming back 6 months or so and really gaining momentum after the last halving in May. And since May, we've done some great things around our technology, and we've done some, what was a very large raise with our investment bank over the last few months as well. So as we have all been talking about, Bitcoin bull market is here. Bitcoin will bounce up and down. Other cryptos will bounce up and down, but the movement of large investment funds and companies and the tweets of Elon Musk and all these things are all indicating that crypto is seen differently than it was back in the rally in 2017, 18. And I think that, we're all believers that this is a permanent fixture in growing in the economy. And so with that in mind, how is DMG going to grow its business, and how is DMG going to create shareholder value? And so I like to think of our company sort of like a triangle. So this is sort of the vertical integration, where the base is power infrastructure. We need power in order to create Bitcoin, and we'll discuss about how we're being responsible in power. You need equipment, obviously, that's the servers. There's various different types of manufacturers. You need to run it properly. You need to have good energy management, good optimization, good software. But then you need to monetize that. When a Bitcoin is actually created, you need to take that Bitcoin and move and drive value onto it and continually touch it. So what you're going to find that's different about DMG and other crypto companies out there that you've seen today and heard of or read about is that, we're a pure play crypto mining company, and we mine crypto, and that's a core part of our business. But on top of that, we have something called Core Plus. Is after a Bitcoin is created, and we can stick it on our balance sheet, or we could sell it if we need cash to finance our operations. But after it's created, we keep touching it, and we keep monetizing, we keep driving revenue from it. And so this is the difference between us and many other companies out there, is that we're really focused on creating Bitcoins, but also we're creating the software that will continually monetize those Bitcoins once they're created. And I think that's very unique. With our purchase of blocks here, we built out its core competency, which was tracking Bitcoins. And you've probably heard of different companies out there like Chainalysis and CipherTrace and so on that sort of track and do Bitcoin provenance and give risk ratings around it. So we had that software early on. And we really directed that software and built that software to focus in on transacting in Bitcoin in a responsible and regulatorily approved manner. So if you sort of look at us, we have our 85 megawatt substation. We have various supplier agreements so that we get equipment, which is hard in the strains of COVID and the problems with silicon and manufacturing of machines. We have our own software that helps us run our operations with automation as much as possible, since these servers do need a lot of tender loving care. We have made the conversion to immersion. So we've announced that we're converting our entire operation over to immersion cooling. And I'll have a couple of slides about that, but that really helps us lower the amount of power we use for the amount of hash rate that we are able to generate. And then we have our software platforms, and I have a few slides on the different pieces of software that really pull our company together and drive us up to this top part here, where we get into the higher value products around data analytics and financial services. And so in our core infrastructure, a lot of people have never been to a Bitcoin mining operation. They've sort of seen little press releases and seen little shots, but this is a shot in our place in Christina Lake. And I actually took this photo myself. I snapped it off. And on the one side here, on the right side, you can see all these cables. It looks like spaghetti. Those are actually Bitcoin miners. There's lots of them. They're loud. They take a lot of power. You can see all these power cables and network cables. On the other side, I picked this on purpose. On the other side, these are actually Ethereum miners. And so we do actually have some Ethereum mining operations. We mine ourselves. We also host for third parties. And so these are some Ethereum miners that we host for another company. And so you can see the dichotomy between sort of the two different looks. Now, none of these are beautiful. In the back end, there's a bunch of spaghetti cables and network cables in the back end there. So they're just set up a little bit different, the physical structure of the different types of servers. Just for those to know a little bit more about us, Google Maps hasn't updated in this region of Canada for a long time. So up in the corner here, you can see this is where our actual substation is, and there's a few shots of that. It's on our property. We don't use somebody else's substation. We built this ourselves. This way we don't impact the community. We don't have any adverse effects on the community that would be saying, because of our power needs that we cause, blackouts or brownouts or restrict the amount of power that the community around us can have. This is actually that little building right here. It's about 30,000 square foot building, and that was that snapshot you saw inside there. And then if you take a look here, just to give you an idea, this is where our data center sits. It's right on the US border. It's about 500 or 600 meters from the US-Canada border. And Spokane is about an hour and a half drive or so. And then, of course, there's Vancouver and there's Seattle. The good thing about this region is it's actually nice and cool, which really helps us throughout the summer when the hot months are there to keep the servers running nice and cool. And so, as I said, here's sort of some snapshots of us clearing out the area. You can see the building in the back here. This is us building and commissioning and finishing our own privately owned substation, which gives us access to this power. The power up here is a power line that we interconnect to. There's just over 200 megawatts of available power on that. When we looked for a site, we actually looked for a site that had a lot of unused or sort of, I wouldn't say stranded, but underutilized power. There's multiple dams in this area. With our 85 megawatts, if we took the entire 85 megawatts off that transmission line, they still have well over 100 megawatts left for other customers. So there's lots of expansion for future growth. And of course, we're close to the Columbian River. And so there's an abundance of hydroelectric power here. And this is just a picture of it finished and all commissioned. And they look a lot nicer when they're done. This is the building inside here. We took an old finger joint plant, which basically takes two pieces of wood and glues them together to make a longer piece of wood for sale. It went out of business, unfortunately, and we were lucky to come in and purchase this building and land and be so close to the transmission power to be able to build our substation. So it's just our workers building the racking and all the power infrastructure out. And this is sort of what it looks like at the end. You saw that picture earlier in the slide. This is just another picture down one of the walkways, and there's many of these pods of miners working in there. And you can see there's a lot of cabling and these big 800 amp panels that feed all the power into our servers. I spoke a little bit about our conversion to immersion. This is something that we're actively doing. We have some great partnerships with industry players in the manufacturing and design of immersion tanks, as well as in the fluids. We've done a power study, and our power study was done by a third party, just so that we didn't get overzealous about immersion and try and push this without some real scientific background to it. And the study came out quite well. I mean, we ended up thinking we'd save about 10% of the power for the same amount of hash rate from our servers. But we actually ended up around 18% consistently of power being saved by removing the fans and using a fluid to cool them. And so that's a great savings, and that savings goes into our ROI, but it also helps us in our CapEx. So this is a great addition of converting over to immersion cooling. And not many people have seen immersion cooling, but it's a dielectric fluid, and that fluid goes over the servers and pulls all the heat out. And it's a clear fluid. It's very easy to work with, and I think the future of crypto is going to be, focusing on better ways to pull the heat off of all the servers in order to make them run very efficient, especially in warmer climates. The other part of our business is our software. So Blockseer, as I said, we purchased that company early on back in 2018 when we went public. It was a company that was focused in on data analytics around blockchain, so the Bitcoin being the main one, as well as Ethereum. We've taken that company that sort of had this regulatory legal outlook, and we focused it really on compliance, and specifically we've been looking at compliance in a way in which large institutions, banks, financial institutions, companies or organizations with strong corporate governance, ways that we can help them understand crypto, also getting more involved in it. And so you'll see in the next few slides a lot of information that we're going to give about, OFAC, compliant mining, these types of things. We've taken the data that we've collected from Blockseer, which is really data that was collected from many, many law enforcement agencies that we gave this software out for free. They help label a lot of the transactions in the Bitcoin blockchain that we use today, as well as our own dark web crawlers, our own Tor technologies, our way of scraping information, our way of communicating and getting data. and data points about transactions and wallets and exchanges and gambling sites and so on and so forth. And we pulled all that data together, and we've been using this in a way in which we think it's really going to unlock, the potential adoption of crypto at, at a much larger scale in a regulatory compliant way. And so when you take a look at, what we're trying to do with Blockseer on our software side, as I said, we collected a lot of information and analytics on Bitcoin and Ethereum when we started doing this back in 2015. But from that information we collected, that was sort of looking in the past. When you explore the blockchain, you look at things that are posted, and you're always kind of looking at the past tense and investigating. Sort of like the police, after a crime happens, you investigate and you try and put the data together. There wasn't this idea of pre-crime. Before a crime happens, let's go arrest somebody. I think that's only a Tom Cruise movie right now. But we took that data, we turned it into real-time AML, and we said, let's take these labels and let's try and understand in real time whether or not a transaction should happen between two counterparties. And so, everybody knows and has seen that, Tesla was accepting Bitcoin. They turned around and said, now they're not accepting Bitcoins for their cars. But the idea there is that if I was a person that wanted to buy a Tesla, and you don't really know anything about me, you don't know my past history, and I gave you a wallet and said, okay, I'm going to transfer you a Bitcoin to buy this Tesla car. You have a little bit of a responsibility to make sure that you're not taking illicit funds. And so Wallet Score is a piece of software that would look at the provenance of that Bitcoin and tell Tesla, hey, maybe you shouldn't be taking this because these funds are, a link to, the various events or characters or OFAC blacklisted and sanctioned wallets. And not do that transaction, much the same as banks do KYC and large transactions that happen are scrutinized and looked at. And so we have this Blockseer and Wallet Score. On top of that, we built our mine manager. Our mine manager becomes really important when I get into our pool slides, because the mine manager is a way that we can communicate and see in real time what's happening with all the miners, where they are, what they're doing. And you wouldn't think that that's that important in KYC and AML, but it actually becomes very important when we start talking about mining pools. And we have launched, as you can see, a major pool, and I have a couple slides on that we'll show you. We have a couple more pools being launched very shortly. As well, we have some new products coming out. So I have 4 products already up and running that are operating. I have 3 more, Breeze and Freeze, which are wallets for holding crypto, and there's a few special things around those wallets that make them quite unique for the market, as well as Petra, which is a way in which institutions or subscribers can pick how they want to operate within the Bitcoin ecosystem and sort of carve out an area where they feel that they're safe and kind of meeting all the regulatory issues that they may have to meet in order to operate. And so I've sort of broken our different products into 2 sides, sort of safety and security, removing risk, and regulatory and compliance. And both of them are very important. And I think, both of these areas are going to keep growing, especially when you see all of the information discussion and the events happening in the US and Canada and other jurisdictions around regulatory and compliance and, safety, custody, security of crypto. So
Sheldon, it seems like you got a few more slides left. I want to just give you a heads up because we did get a good amount of questions. So maybe try to wrap up and leave a couple minutes so we can get a couple of these great questions answered. Cool.
Yes, like I say, I normally do this over an hour, so I'll try and wrap up. So the four operating platforms, these are just a couple of screenshots. So this is what the pool looks like. It's the first OFAC pool. We licensed this technology out to Marathon. Marathon's the largest U.S. crypto company. Everybody sort of knows who they are. If you're a crypto investor, they have all of their hash rate on a pool with a technology that we've licensed to them. OFAC is obviously from the U.S. Department of Treasury, where they have blacklisted wallets that you're not allowed to do business with. So we're quite happy to be partnering up with Marathon and giving them this technology to ensure that they're doing compliant Bitcoin mining. Blockseer is, again, as I said before, the manager helps you run your operations. This is sort of a shot of intelligence. This is, how you track crypto, sort of in the past tense. Wallet Score, this is sort of what we're talking about, the risk ranking around wallets and provenance of the labels and who should you be doing business with. But just to jump into the pools, which is quite interesting, and we talked a lot about, ethical mining and the things you should do around sustainable energy. There's sort of a this dichotomy between a lot of pooling or hash rate in the East, but a lot of usage. So you see these nodes are the usage, people actually transacting in Bitcoin versus hash rate being very low. That means that your hash rate is not being managed or monetized over in North America. And so pools are responsible for this hash rate piece where it's the monetization, or where is the hash rate working to create new Bitcoins on the blockchain. Nodes are about people actually using Bitcoin and transacting in it. And there's been a real push in North America, since there's so much investment going into crypto mining in North America, to bring the hash rate to North America and move it over from other places. And so, we as a company, and I'll try and wrap this up quickly, we as a company really focused in on why there isn't enough pool hash rate, what we can do in North America to bring more hash rate here, and how can we do it in a sort of a transparent, legal way. And so the biggest issues were, issues around OFAC clean blocks, KYC and all the users, what miners are contributing, who are they, should you be doing business with them, SOC 2 compliance, independent audit. These were all issues that public companies are running into. Private companies with good governance run into this as well. And so we took on that issue with our Blockseeker pool technology. And so, as I said, Marathon was the first company that really understood what we're trying to do. We teamed up with them. We helped them get this pool up. It's doing great. We're really happy to have that partnership with them. But we also have a partnership with Argo, and we're doing the same idea, but we're looking at sustainable energy. So we've created the first clean energy pool with Argo. We signed the Crypto Climate Accord, Argo and ourselves. We press released that actually today. And, we're really excited about not only a compliant pool, but a pool that is based on sustainable mining and transparency and energy consumption, and helping companies that maybe may not be that sustainable right now, but are on a path and would like to become more sustainable, and understand how they can have RECs and how they can move to sites where they can get green energy and ways to overcome all of the issues around clean power versus dirty power. And so we're happy to be leading that with all of our technology, and our mine manager and all of our pool technology comes into leading that and being able to analyze it and report on it. And so, I'll just wrap up. This is my last slide. I move quite quickly. As I said, we're sort of the only vertically crypto company out there with both hardcore physical assets for Bitcoin mining. But, we don't stop at just a Bitcoin being mined and on our balance sheet. We keep going, and we keep that Bitcoin going over and over. And we keep transacting with it and keeping fees going through our pools and through our different software that can continually monetize and take transaction fees for our company and our shareholders. And we're really only focused in on the software side, regulatory and compliance. We're big believers that if we can bring solutions out to institutions and banks and other organizations that have huge client base, we can get mass adoption. And with mass adoption in the market, it's just going to increase the value of crypto, whether it's Bitcoin or Ethereum or other cryptos. And that's really the focus of all of our software through the Blockseeker brand, is just to help create the solutions to allow more people to work in a regulatory compliant way, in a safe way within cryptocurrencies. And I'm ready for questions if we have some time.
Awesome. Yeah, we got time for probably one. Let me pop it on the screen here real quick. How much is DMG looking to expand their mining operations?
Well, that's a great question. You can answer it in a few different ways. You can talk in megawatts. You can talk in petahash. You can talk in locations. Right now, with our 85 megawatt substation, that location is virtually full. In Christina Lake, we are actually looking at actually now three new locations. So we are looking at expanding. Our expansions will come phased. We'll expand into a location that can do 100 or 200 megawatts. And these sound like big numbers, but nowadays they're not that big of a number in the world of crypto. Mm-hmm. And normally you add on 10, 15, 20 megawatts every 3 or 4 months, so every quarter or so, as you can physically install the equipment. So, our goals of expanding would be in the hundreds of megawatts in addition to what we already have now at Christina Lake. And again, that'll take, a year and a half to add on another 100 megawatts or more. And as you've heard from other people, it's very capital intensive. So, to expand in crypto mining takes a great amount of capital, and it takes a great amount of engineering. All things that we, have access to capital, and some of our engineering is great. Many people have bought my crypto containers for many years from us. We build all sorts of equipment, and we advise other miners on how to get operations running properly and how to build out properly.
Sheldon Bennett, he's CEO and COO at DMB Blockchain. It is on the OTC. I gave the TSX venture ticker earlier. On the OTC, it's ticker DMGGF. We got the website up on our screen. It's dmgblockchain.com. Sheldon, any other ways that you'd want investors to get a hold of somebody at DMG or yourself?
Yeah, on our website, you can click in. There's a form there. You can add any question you want. There's a drop down if it's for media, if it's for investor relations, if it's for mining, if it's for software. Just pick a category and fire a question off. And there's like 6 of us that get them. We work through them all the time, trying to answer them as quickly as we can. It's a great way to interact with us. So
awesome.
we're always there and answering these questions.
I'm sure investors really appreciate that, Sheldon. All right, we're going to let you go, and you have an excellent weekend, sir.
Thank you.
All right. It is 5:16, ladies and gentlemen. We have Darren Liu coming up from Aptorum Group. It's ticker on NASDAQ, APM. And there is Darren. How's your day going, Darren?
Yeah, very well, thanks. Good to be here. Yeah.
We are so glad to have you. I see your presentation. I'll let you take it away, sir.
Sure, yeah. So thanks everyone for your time. My name is Darren Liu. I'm the President and Executive Director of Aptorum Group. Today, actually, it's a pleasure to be here today. I'll present to you a little bit about our company and some of our exciting catalysts we've got coming up in the year of 2021 as well. Just for those who joined us the first time about our company, just wanted to give you a little bit of background. So we're established almost as far back as 2010. It was previously part of a biotech investment fund. And around 2016, we spun off some of the assets of the fund. And as a result, that created a standalone biopharmaceutical company to what is called Aptorum Group today. Aptorum, we focus on what we call unmet medical needs, including orphan with oncology-focused diseases, infectious diseases, which is always a very hot area right now, metabolic diseases, as well as some of our programs in women's health. As a result of that, we have over 15 therapeutic drug candidates that are currently under active investigation and active development itself. Our business strategy is to focus on early stage research. So very often we get our hands involved at drugs that are at the discovery stage and really investing in it, our resources and development expertise to drive them forward into what we call the phase 2 proof of concept human trials. And after the phase 2, typically we keep our options open, including but not limited to continue to drive the ultimate phase 3 pivotal trials ourselves, or to actually seek partnerships with some of the external, much larger pharmaceutical companies. And we deliberately keep these options open because we wanted to maximize the return to our investors at that point in time. So we are typically focused on what we call early stage of discovery all the way until the phase 2 proof of concept stage. And part of our regulatory focus is initially the US FDA. So typically, is where most of our expertise are. And we believe that, the US FDA is the gold standard for drug development. But that's not to say we don't focus on other jurisdictions. So typically, once we've achieved some proof of concept human data, we typically will bring the drug back into other major jurisdictions, including Europe, including China, and other major countries such as Australia and Japan as well. And by background, our company is listed on the NASDAQ. It's traded under the ticker symbol APM since just over 2 years ago. It was December 2018 when we were listed. And last year, over the summer, we were also cross-listed on the Euronext Paris under the ticker APM as well. Our principal executive office is based here in London, in the UK. Myself and a number of the directors are located here. However, we do have a number of research and development facilities. One of our major development facilities is based over in Toronto, in Canada, where we have access to a GMP manufacturing lab, where we conduct most of our GLP studies, including some of our upcoming clinical trials, which are conducted out of the North America, and that using the Toronto office as our coordination hub for some of our human clinical trials as well. Overall, as a whole, we have 31 employees in the company, and we also work with another 48 or so scientific advisors and consultants with the expertise in their respective area of drug development as well. And just a quick overview of some of the key stuff here. As I said, my name is Darren Loy, and my background has been more in the banking side. So I have over 13 years in the global capital market experience. Previously, I was working for Barclays Capital, and before that, I attained my chartered accountant qualification with Ernst & Young here in London, and also my CFA destination here in the UK as well. Our CEO, Mr. Ian Huynh, who's also the major founder of the company and also major shareholder of the company, he owns over 60% of the company as a result of his early seeding and investment activities. He himself was a graduate from Princeton University, majoring in economics, after which he joined Janus Mutual Funds. It was known back then in the Denver office as a U.S. healthcare equity research analyst. And through that experience, he had over 15 years of global asset management, who is now serving as our CEO and major founder of the company as well. Our third executive director, Dr. Clark Chan, who is also our chief medical officer. He was trained in MD here in London at University College of London, subsequent to which he attained his specialist training over in Singapore with the National University Hospital. And subsequently, he spent most of his career before joining Aptorum as a operations director and deputy general manager at the Raffles Medical Group in Singapore and Hong Kong as well. Our head of research development, Dr. Thomas Lee, was previously spent most of his career with Celgene and Novartis. It was actually at Celgene where he was part of the candidate selection committee of the company, and he was primarily responsible for selecting the portfolio of preclinical stage assets at Celgene and responsible for developing them into their respective clinical stage. I believe that over his career, he worked on over 25 assets, over 8 of which have reached the market and a number of which have reached blockbuster sales as well. And sometime over the last year, we were also joined by Dr. Herman Weiss, who is the CEO of one of our subsidiary companies called Clavis Life Sciences, which is focused on microbiome research. Before that, he had over 20 years of medical experience. He was recently a chairman of the board of directors of Totus Medico, and before that, he was head of clinical development of a NASDAQ-listed company, Juniper Pharmaceuticals, before it was subsequently acquired by a much larger pharmaceutical company. At this stage, I'd like to present to you a little bit of a snapshot about some of our key assets of our portfolio. Because of the time limitation, we won't be able to talk about the entire portfolio, but I just wanted to highlight some of our key assets in the portfolio where it has achieved the latest advancement in terms of our portfolio development. So here we're presenting both two drugs and 2 non-drug assets. The first drug asset I'd like to present to you is a drug asset called ALS4. ALS4 is actually a completely first-in-class novel small molecule drug, which is developed for targeting a very deadly bacterial disease called MRSA. Some people would know that as the superbug, and is actually classified by the WHO, the World Health Authority, as the a high priority development target in terms of gram-positive bacteria. It is a bacteria that is, despite existing antibiotics, is still responsible for over 25% mortality rate for blood infection of MRSA, over 70% of recurrence rate for skin infection, and actually extremely over 50% mortality rate when it comes to pneumonia infection as well. In fact, it's actually one of the bacteria that has also significantly affected some of the COVID patients as a result of the lung infection itself. This particular drug, we've been developing it since the inception of Aptorum. We took on the asset from discovery stage all the way. Subsequently, we could perform the lead optimization and IND enabling studies. In fact, actually, in terms of the latest status, as of late March, we made the announcement to the market that it has commenced what we call the phase 1 clinical trials over in Canada, where we are conducting over 48 healthy volunteers as part of our phase 1. A single ascending dose and also multiple ascending dose trials for our drug, largely to assess safety and toxicity and some of the pharmacokinetics effect in humans itself. We're very pleased to announce that so far, in terms of the 2 cohorts of healthy volunteers that we've completed, we've seen no adverse effects whatsoever. And as a result, that actually it has been proceeding very, very smoothly in terms of phase 1 trials. We're now moving on to what we call the cohort C of our phase 1 trials, and we expect to continue to drive these phase 1 trials over these single ascending and multiple ascending dose human volunteers over the course of the summer itself, and expecting to target the completion of most of our phase 1 trials by Q3, end of Q3 this year, around September time this year, to complete most of our phase 1 trials. And hopefully within that, before the end of 2021, we'll be able to launch even more exciting phase 2 clinical trials, in particular with potential number of indications to play for, including MRSA bacteremia. As I said earlier, MRSA skin and soft tissue infection is also a major disease indication as well, which we'll be looking to commence the phase 2 trials in Q4 this year of 2021. The second drug asset I'd like to bring to your attention is our SACT1 asset. SACT1 asset, again, it's what we call a repurposed drug. It's a small molecule repurposed drug based off an existing FDA-approved drug. And this drug were actually generated from our internal drug discovery platform, where we've targeted very hard-to-treat cancer diseases called neuroblastoma. Neuroblastoma is actually a oncology disease which ravages primarily children. It's a pediatric-centric oncology diseases. It's basically a very nasty cancers that grow along the nerves. And despite existing therapies available, the mortality rate is close to 60%. So about 60% of children do not survive the 5-year survival period. This drug actually, since our announcement last year, we have now completed what we call a pre-IND meeting with the US FDA. Actually, we've been told by the US FDA that they are not going to put any sort of clinical hold on our IND application. So as a result of that, within the next few months, we'll be actively looking to prepare and submit the IND application, most likely over the July time, to submit the IND application for SACT1 targeting neuroblastoma to commence what we call the phase 1b/2a trials. As I said, this is a repurposed drug based off an existing approved drug, and therefore the phase 1 trials is no longer really required because safety is actually already assured. We're going to start what we call a phase 1b/2a trial directly in neuroblastoma patients. We're now targeting over 20 or so initial stage 4 unresponsive patients with neuroblastoma to test this drug as part of phase 1b/2a, both from a dose escalation study standpoint, and obviously some secondary outcomes, including observation of some of the early signs of efficacy in terms of tumor shrinkage, for example, on some of these neuroblastoma patients. So with all things go well, we hope to be able to start the phase 1b/2a trial subject to the IND application to the US FDA towards end of Q3, if not early Q4 this year of SACT1. I also wanted to move on to two very exciting non-drug assets. One of our initial non-drug asset is what we call rapid technology, RPIDD technology, which is a liquid biopsy-based rapid pathogen diagnostics technology. So using a blood sample and performing a genetic sequencing on your blood sample to diagnose what type of infectious disease or pathogens is within that particular patient itself. Now, our first announcement of this technology was back in September last year, where we in-licensed this technology from a Singapore government-based research institute called the A-STAR. As a result, since then, we've actively bringing this forward into what we call human clinical validation process. In fact, actually, very imminently now, we're looking to start human clinical validation studies on this technology, testing on actual infected patients' blood of this technology as well. We expect this technology to be validated over the course of the remainder of this year, and we hope to be release some very exciting data out of this technology towards the end of the year before we start what we call pre-commercialization preparation of bringing this technology forward into use in the market. The technology itself is based on liquid biopsy, as I said, using a blood sample and a small drop of blood to be able to identify what potentially the type of pathogens that is affecting the body itself. The technology is very unique. It brings around a number of advantages over existing other technology, including the ability to rapidly turn over the results. We're targeting within 24 hours of turning over the results on what we call an unbiased basis. So this technology actually approaches infectious disease on an unbiased basis with a very wide scope of application, including the identification of bacteria, DNA and RNA-based viruses, fungi, as well as parasites as well. So it's very, very unique in that sense, the fact that it's actually operating on an unbiased basis to allow a broad spectrum of potential pathogens to be identified under this technology. Now, practically, the reason why we also like this technology so much is that it potentially brings the existing cost of genetic sequencing of blood sample by more than 60%. At the moment, it's as you can understand that a lot of infectious disease patients do not get access as a first-line diagnostics to this type of genetic sequencing analysis. Very much is a cost-prohibitive exercise. Each of these tests, on average, costs around $2,500 for diagnostics for a diagnosis to happen, which is extremely cost-prohibitive. And through our technology and our kit, we believe we can bring down this cost between 60 and over the longer term 80%. Of these existing costs right now, allowing this technology to be brought forward into the what we consider to be first-line diagnostics, and slowly replacing some of these much more inaccurate and long processes such as blood culture, PCR-based technology, which is biased, and replacing these with a more robust genetic sequence-based approach towards infectious diseases. And this, which is going to be our long-term aim in bringing this technology forward. The other technology I'd like to bring to your attention is our Native as well DOI NLS2 supplement, which is a novel supplement that we've been developing for the last number of years, targeting women's health, including menopause. It's actually a supplement based off a bioactive ingredient that was identified in a edible plant. It's called the cinnamon vine, which is primarily found and consumed in Asia. And we were able to identify one of the bioactive protein, which is primarily responsible for reactivating the production of estrogen in women. Also alleviate some of the side effects such as osteoporosis, which is the loss of bone density, where during the menopause cycle, a lot of women suffer from that. And now supplement was able to demonstrate in our lab to be able to reverse the osteoporosis and even some of the menopausal symptoms as well. Imminently now, we're actually looking to commercialize and distribute this supplement. Actually, as we speak, we're actively now driving forward to our distribution process in the UK here, in Europe, as well as in parts of Asia as well. So actually, this supplement is currently being manufactured over in our Canadian facility, and hopefully within a very short time, we'll be able to be available for purchase in the market itself.
Darren, want to give you a 5-minute warning here?
Sure. Yeah, I'll be done in very shortly. And so I just wanted to also highlight on some of our recent press releases where we have actually made announcements to the market as well, including this particular press release that was released just around on May the 6th, so a couple of weeks ago, where we've entered into a strategic development agreement with a major pharmaceutical company called Exceltis. Exceltis is a Spain-based pharmaceutical company. They have over 5,000 staff across the world, which is a company focused on women's health. And we're very glad to enter into agreement with Exceltis to develop one of our what we call novel preclinical stage candidate targeting women's gynecological conditions, including endometriosis, which is a very hard to treat uterus-based lesion diseases, which affect 1 in 10 women itself. We're very excited by that because they've actually identified a strong interest in our preclinical stage candidate and looking to develop this candidate for the European Union markets initially and the Latin markets with an option to expand the US markets for this particular candidate as well. So we're very excited to be working strategically with Exceltis on one of our other early stage preclinical stage candidate for women's health. And also like to bring to your attention to our other recent news release. This was released back in April 2022. In effect, actually, we've entered into an option to license agreement with Yale University, where we're looking to expand our portfolio further into the autoimmune and oncology diseases space. So within that, we have an option to now evaluate and also in-license a number of what we call immunomodulators, and these are immunomodulators able to affect and impact the way our body modulate in terms of autoimmune diseases such as arthritis, lupus, that type of thing as well. What we like about these number of immunomodulators is the ability to target multiple autoimmune diseases that are currently what we consider to be unmet medical needs for our human itself. So we're very excited to be partnering with Yale University. As I said, we are currently evaluating these immunomodulators to identify the optimal drug candidate to bring this forward into its respective clinical stage as well. At this point in time, I've actually come to reach the end of my presentation. I'm happy to take some questions if there are any in the floor.
So the slide that you had with your drug assets and your non-drug assets, you had, you know, a nice chart showing. Yeah, I think I see it looking. Yeah, that one. Where can investors find this? This is like an excellent resource that I wish a lot more pharma biotech companies would be able to provide. Where can investors go to look at this on their own time?
Oh, sure. Yeah. So our website is fully public. As I said, we're a public company, so a lot of this information is available on our IR website. So if you go to ir.aptarmgroup.com, you'll be able to identify a corporate presentation, which basically, you know, contains this particular summary slide of some of our key stage assets as well. We constantly, you know, I think you're allowed to also add your email to our newsletter, where we can add you know, your the email addresses of the investors or prospective investors onto our news distribution as well. In addition to, you can also find us on most of the major social media platforms, including things like LinkedIn, etc., which also contains some information of our assets as well. Yeah.
Awesome. Well, it has been excellent to have you, Darren. Thanks for telling us a little bit about Aptarm today. It's ticker APM. That's Darren Lowey's president and executive director at Aptarm. Thank you, sir. Have a great weekend.
Sure. Thank you very much. Yeah.
Cool. What do you guys think? It is 5:35 p.m. Eastern time right now. We started this track at 9:30 a.m. Eastern time. The track one started a few minutes before that. A ton of awesome content, awesome people that we spoke with, had some really cool discussions. How about it for the Benzinga events team putting this on? This is crazy. I want to give a quick shout out here. Shout out for the awesome Benzinga event members that were working with me on this track here: Rebecca Garrett, Aaron Thomas, Nicole Lapointe. And then on the rest of our events team, I'm sure I'm going to forget a few people here, but working on track one and over the course of all this awesome planning, Allie, Morgan, Chelsea, Rohan, Will, Neil, Patrick, Elliot, and Kelsey. Thank you so much for our amazing Benzinga events team. Now, a little bit of exciting news to conclude the day here. We do have our winners back from our contest that we were doing. I'm going to start with the one that I'm least excited about. I'm sorry to say. The one that I'm most excited about, we're going to end. I'm one of those guys that likes to count down 10, 9, 8, 7 up to 1 versus start at the top one. So Benzinga Options Newsletter, the winner, and I'm going to highlight the winner here, but the winner will be contacted on via the Benzinga events team. So I'm just going to throw the names out here just so we can get excited on the stream. Winner of the Benzinga Options Newsletter was Sean. Sean, I think you know who you are. I think you know who you are. You'll be getting an email from somebody at Benzinga Events here. Benzinga Breakouts Newsletter winner is Zayan Lerm. Zayan Lerm. That's what the email says. Can't make it up. And drum roll. The winner of a lifetime subscription to Benzinga Pro. This is a multiple $1,000 value that this person won here. The winner is Diane Gallman. Congratulations, Diane Gallman. Congratulations to our other winners. Congratulations to everybody who participated but didn't win anything. We love you. One more thing I want to do. Maybe two. One more. Two more. I'm going to do my screen share here real quick. And I just want to give a little teaser for the rest of 2021 for Benzinga events. It used to be a few years ago, there was a couple Benzinga events a year. We got them like around the clock now, ladies and gentlemen. Here is the website. That is benzinga.com/events. We just did the small cap conference. We have the Cannabis Capital Conference coming up Thursday, June 3rd. It's also a 2-day event. It's going to run till Friday, June 4th. We have the Benzinga Boot Camp. That's a 1-day. We've been doing these boot camps on the weekends. It's a long course, but there is a ton of education. So I think it's kind of a better weekend thing. That next Benzinga Boot Camp is going to be coming up on Saturday, June 26th, day before my birthday, ladies and gentlemen. Another boot camp, July 24th, again on a Saturday. We're getting into REITs here. REIT Small Cap Conference is going to be in August. And I know that people are going to be excited about this one later this year in September, at the end of September, September 22nd. We're going to have an electric vehicles conference. Later in September, healthcare conference. Another cannabis capital conference in October. This is the one I'm kind of excited to get down to. The Benzinga Global FinTech Awards. This is the event that started it all off for Benzinga events and got us to where we are today. This is a big celebration of sources in the fintech space, highlighting innovation, giving accolades to those that deserve it in the space, and everyone gets into the room and kind of shares ideas like minds and, you know, working to push fintech as a group forward. That is going to be Thursday, November 11th. What'd you guys think? Let's hear it in the chat. We're getting some good feedback here in the chat. But Benzinga, as an organization, as a team, we love hearing feedback. So throw it in the YouTube chat if you want. But also get a hold of us on our website if you're looking to give a little feedback. We love hearing feedback. If you got some feedback for me, Brent@benzinga.com. If you want to get a hold of somebody on our content team, you can email editorial@benzinga.com, and events is events@benzinga.com. Let's end with a nice little video here that we got. If everybody loved these 2 days, we do content all day, every day, not all day on the weekends, but around the clock, Monday through Friday. And let's run the little promo. Want to thank everybody for joining today. Has been a blast. Want to wish everyone a really good weekend. We'll see you soon. Thanks, everyone.